Hej och varmt välkomna till dag 2 av Nordic Funds and Mines. Då huvuddelen av bolagen pratar engelska och det här direktsänds utomlands så kommer vi att övergå på engelska. Hello and welcome. I'm Carl Strand, so I will be the moderator for this event. This is a summit brought to you by Nordic Funds and Mines, Yukon Mining Alliance and Arctic Minerals. For more information about our sponsors, please visit their respective booth just outside this room. And with that, it's high time to introduce our first speaker. That is Eskay Gold and Silver, developing and revitalizing past-producing gold and silver mines in British Columbia. And here to tell us more about that is Galina Melger, Vice President and IR. So please enter the stage. And we give her an applause. The floor is yours.
Thank you so much. Good morning, everyone, and thank you for joining the presentation. I will be making forward-looking statements, so you are duly cautioned. And I'd like to start with a little bit about the history of our flagship asset called Eskay Creek. So this is a past-producing former underground operation that was owned and operated by Barrick until 2008. And it is an iconic and legendary asset. I say that because it has a phenomenal history. It was one of the highest, actually the highest grade the highest grade gold mine in the entire world. The ore was so rich that they didn't even use a process plant, and the average mine gold grade was 45 grams per ton. The average mine silver grade was north of 2,000 grams per ton. What started the curiosity for Skeena was that the cutoff grade was 15 grams per ton. So we always have a saying in our company that the best place to find a new mine is in the shadows and headframes of an old mine. And with a cutoff grade of 15 grams per ton, we started really trying to understand what was there. So we've been advancing Eskay Creek now for about 10 years with drilling, technical reports, and we are now in the construction phase with a project that's fully financed to production in 2027. However, we are reconceptualizing it. So formerly, it was an underground operation, and we will be mining it using open pit methods. Some of the investment highlights include very, very large-scale production. So we're targeting 450,000 ounces of gold equivalent metal per year. It's backed by a very robust grade profile of 5.5 grams per ton equivalent, which is triple the global open pit average. That type of grade results in very low operating costs at the bottom of the global cost curve. And this will be a significant cash flow generator. So at spot prices today, the after-tax annual free cash flow will be about $1.1 billion Canadian per year. There's a significant silver component, and as I mentioned, the project is fully financed. So Eskay Creek is located in the Golden Triangle in northwestern BC. This area is known for immense geological potential, so it's absolutely no coincidence that Teck and Newmont have operating platforms established in the area. The other important thing to note about the Golden Triangle is that it's situated on Tahltan territory. So that's the indigenous nation with whom we're advancing the project. And because there is so much mining activity in this one small area, the Tahltan Nation considers themselves to be a commercial, business-savvy mining nation. So we have a very collaborative relationship with them with regards to advancing the development of Eskay Creek. The other important thing to note in the political landscape is that in February, we were put on the fast track list with the provincial government in response to the tariffs that were issued by the Trump administration. So our provincial government identified 18 projects that they would fast track to help offset the negative implications of the tariffs, and Eskay Creek was at the top of the list. We've been seeing that commitment as we advance the project through the permitting phase. And at this moment, we are in the final stages of the environmental assessment application. We expect to have our EA certificate in the fourth quarter of this year, which will be the next major catalyst for our share price and for our investors. As a brownfield asset, we have a significant amount of advantages with regards to fast-tracking the development. So firstly, Barrick left behind a fully permitted tailings facility. It is saving us about $150 million off the CapEx, as well as the timeline associated with permitting a new tailings facility. And additionally, after Barrick placed it on care and maintenance, a private company came in and coincidentally installed 3 hydroelectric facilities 17 kilometers away from the mine. So these hydroelectric facilities allow us to source power for 6 cents per kilowatt hour, which is a significant advantage for an open pit mining operation. To put that into perspective, there's other mines in Canada that are located in more remote locations that could be paying up to 10 times that rate for power. And it's also clean energy, so a strong sustainability initiative. We completed a definitive feasibility study in late 2023, and the economics for the projects were absolutely phenomenal. So here you can see at spot prices today, the NPV of the project is about $6.1 billion in after-tax NPV, that's Canadian. Our IRR is 86%, and our payback period is 0.6 years, or about 200 days of running the project at full capacity to pay back the initial capital cost. On the other side of production, the financial metrics are equally astounding. At spot prices today, our EBITDA is about $1.8 billion Canadian, and our annual after-tax free cash flow is $1.1 billion. Those metrics are for the first 5 years of production, but to give you an idea in terms of how we as a company think about valuations, we take a multiple of 6 to the EBITDA, and we arrive at a market capitalization of about $10 billion. Our market cap today is $3 billion, so that's about a 3-fold increase in 2 years' time as we get into production and cash flow. And again, if you apply a multiple of 8 to the annual after-tax free cash flow, we also get back to that $10 billion market capitalization. The production profile is front-loaded, so we've sequenced the high-grade material at the start of the mine life. The grade and the ounces are elevated in years 1 through 5. We have another asset in our portfolio called Snip. It is located 40 kilometers away from Eskay Creek. It is also an ex-Barrick asset, also high-grade, 9 gram per ton material. The idea is, after we get through the permitting process, which we expect to complete this quarter, we would update the mine plan by incorporating Snip into the later years, so we smooth out that dip in the grade and the ounces in years 6 onwards. As I mentioned at the start of the presentation, we are fully financed. So last summer, we put out a financial commitment of about $1 billion Canadian with a European group, Orion Resource Partners. And again, that's against an initial capex of 765 Canadian. So we are overfunded. The market really had a positive response to this financing package. The equity component was the smallest piece, so we were very cautious of minimizing dilution. We've only got 120 million shares outstanding. And the gold stream component for $200 million US, that is funding the construction schedule in 2025. So we just completed our last draw a couple weeks ago, and we did a small raise. We closed it yesterday, actually, just as bridge financing from the gold stream to the senior secured loan. We do need to have permits in place to draw down on the senior secured loan. So we have a little bit of flexibility with the raise that we did this week. With regards to the loan, we also have some flexibility there to potentially refinance it. So the coupon on it is SOFR plus 7.75%. There's a 1% standby fee and no break fee, meaning that if we find a lower cost of capital in the marketplace, we can essentially swap it out. And we're looking at some potential options, again, as a Q1 catalyst after we get to the other side of permits. So this really just looks at what makes the assets so desirable. In the mining industry, we talk about grade is king. The reason is because it allows you to manage your business in a cyclical industry. And here you can see our positioning in the industry. We are really at the very top with some of the highest grade open pit mines globally. Life of mine, we're in the top decile. Again, that's triple the global open pit average at 5.5 grams per ton equivalent in years 1 through 5. And if you know the mining space, if you look at these list of mines, you can see a number of mines operating at 1.5 or 1.6 grams per ton that in this price environment are very profitable and doing very well. So that puts it into perspective about what 5.5 grams per ton would do to your profitability. The reserve is also substantial, 4.6 million ounces equivalents in reserves, 80% in the proven category for an ultra-high rate of confidence. The value split is 65% gold and 35% silver. But because of the scale, because of how big the production and reserves are at Eskay Creek, the 35% byproduct credit on the silver makes this one of the largest primary silver mines in the world. So in years 1 through 5, we're going to be doing 9.5 million ounces of silver, life of mine 7.7 million ounces. That's important to us because it's a very meaningful byproduct credit on our unit costs, and it also allows us to propel our re-ratings as the silvers can command higher trading multiples. And so the best way to think of it is that Eskay Creek is a world-class gold investment vehicle and a world-class silver investment vehicle. So this is probably my favorite part of the presentation because it really reinforces our valuation. We use a framework called the Lassonde curve. As a single asset developer, this is a framework that really works, and we're just in the sweet spot of the Lassonde curve as we're starting to invite re-rate capital upon the receipt of the permits. We have 2 more years to climb this curve as we get closer and closer to cash flow. And every quarter, as we continue to make progress on the project and invest more capital to advance Eskay Creek, we will continue to climb up this curve. Our PNAV at spot prices is 0.5 times, and ultimately, on a conservative level, with the world-class gold, with the world-class silver, we see a pathway to 1.3 times NAV from a Tier 1 jurisdiction. So again, it reinforces the view that that $10 billion market capitalization in 2 years' time is a very realistic valuation. So I'll end on our shareholder profile. We're about 65% institutionally held, with all of the mining dedicated funds in our industry have a position in Skeena. We also have a large generalist investor called Helicon, which is our top investor. We've got about 120 million shares outstanding if you include the financing that we just closed, and 11 banks on the Canadian side that follow Skeena. Some of the targets that you'll see are $36, for example, by CIBC. The stock is trading today at $24 Canadian. That $36 target is contingent upon a re-rate subsequent to the receipt of final permits. Thank you.
Well, thank you. Let's see, we have a question down here.
You showed figures on years 1 to 5. And then what? The life of mine and what happens after year 5?
Oh, I was just going to advance that. Okay. So I talk about the production profile in years 1 through 5 because the grade and the ounces are elevated. We have a plan in place to incorporate SNP into the production profile. It's an asset that's located 40 kilometers away. And the idea is we would truck the high-grade ore and process it at the Eskay Creek mill. Because we're in the permitting process right now, the applications to the government are based on the existing mine plan. Once we get to the other side of permitting, we can update our mine plan and incorporate SNP. We're also looking at steepening our pit walls to capture 500,000 ounces and potentially incorporating an additional former tailings facility in the area that has 6 gram per ton material. So right now, the production profile looks like 450 years 1 through 5, and then maybe 375 years 6 to 12. But when we incorporate those additional items, we can bring up the later years to 400. So it smooths out that decline. We also have, and I didn't speak to it because there was no time, the deposit is polymetallic. So there's critical minerals in the deposit, antimony, lead, and zinc. We're looking to monetize them. And, you know, very big estimate here. But when we incorporate those additional elements on an equivalent basis, that could actually take us up to over 500,000 ounces. So we've got a lot of opportunities as we move this project forward, not only to climb the Lassonde curve, but also to increase the NPV.
So it is a year 6 and 7 coming up, I take it. Galina, thank you so much. Let's give her a round of applause.
Thank you.
Thank you. And now it's a great pleasure to welcome Peter George, Executive Director of Arctic Minerals, a Nordic mineral explorer and developing company that focuses in discovering and advancing mines of copper and critical metals in Sweden, Norway, and Finland.
Thank you, Kalle.
The stage is yours.
All right. Well, firstly, welcome to Stockholm. And then congratulations to Nordic Funds and Mines. I think it's been a fantastic show so far. Very professional, and really enjoyed the location. My name's Peter George. I'm a 30-plus year mining veteran, I guess I am nowadays. One of the very few mining engineers around that was fortunate enough to start my career in Sweden. And 30 years later, I'm still here with a whole bunch of different international experience in the middle. But I guess for those of you that know me well, you know that I am an Australian. You can probably tell by the accent, but I'm also a dual citizen with Sweden as well. But I think the Aussie in me is, I can't really help myself at this time of the day. I'd like to really stir up a little bit of trouble, I think, with a couple of comments that I'd like to make. I think that this is a really unusual conference, this one, pitching exploration and mining projects to a Swedish investment community. Look, that's a bit of an out there concept, I think. Let's be fair, you guys, you've been more interested in investing millions into bloody apps for iPhones and technical things over the last 20 years than in the mining industry, much to my irritation. But look, not only that, but the Swedish investment community has really bought into the European myth that mining is bad for the environment, bad for the community, and this has resulted in over 50 years of underinvestment in the European mining industry to the point, where we actually import. For those of you who don't know, we import over 50% of our copper concentrate to feed our copper smelters within Europe. An awful lot of that's coming from places like South America, and if you don't understand what a copper concentrate is, that's actually less than 30% metal content for the most part. So in other words, we're importing 70% shit from the rest of the world. So from an environmental perspective, that doesn't make a great deal of sense, if you ask me. So on that, look, I didn't get to see too many investors' presentations yesterday, but I did get to see Rob McEwen's presentation, and congratulations, Rob, fantastic presentation, and very jealous for all your success. But I have to admit that by the end of it, I was starting to get a little bit pissed off. Wasn't sure why I was annoyed or pissed off, to be honest, at that stage, but I probably dismissed it before I went to bed, thinking that I was just a bit jealous of Rob's success and all these sorts of things. But went to bed, woke up at 2 o'clock this morning, probably from whatever, having a couple too many beers last night, and I realised why I was annoyed. And that's basically, these guys in South America, they're spending a fortune on building a biosphere for their projects over there. And I realised that why I was upset was the fact that we have the best biosphere in the world here. We call it Sweden, Finland and Norway. So think about that just for a minute. We live in a beautiful part of the world up here. But as Europeans, we've naively allowed ourselves to, our once flourishing mining industry to wither on the vine for the most part. Like I said, like investing 70% crap from outside of the EU and then having to pay those companies for them to build a biosphere in the middle of nowhere. I think that's the definition of madness, is really to keep doing the same thing and hoping that you'll get a different result. So I think it's time that Europe woke up to itself and started to invest in itself. And I believe that it begins with our primary producers, such as us in the mining industry. So now that I've probably alienated half of the fellow presenters here, but I think I have the perfect company for the investment community, the European investment community, to put your hard-earned euros, crowns, francs, or whatever euro flavour of currency that you use. Let's take a drink. So, Arctic minerals. Here we have it up here. I won't use the slides too much. But we really are a truly Nordic explorer and developer of copper, silver, gold, and other critical metals right in your backyard. Just a quick bit of history. Arctic's on the NASDAQ first North growth market. Have been since 2012. Don't bother looking into the history. Didn't do an awful lot for 10 years. I got involved in October last year. We did a reverse takeover of the company, rolled in a couple of new projects, changed out the management, changed out the board, and have had a really big year in the last 12 months. So, like I said, the new board and management, very, very experienced. Perhaps I will roll into that. The board has significant Nordic and international experience. You might not recognise a few guys in there. I've got Lars Erik Aro over there, a former managing director of LKAB. Myself, 6 years working for Boliden. Eric, 17 years working for Boliden. He was their chief geologist and had 6 major discoveries in his own right. Peter Walker, Krista Söderholm. These are the guys that discovered Kevitsa, sold it through to First Quantum, and then which is now, of course, was on-sold to Boliden, is now an operating asset for them. But lastly, I've got Robert Behetz in here as well, and he's an important man. I've known Robert for 30 years, but on 2 occasions he's taken companies' market capitalisations very similar to Arctic today, and engineered sale of the company within 4 to 5 years, one for $1 billion US and another one for $600 million US. So we have an awful lot of experience within the organisation in being able to take companies from very small market capitalisations into very large market capitalisations. A flagship project that we have within Arctic, sorry, I'll just scroll through a couple of these, is our Hennes Bay project, based in the amazing biosphere of Dalsland, down there in about an hour and a half northeast of Gothenburg. A pretty amazing project, actually. It was 14,000 metres were put into it back in the 70s, 80s by the Swedish state, SKB. And it really hasn't done anything for the last 50 years. Not too many people realise that there is a project down there. Had a historic resource of around about 20 million tonnes at 1% copper equivalent. We got hold of it back in 2023. Have gone through all the core, re-assayed, got some fantastic reconciliations, handed all the data over to our independent JORC experts over in Australia. And in March this year came out with a 55 million tonne at 1% copper equivalent resource in the heart of Dalsland there. We believe that's just a starter resource as far as we're concerned. We have another 5 prospects that sit just outside of the project, and we believe that we're going to quite quickly be able to bring those up into JORC compliance once we start drilling. What have we done? We've just completed a significant MMT geophysical survey over the area. We brought expert geophysics out from Canada. I think that they were working for District as well. Really a new geophysical technique which allows us to see down to about 1,000 metres. Initial results coming back, our ore bodies are just lighting up. So we're really excited to get the final results out of that, which is really going to help us in our forward planning for our drilling going forward. We've submitted our plans for 4,000 metres worth of drilling, which doesn't sound like an awful lot, but Hennes Bay is a sedimentary hosted stratiform copper deposit, very similar to the copper schiffer. So we believe with a very small amount of drilling we can add significant tonnage to Hennes Bay. And my aim is to get it up to the 150 to 200 million tonne mark quite quickly within the next couple of years. We just completed an underground mining study. This one here, that was done by Deswick, and they demonstrated that we can split the Dingelvik part, which is just where the starter 55 million tonne sits. Split that up into 4 declines. All 4 declines will be in ore from surface, as compared to the copper schiffer, which is down, I think they're mining around 1,200 metres today. Rim and pillar mine underground, quite a standard sort of method that's being used, but huge potential upside. Like I said, we'll be expecting the MMT survey data back in the next few weeks. Hopefully that will also give us a whole bunch of new targets where we can, again, expand our resource up to the 150, 200 million tonnes quite quickly. So we're submitting more drilling plans once we get that information through. But I guess given this is an investors conference and not a technical conference, I'm not going to bore you with too many more slides on all of that sort of stuff. But I think, as mentioned, we've restructured, we've recapitalised, and we've sharpened our focus with regards to our flagship project at Hennes Bay. We currently have 43.3 million shares on the register. I think there's another 3 million shares to be added to that from some warrants that came in. We had some warrants attached with the capital raise that we did back in October last year. We raised 12 million krona. We raised another 17.5 million krona in June. And then, like I said, the warrants came in last week for about another 10 million. So we're actually quite well funded with a bit over 20 million krona in the bank, which is quite sensational for a tough market for junior equities. And that money will be what we need to do the drilling that we want to do in the next program. So, really looking forward to another busy 12 months. I guess a little bit more detail around our shareholder base. So, our top 20, we control 70% of the company. I'm a 9.5% shareholder myself, together with Eric and Robert. So it's a very tightly held stock. I think even the top 86 shareholders controls 88% of the company. So there's really only about 6 million pieces of paper floating around that I don't know personally. But from that point of view, it's a perfect scenario for us as we start to build. What more? But what I also tell all my investors is that, look, we're on a 5-year journey here with Hennes Bay. We plan to be construction ready in about 5 to 6 years' time. Might be ambitious, but I think we have numerous milestones to achieve along the way, which we fully expect to be re-rated each time we achieve one of these. And a classic example of that was when we put out our maiden JORC resource in March of this year. We flew from 2.4 krona up to 15.5. Unfortunately, Mr. Trump came out 2 days later and hit us all with the tariffs, so the share price has just been going backwards a little bit since then. But I think it shows the potential for what is possible with Arctic and as we move through the different milestones. And I think a good example to perhaps for those that are used to investing in the Swedish market, I quite often like to compare myself, or ourselves, I should say, to Viscaria Gruvbolag. They've been extremely successful over the last 5-6 years, moving their company from a 200 million krona market capitalisation up to about 2 billion market capitalisation, going through exactly the same milestones as what we have to do over the next 5 years. Very similar grade. I think ours is probably about 10 to 12% higher. They started 5-6 years ago at about 45 million tonnes, currently sitting at about 105 million tonnes. So as I've demonstrated, as I mentioned earlier, we expect to blow through that quite quickly up to the 150 to 200 million tonnes and have anywhere up to 5 million tonne per annum style operation coming out from a room and pillar mine sometime in the near future, hopefully. All right, but I think, I'm starting to run out of time. So look, I'll start to finish up there. But look, do yourself a favour, check out Arctic Minerals, ARCT, on the Nordic NASDAQ. We've got the right team, we've got the right projects, we're in the right commodities. Copper is where it's at. Obviously we have a significant boost there with our silver. I haven't mentioned it, but we also have a significant amount of gallium, germanium, vanadium and rare earth metals within the project. I don't need it from an economic perspective, but politically everybody here knows how important those are, especially from a European perspective. But look, thank you very much, and please come by and meet us at our booth.
Thank you for that. Now it's we have the question here, so just raise your hand. I will kick off with one question. If one has followed Arctic over the year, there's been a lot of press releases, and which has surprised the market. And you mentioned the share price rise there. But did the findings in Hennes Bay surprise you? Because it surely surprised the market, and it was much better than anyone expected. And the reason why I ask is that you refer to new technology, and also if we look at the knowledge that you carry around, how much of a surprise was it?
Well, the result wasn't a surprise because we had a pretty good indication quite early on, but I think the response from the market was very interesting. But you have a look on the Stockholm market. We have less than 10 companies in the material sector. Compare that to the ASX, where I think there's like 2,500. So and the ASX would be a very small fish in a very big pond, whereas here we're just a small fish in a very small pond. So was I surprised at how the market reacted? Yes, I was. Were we ready for it? No, we weren't. But we've done a lot of work in building our investor network and continuing to move through those different milestones as we move through. So the next year is going to be even busier, I think.
And we had a question here. Yes.
Yes, thank you. Nothing like an Aussie to debunk a few myths, so thank you for that. My question was just at the end there, you mentioned the political situation with critical minerals. I was curious if you could say anything about whether you have any tailwind from European efforts, Swedish efforts, Business Sweden. Do they reach out to you and get you involved in things, or have you reached out to them? And just some flavour there would be useful.
Look, like I said, my experience in Sweden started in 1995 with Boliden for 5 years. I've never seen Sweden as bullish towards the mining industry as what it is today. I've never even seen both sides of politics, the left and the right, actually agree with each other that they love mines. So there's been a definite change in politics over here. And of course you back that up with the European Critical Metals Act. How that's going to impact us, I don't know. I mean, the purpose of it is supposedly to speed up the permitting process. I'll believe it when I see it. So we're driving our own agenda in that regard while keeping a very close eye on all of that. But I think as far as Sweden, the Nordics, we're trying to lead the way in Europe with regards to what's happening. We recognised a few years ago, I think, that we couldn't rely upon China, we couldn't rely upon Russia, and now, of course, the Americans have come in with a tariff. So we definitely have to look after ourselves, and I think the public perception is changing to that effect.
And we have the last question there.
During the old times, it was a pure exploration company, but you intend to build the mine. Is that it?
Look, I'm a mining engineer by profession. I've built mines, built companies, my entire career. So if we have to do that, we have to do that. I have no problem in taking it all the way through. And we haven't really thought that far. We've sort of given ourselves this 5-year time frame to get us into construction ready. If we have to take it into construction, more than prepared to do that. But I sort of put a bit of a question mark on that, because I don't think that we'll be allowed to get that far. I think that there's one of the big boys is going to come along and take us out before we get to that stage. But if they don't, we have a poor market for a few years, and we'll just continue moving through the milestones, and we'll start constructing in hopefully 5-6 years.
Interesting. So one should watch the space. I assume you will have a equally busy next year coming up. Thank you, Peter.
Thank you.
And it's high time to introduce our next speaker, Vanessa Bogart, Vice President, IR and Communication from Argenta Silver, a pure play silver explorer, developing silver assets in a supportive mining jurisdiction that is Argentina. The floor is yours.
Just get settled here. Good morning, everybody. Hey. My name is Vanessa. As mentioned, I am the Vice President of Investor Relations and Communications for Argenta Silver. I have over 20 years' experience in the business of mineral exploration, including managing field programs from the Canadian Arctic down to South America. Seen a lot. Ladies and gentlemen, today I'm here to share with you why Argenta Silver and why now. Please read the fine print. Our CEO, Joaquin Marias, stepped foot onto the El Quevar project, that is our flagship project, 16 years ago. He was so impressed by the size of the system and the grade that he started following it back then. 1 year ago, he had found himself working in the Fiore office with Canadian mining leader Frank Giustra. Frank had been looking for a pure silver play for over 40 years. In this chance conversation, Frank asks Joaquin if he knew of one. Joaquin, having had his finger on the pulse for so long, knew that the operating company was in financial distress. In 60 days, 6-0, they acquired the project and Argenta Silver was born. This slide is rather boring, so I'm going to be illustrating it in the future slides here, just to tell you that we have the highest grade pure silver undeveloped project in Argentina. We have the backing of mining leaders. We're in the stable jurisdiction of Salta, and we have the exploration upside. So stay tuned here. Argenta Silver is in, as I mentioned, the Fiore stable. The companies that you see here joined the last 3 years preparing for the bull market. Argenta is the only primary silver asset, and we are outperforming. This is a beautiful thing here. Please look at the indicated. You see the resource has 482 grams per ton silver. There's no lead, no zinc. It's pure silver, 45 million ounces. So if adding the two right-hand columns, it's almost 50 million ounces, and you see 90% is in the indicated category. And why is that? The past operator spent 70 to 80% of their efforts in this tiny area that is the Yaxte deposit within the broader project, so I will get into that too. Salta was voted the best Latin American jurisdiction 23-24 by the Fraser Institute. We're in the heart of the lithium triangle, and in this area where compliance gets rewarded by way of permitting, moving projects forward. And you can see Abra Silver is to the south of us in Diablillos. In my years of experience, and people know this now, thank goodness, you can have all the grade, all the tons. If you don't have community support, you do not have a project. And we're really proud to be nurturing very positive relations with the Coija community. That's our local indigenous community. We hire locally as much as we can, and we're very proud of this. Infrastructure, okay, talking about de-risking exploration projects. I can't bang this drum hard or loud enough. We have incredible infrastructure. The solar farms, let me see if I can, yeah. We have 2 solar farms bordering the project. One is the biggest in South America. Running through the project, we have a gas pipeline, a railroad, power line. We have paved roads. Internally, we have over 80 kilometers, 80 kilometers of road. We also have a pristine, made for 100 people camp. All of this was purchased for US $3.5 million. Capital share structure. We have $24 million in the bank, Canadian dollars. We have no debt, no payments. It is truly a clean asset. You look to the right of the slide, a quarter of our shares are in the hands of 2 billionaires, Frank Giustra, mining leader, and the Elstein Group is Eduardo Elstein, an Argentine agribusinessman. We also have 15% institutional. We welcomed blue chip institutions in our last financing, and a healthy 46% retail. Now let's get into a little bit of geology. So fun. All right, the red line that's dividing the slide diagonally, that is a major continental fault. If you follow that to the Chilean side in the INSAT map, that is where you find the homes of 100-year-old, plus 100-year-old Chuquicamata, El Abra, Gabi, incredible copper porphyry deposits. Following that into Argentina, and this is our camp, our claim map, right through El Quevar. The little red, let's see if I can do this, oops. The little red rectangle in the middle, that is where all the exploration efforts have been focused. This is the 3rd largest volcanic complex in Argentina. Let's imagine all those magmatic fluids coming through. Just incredible opportunity here. Here's a section of the long section of the deposit. You can see it's very densely drilled and it is open. So I will get into our drilling success, the first drill program that we put together. The red hatched line is not part of the resource. And also, before I go, it comes to surface on the left-hand side, and as we go to the right, it's getting higher or deeper, richer grades. Richer grades as we go deeper. Historic multiple drill intercepts, high grade. So the resource is, oh my goodness, I'm not very good at driving this one. The resource is the red outline there. And you can see there are little windows of past drilling. Look at this, 2 meters at 3 kilos of silver, well outside of the resource area. We have 8 meters at 800 grams per ton silver. Again, this is not silver equivalent, just silver. So these windows, we're gonna start radiating outside the resource, expanding the resource, and finding what else is out there. The company growth, we've seen 300% growth. We've just been under 1 year publicly trading. We came out at 15 cents. We're today over 90 cents. And this explosive growth, I mean, of course, we had the silver market helping to bolster us, but also prudent exploration, putting this incredibly rare opportunity together and getting it out to the market. And we're very prudent with our dollars. That's what this slide is illustrating. 5.5 million from January to September of this year. We're just getting started. All right, so the exploration upside. What you see here from left to right is 20 kilometers. The 2 bowls that you see are a gift from nature. That is erosion that's happened in the volcanoes. The resource is in a tiny area right there. So you can imagine the magnitude of this. And again, this has barely been touched by exploration. So this is ripe for us to find out what's happening in these volcanoes. So what have we done? Where are we going? The first ever drill campaign was completed just a few weeks ago. We have half the assays still in the lab that we're waiting on. That was 4,000 meters with 1 drill rig. As I mentioned, we have 24 million Canadian dollars in the bank. So that strategy is the 40-60 dual approach, 40% to expand the resource and 60% for new discoveries. And I'll get into that. Mind the time. The red dots in this slide indicate the drill holes that we've completed, the collars. And again, we have the ones with the labels are publicly disclosed, so please go to our news release section to see the details on those. And again, we're waiting on the rest. The El Quevar north and south bowls, if you will, those volcanoes are here and there. All right, moving on. I can't let you go without highlighting our drill success. From the left, we did a 50-meter step out and got drill success. The objective of our first ever drill program was to find continuity, see fresh core, and find drilling gap. We found drilling gaps when we put the resource into 3D and started tilting it. So we succeeded in all aspects, and we intersected 40 meters at over 1 kilo of silver, and that was in this 60-meter drilling gap that we identified when we tilted that resource. So there was a dearth of drilling there. And not only that, and within that, we intersected 18 kilos over a meter. Incredible grades, just outstanding. And not only that, we stepped out 70 meters, that's well outside the resource envelope, and we hit over 40 meters at over 0.5 kilo silver. So this is why the system is telling us it's continuing on both sides. So that's hence the 40% of our next drill program. Not only did we have success with the drill bit, look at this amazing native silver. The system is saturated with silver. So these are hand samples, grab samples that we got from Manicopan. That is the resource area there. It's about 1 kilometer and just incredible grades. So again, that is going to be driving our next exploration. We can drill all year round. And we are going to start our next program in probably a few weeks' time. We're going to do 12 to 15,000 meters. I think I glazed over that, so I'll just go back to this one. So 12 to 15,000 meter program coming up. We're getting into the Argentine spring, summer, of course. 2 to 3 rigs were cashed up. So stay tuned. And I just want to end on that Argentina is the 10th largest silver producer globally. And you can see El Quevar ranks on the third in the podium there, third highest grade undeveloped silver project in Argentina. So with that, please follow us on our social media. Feel free to ask me any questions. We have the grade, we have the cash, we have the backing, and the jurisdiction. Thank you very much. 9 minutes.
Well, thank you for that. And it's time for questions, and we have someone who's raising their hand there. So maybe I can help you with that. Thank you.
On one of your slides, it said 96% unexplored. So what is the strategy? Are you going to drill all of the land, or will you start a mine earlier to get cash flow and then in parallel explore the whole piece of land?
Yeah, that's a great question.
Yeah.
Thank you. Yes, thank you. So the question is, what is the strategy? Well, we know that we have the system open on either side, right? The resource is open. So that is that's the low-hanging fruit, if you will. And we're going to be hitting these, we're going to be hitting those blue squares that you see with geophysics. It's all about methodical approach, right? So exploration takes time, it takes data, and we are not just going to play pincushion with the drill rig, if you will. So the 12 to 15,000 meters, those are going to be, it's, if you will, starting the resource area and then radiating around. Would we do a little bit of production? At 50 million ounces, it's still pretty early. Our goal is to grow that resource to 100 million ounces, and we're not thinking small, we're thinking really big. So how do we scale that up? We're looking for other Latin American silver, maybe closer to production projects as we speak. And we're going to, again, like 96% of the project has been unexplored, these massive volcanic complex. So there's a lot of work to be done, and we're ready for it, we're cashed up for it. Does that answer your question? No? Specifically, did you want to know beyond what we're going to drill?
We have to use the mic here. Thank you.
When we open, are we opening up a mine ourselves?
Yeah.
Or would we sell it? Would that be a question?
Yeah.
Okay, great question too. It's early days. We've only started exploring this this year, in the last 6 months. And would we go into production? We're explorers. That's a question for management. We've had a lot of attention, you can imagine, with the grades that we have and the potential here. But I think it would be very prudent to keep exploring, keep doing what we're doing, and not preemptively be selling or going into production. That's Vanessa talking, and that would be a question for management. But let's see what the market does, the silver market. Let's see what opportunities we unveil. So I appreciate your patience with that.
I have a question here because you mentioned the shareholder structure and a fair amount of retail holders. And as Argentina is a big silver producer, my question would be then, how many of the retailers would be Argentinian, or are they Canadian, or, well, let's say non-Argentinians?
Oh, that's a good question. I haven't had that one yet. Well, 46% retail. We've been trading just under a year. From my knowledge, we have a lot of Canadian, US, and European investors. Probably some Argentine, but you need to have an account, like a Canadian account usually, to participate in financings. So, of course, Edward Elstein, having his roughly 12%, is the higher profile. Other Argentine shareholders, that would be little minutia detail. That
it's a great silver country, so you would have expected perhaps someone saving in that currency. Do we have any more questions from here? Otherwise, I'll just trying to get my head around. You're stating that you have, you're quite happy with the infrastructure, and as it is in this stage. But if we go on further here and you try to develop, if we look at the map, it's quite a long way to any harbor in Argentina, but perhaps a little bit closer to Chile. So how in the future, do you need to do anything when it comes to infrastructure as production is concerned?
Sure. Oh, screen's off. Oh, great. So I showed you that slide with the infrastructure.
Yeah.
That is in, thank you. Okay, let me go back to that so I can. Okay, so we have government built a gas pipeline. There's a railroad. There's paved road. It's 3 hours from Salta City in no time because they're continuing to extend that pavement. And what we would do is produce a concentrate. That's the idea. It's harder to rob a truck full of dust than it is doré. So again, infrastructure, your investor dollars are not going into infrastructure anytime soon. It's almost turnkey. I mean, there's no equipment mills on there right now, but you saw the camp, you see the infrastructure. That's incredible for an exploration project.
And it will be sufficient for a production project, I take it as well then.
That's early days to be saying, yeah, it's sufficient, but we're off to a really great start, solid foundation here. Yeah.
And a final question here, because you mentioned that there is a support from the authorities, and I have to expose my ignorance here, but is there such a thing that you need state support or let's say governmental support, and then you have the local support? So you need to work at least on 2 levels here, or?
Absolutely. Again, Salta is an incredibly pro-mining jurisdiction, being in the heart of the lithium triangle. We have the local support. Our CEO, again, Joaquin, he's Argentine. He's very dialed in, very hands-on. Every time he goes down, he's based in Vancouver. I am as well. Every time he goes down, he first visits either the community or the local government. So the provincial government governs mining exploration. It's not federal. So again, Salta, fantastic jurisdiction. I've worked in Mexico, Colombia as well, and I'm really happy with what I see so far. And the local communities, again, we hire from there. The Koja are really supportive of. Joaquin asked one of the tribal leaders to do a ceremony, and she cried and hugged him and said no one had asked or allowed them to do anything like that on the project for over 15 years or something. So
you got the 3 ducks in a row. You have the local population, the local authorities, and the state.
Yeah.
And that's pretty good. Okay, I think we should thank Vanessa with an applause. And thank you. And you bring the mic there. And now it's high time to introduce our next speaker. So it's GoGold Resources, a Canadian-based company focused on the exploration, development, and production of silver and gold, primarily in Mexico. And here to tell us more about that is Bradley Langwin. So
thank you.
The floor is yours.
Thanks. Well, good morning, and thank you for your interest in GoGold this morning. Just to talk a little bit about the company, and well, you know what, I'm first going to start with what we always breeze over, which is forward-looking statements. You know, in the mining industry, there's a lot of risks. Obviously, I think the people in this room would know that. But how do you mitigate those risks? I think what you do is you deal with people who have done it before, people who are able to raise capital, people who have built mines, and can execute. So myself and my team, we've been doing this for a long time, 32 years, 29 of those years in Mexico. These are the 4 companies that I led, along with a great technical team and financial team. Gammon Gold was the very first one, started literally in the garage in 1993, went down to Mexico. We acquired the Ocampo project. We built 2 mines there, 250,000 ounces a year of production from an underground mine, 1,500 ton a day and about 11,000 ton a day heap leach. And the company when I left was at 2.2 billion market cap and traded in New York and traded in Toronto. NexGold follows the model that's typical for us in Mexico, where we deal a lot of private families. We acquired the El Cubo asset, which was really, at the end, what it appeared to be. We went in and we doubled the production. We renewed the fleet. NexGold was a shell. The Bank of Montreal did a $45 million financing right out of the gate to finance that company. And with the doubling of production, we sold it 3 years later for $375 million. Nayarit Gold was a small one. We made a small discovery. In 2010, we sold it for $80 million to Capital Gold out in New York. And then we have what we've been doing for the last 14 years, which is GoGold. Now, GoGold currently is at about a $725 million US market cap. We trade on the Canadian exchange, so 1 billion Canadian. All the other numbers I'll talk about in this presentation are US dollars, except for our share price. So capital structure, 378 million shares. We have 139 million US cash in the bank as of the end of last quarter. We have an operating mine and we have a development project. Our operating mine right now is generating over $3 million US of free cash flow a month. So that's enough to pay for all our exploration, engineering, property payments, G&A, and to add some money to the bank account. So I believe at the end of the quarter, we're around 141 million US cash in the bank. So we're adding money to the bank account as well. Okay. Well, that's better. So you can see there the cash balance at 139 million. Also, we're about 50% institutionally held, and we'd be insiders hold a lot of the company as well, about 20%. Myself, I'd be about a 6% of the company. And as far as reporting shareholders, I'd be the largest, just behind Van Eck. So what have we been doing in GoGold over the last 14 years? Typically what we do in Mexico through our network, we acquired an asset called Santa Gratuitas. And with that asset, we acquired it for $9 million. We spent $11 million on it, brought it through a pre-feasibility study, and then sold it to Agnico for $95 million US. Parral is our operating asset. There, we developed some technology around treating old mine waste. And that operation is producing about 2 million ounces a year now. It has about 5 years of production left in reserves and generates for us over $3 million US a month of free cash flow. But the real driver of the company is the Los Ricos project. And at Los Ricos, I'll just bring it up here. Los Ricos is in the state of Jalisco. It's about a 2-hour drive from the third largest city in Mexico, Guadalajara. The infrastructure is really, really good. You're talking about a drive-in, drive-out camp. We won't have to, or not camp, I'm sorry, site. We will not have to have a camp. We have actually started on the execution phase. We have a full definitive feasibility study. We've done front-end engineering design, and we're now doing our detailed engineering, which is part of the execution phase. We're about 20% complete. And of course, the detailed engineering will continue through a lot of the execution of the project. One of the other things we've recently done is we've committed to our power contract. We will be building a 36-kilometer power line from a local hydro dam. We've secured 15 megawatts of power. So we put $2 million down on that contract. And the total contract would be about $7.5 million. The great thing is there we're building on existing right-of-ways, so we don't have to go and negotiate right-of-ways for the line. So backing up a little bit, this project we acquired in March of 2019 from 3 private individuals. And as we typically do through our network in Mexico, we acquired it for $7.5 million. We had 26 concessions. One of the jobs ahead of us then was to consolidate some more concessions, which we did. We're up to about 46 concessions. And then in Los Ricos South and Los Ricos North, and for scale, that line would be about 35 kilometers, that black line. Everything in the red are our claims. So in Los Ricos South and North, we did 250,000 meters of drilling. We took it from 0 ounces to about 280 million ounces of silver equivalent. And we completed 3 economic studies. In Los Ricos South, we completed first a PEA, or a preliminary economic assessment, or the lowest level study, but we took that to a full definitive feasibility study. It is now shovel ready to build, awaiting a permit. And then we have Los Ricos North as well, where in Los Ricos North we completed a PEA, and in Los Ricos North there's 160 million ounces. And our objective here, once we have the permit, which we do believe we should have before the end of the year and be ready in January to break ground and start building this. It's a $227 million CapEx. While we're building it, which will take 24 months to build and another 6 months to ramp up to full commercial production, we want to be moving to the north and completing infill drilling, completing engineering, and get to a final feasibility study in the north, and to have a permit, to apply for permit and get a permit. Because at a high level, the objective of the company going forward is to increase from where we are today, which is 2 million ounces of production, silver equivalent, in our Parral operation, which has been continually producing now for 11 years, to build Los Ricos South, which I mentioned will take 24 months. That'll add about another 7.2 million ounces of production, so bring us over 9 million ounces of production in the company. And with Los Ricos North coming online after that, and our hope would be that with the completion of the build in the south, we'd be in a position to take the build team and move up to the north. We'd have a permit and all the engineering done. And that's projected to add about 8.8 million ounces of production. So over the next 5 years, the company should be moving from 2 million ounces of production all the way to 15 to 17 million ounces. And it's a high margin project. The all-in sustaining cost is projected to be at $12 an ounce silver equivalent. So with the production rates, it will make us a very, very significant mid-tier in the silver space. And you ask maybe how much of it is silver, how much of it is gold. With the current prices, by revenue, you'd have about 55% of the production being silver, and which really makes us a true silver producer, albeit with a GoGold name. But maybe not the best branding, but we've kind of changed ourselves to GoGold Silver and Gold. And the company has raised a lot of money, and especially a lot of institutional money over the years. So we're well known as really primarily a silver producer. But to talk a little bit about the highlights of Los Ricos South, which is going to be the first project built. It's a 2,000 ton a day underground mine. And it's bulk mining. You're talking sub-level long hole mining, so very productive mining, no problem reaching 2,000 tons a day. It'll be a mill where we produce a doré bar, not a concentrate. And the difference being, if you're producing a doré bar, you're dealing with a bar that you can sell to the final refiner and get paid 99.5% of the spot price. If you're producing like from a typical flotation mill in a concentrate, you could be getting paid anywhere from 60% to 80% of the spot price for that product that still has to be refined quite a bit with the smelter. $227 million capex to build. We have about 12 years underground mining here, a total mine life of 15 years. And the first 5 years, about 7.3 million ounces of production, and the average for the mine life, about 6.5 million. The study was published last February. So at that time, the commodity prices used were $26.80 for silver and $23.30 for gold. Now, closer to current prices at $41 silver and $3,600 gold, the NPV moves up from about 355 to 860 million US. So really, if you look at Los Ricos South, and we also have to consider the fact that we also have Los Ricos North, where we have that PEA. And the PEA, just a few of the highlights from that PEA would be that it's 413 million at those lower commodity prices. It's 8.8 million ounces of production a year, about 280 million capex. This study's a little older, it's about 2 years old, so we'd expect some inflation. But if we did a sensitivity analysis on it at 41 silver and about 3,600 gold, and we took some of the NPV off for additional inflation, being that the study is 2 years old, we'd be looking at about close to 1.2 billion. So the whole district has over $2 billion of NPV at $41 silver and $3,600 gold. So, you know, valuation, and everybody looks at the companies, all the companies out there, and say, well, the values have moved up a lot since the first of the year. Now, we would make the case that with GoGold, at the first of the year, we were trading at about a 0.35 times, excuse me, 0.35 times the NAV of the company, which the NAV is the Los Ricos district at about $2 billion now at those prices. Our operating mine, which would have about a $100 million NPV, and also we have about $141 million of cash in the bank. But in January, we're trading out about a 0.35. As the prices have moved up, our share price has moved up, but so have the NPVs, obviously. And if you looked at it today, most of the analysts would agree that we're trading at about a 0.35. If we were in Canada or if we were in the US, we'd be trading with about a 0.6 in this market or a 0.7. Now, there's been some delays in permits in Mexico, primarily with the last president, Lopez Obrador. His administration just really delayed the permits, and they had a big backlog of permits. We've had a new president in Mexico for a year now, Claudia Sheinbaum. And there was a very important meeting we had last November with the Secretary of Economy's office and the Director of Mines, and they laid out her agenda for the coming year. And they said that she was focused on the mining industry. She understood that it's important to their economy, and that they would focus first on clearing the backlog of permits that had been delayed for ongoing operations, which also was one of our permits for Parral. We needed that permit for ongoing operations. You have to renew every 10 years. So we received that, and so far this year, they issued 80 of those permits in the backlog. But then they were going to move to new permits for new operations, and that's where we are right now. And she has publicly stated under the last administration, there was some discussion about no open pits, and they were going to change the law. And in reality, they have, she said publicly, no, there would be open pits, and that they would issue permits because it's strategically important to the economy. So we're right on the cusp of having new permits issued in Mexico. We believe there's a short list, which GoGold is on, and those new permits should be coming imminently. We believe we'll have ours by the end of the year and be able to break ground in the spring, which is going to be an enormous catalyst for the company. We think that should move us potentially from a 0.35 to a 6 or 7 NPV. So a potential doubling of the stock with that permit. So it's still an enormous catalyst for us, and we look forward to that before the end of the year. As I mentioned, we're still a producer. We've developed new technology, cleaning up old tailings in Mexico, and we do what's an agglomerated heap leach with SART technology, works very well, generates over $3 million a month for the company, so that it means we're really funding the company's G&A, exploration, and engineering. But I don't know if we have any time for questions, but
Yes, absolutely.
yeah.
And we'll just see, we have the mic here, so just raise your hand. And but I will start by exposing my ignorance here, because you are producing. Tell us, how does it work when you sell? Do you have an offtake agreement, or do you sell at spot, or what's the clientele like?
Yeah, on this project, we have about a 1.5% net smelter royalty. And on our new project that we're going to build, because we have such a strong balance sheet and we do have production with over 140 million US in the bank, we need 227 to build. But really, we have people falling all over us to give us a debt financing package to build the mine. And our objective here is to build it without having without having any hooks into the project, really no royalties. So we're in a position we can do that. Yep.
And do we have any? You have an impressive shareholder list here, and so my question is, who found whom here? Did they knock on the door, or did you knock on their doors?
You know, it's been 32 years and built 4 mines. This will be mine number 5, and Los Ricos North, mine number 6. So we have these institutional shareholders, mostly gold funds that have done business with us so much in the past. And we endeavor to be very transparent with them, to execute, to deliver on what we say. Mining's not an easy business. Sometimes there's a few bumps in the road. But they understand that. They're sophisticated investors, and they keep on coming back and backing us in all our deals.
And then I'll carry on here by asking you. You also make some acquisitions here. So who do you compete with? I mean, the sector is getting hotter and hotter, as we can see on this conference here. But who do you meet in the door when you bid on a project?
Well, we have.
Do you meet anyone on the door?
Yeah, we've competed for projects like the Santa Gratuitas on that project. When we bought that, the original bid we made was $3 million for this little company in Vancouver, and once we jumped into the bid, others came and they bid it up to $9 million.
Okay.
But typically, I'd say one thing, that what we've been very successful at is seeing projects very early that we believe can be mines. We're not always right, and sometimes we can never guarantee a project will work, but we've always guaranteed the company will work. So we've done that. We've been successful at that. That's why we have such a good retail following and such good institutional following. But I would say the biggest part of value is created from discovery to building, and we're very good. We have a strong team, technical team. We're very good at doing that.
Yeah, so if one look at the pedigree with the number of years you have in the business and the rest, it's really a bet on that, I would say.
Sorry, say again?
It's really a bet on the competence here.
I think so. You bet on our ability to pick the right projects. You bet on our ability, of our technical team, to maneuver and find the ways to make the projects work most economically. And you also know that we'll be able to get the capital.
Okay.
Because, I mean, you obviously spend a lot of capital in this business before you ever generate a dollar. So you have to be able to have the backing of those investors.
Well, Brad, it's been educational and very interesting. Thank you so much.
Thank you.
And now it's a great pleasure to welcome Probe Gold, the Canadian company that acquires, explores, and develops gold properties, most notably in Quebec. So, David Palmer, please. Nice to see you again.
Thank you.
The floor is yours.
Perfect, thanks. Hey, good morning, everyone. Yeah, it's great to be in Stockholm. This might be my new favorite conference. We're first-timers, and I'm going to be talking about Probe Gold. I'm the CEO, David Palmer, and yeah, we're a gold project in Canada, Val-d'Or specifically. Well, we always have to look at forward-looking statements. This is probably where I disclose I'm a geologist, so I'm prone to enthusiasm. So yeah, let's get in. So yeah, the project we have is Novador. It's in Val-d'Or, very kind of strategically located in Quebec. Very mining friendly. It's definitely in Canada one of the easier areas to permit. And the project has done exceedingly well. Like, we picked it up at about 700,000 ounces. Last year we crossed the 10 million ounce threshold, so it's doing exceptionally well. What I love about it is we still have lots of upside on it. So, you know, I look a lot of times at projects, and to cross that 10 million ounce threshold is rare. Usually you have to fight to get to it. This project got to it fairly easily, and we see a lot more potential in it. So what makes another interesting kind of point on this project, we're very strategically located. If anybody knows the Val-d'Or area, and is this working? Oh. So, so Val-d'Or itself, world-class mining camp right there in the middle of the white circle. Our project is all of the blue squares. We've basically assembled a district-scale land package about 20 minutes away from downtown. But, you know, if for anyone unfamiliar with Val-d'Or, it is the home of a lot of large deposits. Malartic, Agnico Eagle's soon-to-be million-ounce producer is located here, about 20 minutes on the other side of Val-d'Or. We've got Agnico's Goldex, Wesdome's Kena, and of course Sigma-Lamaque. We picked up all of this project very early, probably I guess 2016, when gold was much lower. There's a lot less interest, and we were able to consolidate what at that time was the largest project in Val-d'Or. And what we saw was tremendous exploration potential. To a certain degree, it was underappreciated, and we saw the potential, we acquired it, and now we're sitting on one of the largest land packages, which has proven itself when we look at the resources we've built. And it is probably one of Canada's fastest growing gold resources. From 2016, we started at 700,000 ounces. Last year, we crossed the 10 million ounce threshold. And I think what I'm really excited about this project, it's large, you know, it's a development project now. We've been moving it into permitting and development, PFS by the end of the year. But I think for a geologist, what I find really exciting is the upside. And so in this district scale, so when we look at it, so our main resource, we got about 8 million ounces in the development project, and that's through here. There's 3 deposits, Corvin, Pasco, and Monique. And those, the 8 million ounces. But our satellite projects, we've got about 2 million ounces surrounding it, all truckable to a central mill. That's the mine planning is individual deposits feeding to a central mill. And what I love about, I guess we've spent a lot of time growing the resources, getting into development. Now we're starting to focus on the regional exploration. And the satellite projects, tend towards higher grades. And so that's a kind of another interesting part of this story is once you hit 10 million ounces, the incremental ounces after that aren't, it's not as important. You've already proven that you're big. It's a big development project. It'll support a large scale mining operation. What I'm focused on now are the kind of more valuable ounces, higher grades, and the satellite projects tend to higher grades. When we look at our 8 million ounces in Novador, we're at about 1.3 grams. Large open pits, but still good grades. When we look at the satellites, I'm looking kind of 1.5 to 2 and up to 4 to 6 grams. So I think we'll be focusing on a lot of exploration to build those ounces. So in the development plan, so as I said, we're in development now. The project has definitely reached a scale where it's a standalone asset. When we look at the mine plan itself, we've got the central mill right on the railway. This railway services all of Val-d'Or, all of the major deposits. We've got 4 open pits in gold that surround the central mill and will feed to that. The largest being Monique here at 4 million ounces, which is is already an existing road system where we'll plan to build a mill. Now, if we look kind of at the economics, so we've gone through the PEA process already. We're into PFS now. The PEA did very well. Now, we did it at $1,750 gold. This was back in early 2024. Very good economics, almost $1 billion, well, 900 million NPV. When we start to look at the higher prices, if we look at consensus, and this is the thing, gold is climbing so quickly. Our spot on this is 3,500. Obviously, we've crossed 4,000, but you can see that the economics on this project in the current gold climate is just improving. Now, that's, I guess, the other thing that we're looking at. For us, grade is incredibly important. We will probably, in the PFS, hold our project at, in that 1750 range of gold. We'll hold our cutoff so that we don't kind of lower that. But the financial model will obviously look at new consensus pricing. So we'll see in the PFS a more robust project. And that's really, when we look at kind of how do we create value, what's the investment thesis here? Definitely, it was interesting. Back in the last cycle, 2011, 2012, it was about ounces. How many ounces can you get? Now it's about when do those ounces come out of the ground? And that's what we're focused on. Our priority is pushing that development timeline. So at this point, we're looking, for a PFS to come out by the end of the year. I'll probably release, January 2026. Just to take advantage of the beginning of the year. But our work is ongoing. Mining engineering is done. So we're looking at the PFS. For us, obviously, the major milestones are going to be the feasibility study, which then will finish at the end of 2026. Q1 2027, we'll do our final applications for environmental permitting. We'll look, I think we're already two and a half years into environmental permitting. Baselines end this year. But Q1 2027, we'll submit to the provincial and federal governments for permits. There's usually a 6 to 8 month period of before the public hearings, and then we expect permits in 2028. That will hopefully give us a construction start, and then production in 2029, probably 2030. So and at this point, we're on track on our timeline, and it's about really moving this forward and kind of extracting that value as we get closer to production. Capital structure. So we've had been fairly successful keeping a tight share structure. 200 million shares. Market capitalization right now at about 600 million Canadian. Cash on hand is probably an important thing. 47 million at the quarter, probably about 40 million in cash now. That will take us all the way through to permit applications, so Q1 2027. So we'll fully funded through PFS, feasibility, and then the start of the permit applications. So we're in a good spot there. We've got 6 analysts covering us from some of the major Canadian banks. But most importantly, and for all of our companies, is our shareholders. And we've got a really strong group of shareholders. Because we're a Quebec project, we have all of the Quebec funds, SIDEX, the Caisse de dépôt, Investissement Québec, as strong kind of supporters of the project. Good validation, particularly Investissement Québec, which is an arm of the government, which is supporting a project in Quebec. We also have a lot of good, institutional, probably 50% of our shareholders are institutional. Many of them have continued through. Probe Gold is a second iteration of a company called Probe Mines. We were successful in Ontario making another discovery, and we sold that project in 2015 to Goldcorp. And a lot of our shareholders have just continued to support us in the new venture. So very strong stable of shareholders. I would say management, board and management are probably 6 to 7% ownership. So we've got definitely skin in the game. But, and another very important thing is, equal to shareholders is the team. And this is really, I think, what people invest in. I mean, projects are exciting, but your management and board are what make your company viable and what keep it strong. And I guess that's where I see the real potential. And over the years, I've been with the company now for 22 years, we've been able to build a really, really strong team. And to start with the board, our chairman, Jamie Sokalski, former CEO of Barrick, so very well connected in the mining space. Renaud Adams probably joined us maybe 2 to 3 years ago. We've known Renaud for quite a while. And he's the current CEO of IAMGOLD, mining engineer, builds and fixes mines. So a very, very critical person to have as we transition into a development project. And I guess this is really, when I look at the team we've assembled, everybody has a skill set that contributes to what we need to do. And Shannon McRae is next, geologist. She was the manager of Barrick's world exploration. So helps out a lot in terms of strategy on where the projects are going. Jamie Horvat, some of you might know, he was a fund manager at M&G in London. Obviously capital markets experience. On our timeline, we're definitely going to have to look at project financing, and so to have capital markets experience is going to be really important to navigate those challenges. Sasha Alexandra Bukacheva, analyst. So especially during our the economic studies, having Sasha there is also another critical piece of our puzzle. And of course, Dennis Peterson, one of the founders who started 22 years ago with me. And corporate securities lawyer. So it's we try to build teams that are going to help this company advance as we evolve. Management team also very important. We've been together for a long, long time. And I'm a geologist, so I kind of, my passion is finding it. I've got Yves Dessereau, who is my COO, mining engineer. His passion is extracting it. And so, we work well together on kind of advancing these projects. For this one, we're into development, so Yves is starting to take a much more important role. Patrick, CFO, basically, we need to transition into a producer. So Patrick is there, and of course, Seema's with me today. And Seema's become critical. I'm not very much of a marketer, but the story is growing, it's getting better and better, and we need to tell it. So Seema has been kind of, pivotal in getting, this story out and starting to increase, I think, the profile of the company. So once again, as with the board, our management team is really important because we cover all the aspects of an evolving company. And I think that's me. Yeah. So thanks very much. Hopefully, probably questions are more important, but hopefully that gave you just a quick snapshot of Probe.
Well, thank you for that, David. So we've opened up the floor for questions, and I will start here while we get the mix in a row here. But you had a very interesting slide here, Canada's fastest growing gold resources, and it went from 23 to 24 up with 100%. Yes. So would we be extrapolating that, or will the focus now being developing?
So it's tough, and this is something when we crossed 10 million, we were extremely it was a threshold that very few projects get to, and so my next thought was, okay, what's my next goal? And to me, I see this as a 20 million ounce project. However, the incremental value of those ounces isn't really that high. People say it's a big project. You get to 11, 12, 13, who cares? You're already over 10. So now the focus is more on quality ounces. It's the higher grade ounces that will feed the mine. And so I think I'm really kind of focused still on expansion, but maybe not so much, quantity as quality. Yeah.
And while we're waiting here, in April you announced the successful closing of the bought private deal that you
That's right,
mentioned.
yeah.
In your experience, was it a hard deal or was it easy to?
Oh, it's so funny. That was done in April.
Yeah.
So the change in the markets from that period to now. So at that time, it was, not every company could raise money. We were lucky. It turns out it was our largest financing that we've ever, in the 22 years of Probe, it was our largest financing. It wasn't a struggle, but it wasn't easy, and other companies were still struggling to raise money. Now it's, you see $100 million deals coming kind of every week. So it's definitely, the market is changing.
Yeah. And with that, and if we look at your map with the different properties, would you consider selling one property to just focus on another?
Oh,
parts for sale?
Yeah. I probably everybody in this conference, everything is for sale at a price.
Okay.
But at this point, my problem, this is the problem with geologists, is we love our projects. Like, you don't want to give up a project. You want to find every ounce. You want to find every discovery. And so at this point, that's what I'm focused on. Yeah.
And also, if you can increase the ounces by 100%, maybe the
Exactly.
price is right. I wouldn't know, but I can get that feeling. Right, do we have any more? In that case, David? Yeah?
I think there's one.
Hey, thanks for the good talk. How much did you drill to reach those resource estimates?
Yeah, that's a really good question. So it takes a lot to get to 10 million. We've probably done over 600,000 meters of drilling. I would say in this project, I mean, if you were to look at it, just kind of from the background perspective, we've probably invested about 150 million to get to this point. So it's a long, kind of hard, expensive process, but this project, and actually is probably, our discovery costs right now are at about $10 an ounce. So we're doing really well in terms of building those ounces. Yeah.
Right, so with that, I will thank you, David.
Hey, thanks very much. Yeah.
And we'll give him a round of applause. Thank you. And now it's high time to introduce our next speaker, Michael Hudson, CEO of Southern Cross Gold Consolidated. And it's a Canadian mineral exploration company focused on its flagship, Eskay Creek, located near Melbourne, Australia. So with that, Michael, the floor is yours.
Thank you very much, Carlo. Thank you, everyone. Thanks to Nordic Funds and Mines for having us here all the way from Australia. It's only a short step and a jump to come up to Sweden. I've spent a lot of time here, and it's lovely to be back. Eskay Creek is one of the few rare, very high-grade, 10-gram multi-million ounce discoveries in the space. And it's one of the few discoveries in the space that's only been made over the last few years. So we're certainly racing, and I'm glad to be able to present this to you for the first time here. We have many metrics to demonstrate that it is one of the better discoveries in the space. This is perhaps the key one here from a drill hole perspective. If you take 100 gram meters, so multiply the gold by the length down the hole, and anything greater than 100 gram meters is considered a very good hole in the business. So you can do this when you look at projects, just see how many of these they've got and how many they've got in the number of drill meters. So we've got 70 with 98 kilometers of drilling. There's nothing better in the space that I can see, certainly, in terms of that frequency hit. So we've got a lot of gold, and it's coming better all the time as we understand this and get deeper. We've got one of the biggest drill programs in the space ongoing. We're a 200-kilometre drill program. We heard from Dave that building ounces takes lots of drilling. We're fully funded to do that. We've got $150 million Australian in the bank today. We've got 9 rigs today, going to 10 shortly. We're permitting a decline, and when that happens, we'll have 22 rigs operating by mid-next year. We have all the mineral rights, of course, but what we have uniquely is all the freehold land above the project and going to the south of the project. So that gives us a lot of flexibility in developing this project and building it on our land away from people and neighbours. The other key factor I think that you should focus on is that Victoria has been a home to some of the greatest gold mines on earth that produced a third of the gold in the gold rush days in the 1800s. But it's only the last 10 years that it's really been the rebirth. We're producing more gold there than we have for 100 years. Fosterville, which is our neighbour down the road, run by Agnico Eagle, was for 4 of the last 10 years the highest grade gold mine on earth, brought $10 billion of market cap appreciation. It was the lowest ASIC, and it was thought to be an amazing discovery and a one-off and a fluke, but our discovery, Eskay Creek, has proven that that's not the case, and there's more there, and the understanding of these deposits has really just emerged, very different to the deposits that made Victoria different 150 years ago, so we're in a new paradigm. And most importantly, Victoria's permitting mines. They permitted 4 mines in the last 6 months. So it is one of the better jurisdictions to permit a mine globally today, just by those stats. If you went to sit me down and have a beer, and I look forward to doing that perhaps tonight with some of you, you'd say, well, why has this company done so well, and why is it going to continue to do very well? Well, I'd say it's one of the few multi-million high-grade discoveries. We're going to build one of the highest margin projects on earth, but it's also because of the shareholder base. It's a perfect storm of meeting a great discovery. Now we have a very good gold market, but this is a discovery that's 3 years old. So for 2 out of the 3 years, it's shone brightly in a lesser gold market. And then we've got people like Darren Morecambe, Pierre Lassonde, Kirill Sokolov, who are some of the best investors in the space, who own 30% of the stock, and it is really a masterclass learning from these gentlemen, amongst a lot of the super funds in Australia, in North America, some of the larger institutions, and even up here through Europe. And what this shareholder base has done is allowed us to focus very, very acutely on per share metrics. So every decision we make strategically in the company is about making sure that the share price has a chance to go higher by that decision we're making. There's a lot of detail behind that, but that's maybe one of the discussions we can have after this. We're based here in southern Australia, in Victoria. Eskay Creek is the name of the project. Next to Fosterville that I spoke about. These are the key discoveries ranked by an independent consultancy in Australia over the last decade. All the gold discoveries there are ranked. So Eskay Creek, even 3 years in, is now identified as one of those top discoveries. And as I mentioned, it's one of the few discoveries in the world that you'll hear here that is a 10-gram multi-million ounce discovery in a tier 1 jurisdiction. Because you're all probably new to this story, let's talk about how it's progressed. This is a longitudinal section through the deposit, about 1.2 kilometres you can see here, down to 1 kilometre depth. And this is how the discovery has progressed by the drill bit. We put a lot of drilling into it. You see nearly 100 kilometres. And here are the grades. So just focus on the pink and the red, greater than 50 and greater than 100 grams. This is a very important aspect, the very high-grade nature of this deposit, as I've pointed out. But until a few years ago, the deepest hole on the project was a shaft put in 1880. So nobody had really looked, and they'd certainly not found any of the high grades near surface. This is when we listed it on the ASX. We are dual listed, I should say, on the ASX and TSX today. But we had a few hits, a few of those pink 100-gram hits at depth. And then by December 22, we'd made this key discovery. At depth, it just looked something was very special. It was 300 metres at 5 grams, made up of a lot of high grades. And then fast forward a year, we drilled that out and it lived up to its expectation. And then we've continued over the last year. And now we have an exploration target, which is drill constrained, not all enough to put into a resource today. We're drilling and funded to infill this area here. It's 2.2 to 3.2 million ounces at 8.3 to 10.6 grams gold equivalent. That's the range that we've quoted. We quote gold equivalent because 20% comes from antimony. And antimony is a key element. It's what will help us permit this project. 20% only of the mix. It's a gold project with 80%, but you don't have a munitions business without antimony. You don't have many other industries without antimony, and China has banned export of antimony over the last year, and the Western world really doesn't produce much at all. So this will be a key part of rebuilding that supply chain as one of the top 3 antimony projects in the West. And if I look and take this slice that I've just shown you, like the slicing through the long section of a loaf of bread, here it is again, but it also just gives you a bit of a look in. It's a very technical slide. It's arsenic over antimony, but these deposits get better at depth. That's all you really need to know, and they're antimony rich up at the top, and then you lose the antimony as you go down, but the gold goes up in grade. It becomes much higher grade. And that's why we're seeing much better results. 4 of the top 10 hits in this deposit have come over the last 6 months. And so basically you want to look when you get into that red rather than the blue parts of the system. And you can see we've drilled it out here, but we're just starting to see it in all these other areas. So we're just arguably coming into the better parts of this deposit. Even though it's been great, it has a very high potential to become better. And then if we take that slide and just look at it in that area at a different scale. So here we have that same area that I've just outlined in blue there. So that's where the exploration target sits and where we're doing most of our drilling. We are putting a hole down here, 500 metres below as we speak, to demonstrate the system can continue, because it geologically should. Our neighbour here at Fosterville is drilling down at around those 2 levels. This is Fosterville at the same scale. There's the 10-kilometre scale. So certainly it has a chance to get bigger. And then even more excitingly, we've drilled under old mines here. We're not that smart. We just drilled under some old mines that people hadn't thought about with a new geological understanding. And here's the rest of that trend, around about 12 kilometres of old mines and geological continuity of the same horizon, and that hasn't been touched. We put about 2,500 metres out there in the yellow today and about 100 in the blue. So we've only really been exploring 10% of our trend. It's not all going to be mineralised, of course, but you want exploration optionality in these plays. You don't want us just to be in a small postage stamp without getting bigger. This can get a lot bigger. So let's just take you down to Victoria, just briefly. So the trend of mineralisation extends over that 1 kilometre, and this is what it looks like. We do have neighbours to the north, and there's about 12 of them within 2 kilometres. We've got this hill here that buffers us, and you can see some of the drill rigs here in the photo. But the secret of this project, as I mentioned before, is that we bought 10 properties and we own the land as pretty much as far as you can see and can develop into that valley where there's nobody. So it's only 60 kilometres from Melbourne. Only 60 kilometres from Melbourne. People who work here will be able to go home every night and have dinner with their family. Nobody's ever told me that in the mining industry. I've had to spend a lot of my life in a lot of places that are less desirable. So it is already and will be able to attract very good people. So here's our plan. Our plan is to drill those 200 kilometres of drilling that I spoke about, 53 million Canadian, 60 million Australian. The decline is going through permitting. We expect that to be permitted by the end of the year. That's 27 million Canadian. We're fully funded to do all this work. Then we've got 20 million for regional exploration, so we don't forget that exploration upside. This is building fundamental value. We're building a project here. We're putting a decline into it. But what gives market value is that exploration success. So we've got 2.5 rigs focused on that regional exploration. And when that's finished in Q1 27, that drill out here, we'll be able to go to our first economic studies. I mentioned Victoria. I just want to mention it again. It's permitted 4 mines in the last 6 months. It's open for business. We're getting a lot of support for this project. The antimony helps hugely. Bit of a detailed slide. Metallurgy, A-OK. We have gravity, flotation, very marketable products. Free gold, not refractory. And this is where we sit in the antimony space in the Western world. You don't have a munitions business without it. I've just spent the last week, in the last 2 weeks in DC, meeting some of the key leaders in the critical metal space in DC. We get a lot of support through Australia for this project. And that's how it ranks number 3, and it's getting bigger in terms of inventory of antimony in the Western world. 80+% is controlled by China and Russia, and it's banned from China today. So to leave a bit of time for questions, I'll finish on this slide. We've got a very rare asset, a multi-million ounce discovery, growing very quickly in a tier 1 jurisdiction. It's got a wonderful mix. Gold will pay for it, antimony will permit it. We're only 10% of the way into the discovery. You see it's going to get a lot bigger. We've got a government that is open for business, so we're going for it because we want to support their aims, which match ours. And that very key shareholder base, some of the best value investors in gold in the world, are backing this company. So I look forward to meeting some of you today, and thank you very much for your attention.
Thank you. So, Michael, a couple of questions here, and you raise your hand if you have any. But just coming back to antimony, as you mentioned here. So, enlighten me. Why is that a critical mineral? What's it used for?
Yeah, so this is a good question because it allows me to go in a little bit more detail. It's mainly used in fire retardants, so every bit of plastic in the world is doped to stop the copper wire from shorting. 20% of antimony globally goes into solar cells, so that's also a large use. But its critical nature is in munitions, semiconductors, night vision goggles. You don't have a munitions industry without it. It makes lead harder. It's used a lot in lead acid batteries, but they're fully recycled, so that's not primary supply. So a very critical metal. That's like many, but Victoria has always been an antimony producer. During our project, along with 1 or 2 others next to us, were the only sources of antimony for the British during World War I, for example.
Okay. And how come a Canadian company managed to get hold of an Australian asset, apart from, well, not including you as the Australian asset here, but...
Yeah, no idea, mate. No, I actually owned many of these projects 20 years ago in Victoria. I mentioned that whole rebirth and re-understanding of the geology. You've got Ballarat and Bendigo here that were the main mines in Victoria. And then there's another orogenic event that formed Fosterville and Sunday Creek. And we really didn't understand a lot about that until the last 10 years when Fosterville found a jewellery box at depth. So now we know we've got to go to depth. We understand a lot more about the geology. So I bought back into the projects at the start of COVID is how it went. And we are listed in Canada, where I've had 25 years of my career, and also listed in Canada, which is home. And I'm 5th generation from beside this project, literally from 5 kilometres away. The local park is Hudson Park, so I've come home literally.
Okay, so combining the best of 2 worlds, Australia and Canada in that case. You mentioned, let's see if we have anything here. No, just raise your hand and you get the mic. Management and shareholder focused on per share metrics. Could you just rank them? Which ones? So which ones do you want us to look for?
Price.
Price for the share?
Price.
Yeah.
You're all only investing not for us to create larger companies by market cap. And it's easy through a good discovery to make a company that can have a larger market cap. It takes a lot of learning on how to make a larger share price going along with that. So the model of this industry is tough. Basically, as our key shareholder says, this deposit was formed 380 million years ago. It's going to have a value. The price per share is just going to be how many shares we divide it by. So we're quite miserly in that aspect.
And you showed the map where you had your your project, and I will quote, "You got two of the richest and highest cash flow margin gold mines globally as your neighbors," as I understand it. Do you have any discussions with Agnico and Mandalay?
It's a small business, so we all know each other, and Agnico are an amazing company to be a peer of in a region. They're wonderful operators, and I've done that in Finland for many years, and now we're doing that in Australia. So yes, we all know each other, and we're all very happy to be participating in the rebirth of the Victorian goldfields.
Okay. So you are discussing, but you couldn't possibly comment.
I gave you an answer that was that said neither, but we're friends.
All right. Any more for any more? So if I understand it here, there will be a very hectic news flow coming out from you here going forward. What would be the next important milestone that you want the market to focus on?
Yeah, there's no shortage of news flow from Southern Cross. 9 rigs. We've always it's a real machine of geologists and drill core and assays, and so of course the deposit getting bigger as we drill more. The grades we're becoming more certain about that head grade, and it's actually increased 20% in the last 6 months as we're becoming less conservative by collecting more data. So there's always great news flow in terms of drill results. That permitting of the decline, of course, will demonstrate that Victoria continues to remain open for business. Some of the regional exploration that I spoke to will have 1 rig going to 2 regionally, and that would be very exciting if we were to make a key discovery along that 10-kilometre strike beyond that 1.5 kilometres that we've drilled.
So basically, one thing is out of your control, more or less, because it's the permit, but you have the ducks in the row there, and then it will be the drilling that we can look forward to.
Yeah, and the drilling is, it was made 380 million years ago, so it's for us to test, but it's not going to change it.
Yeah. So one final question here, if we can get the mic. Thank you. You got 1 minute.
This antimony, can that be used for some kind of soft financing if you want to start the mine?
It's a very good question. Yes, is in our view. I was across, of course, in the US to look at opportunities to lowering our cost of capital by dealing with the antimony as a separate piece, either via an offtake or a government type of loan, because there is genuinely a desperate need to get antimony into the market, and if government support can help that happen quicker, then we'd very much be interested in entertaining that. So lowering the cost of capital, another decision about creating a higher share price, ideally.
Interesting. Well, Michael, thank you so much.
Thank you, Carlo.
And we'll give him a round of applause, I think. And we wish you the best. And now it's high time to welcome our next speaker, who should be fairly familiar to the audience, as he was up here. It's first Majestic Silver, Canadian mining company that owns and operates silver and gold mines, primarily in Mexico. And you also develop First Mint, an in-house mint that sells silver bullion, which I think is a brilliant combination. Right. So, Keith Neumeier, the floor is yours.
Thank you. Thanks for coming to my presentation today. It's a nice time to be a mining investor, isn't it? Almost we're at $50 silver. It looks like it might happen in the next couple of days. $4,000 gold is obviously a pretty good place to be as a miner. And I'm sure you're recognizing that as you go through everyone's presentations. So this is a very tiny slide. I'm going to have to walk over here. On a revenue basis, we're the purest silver company in the world at 55% silver, 35% gold. The rest is in the form of lead and zinc. I put the company together 22 years ago when silver prices were much lower. I've been predicting triple-digit silver for, I think, 13 years now. Somewhat ridiculed at the time, but I see that there are people now believing that we could actually see triple-digit silver, and I'm seeing others speak of much higher prices. I'll get in, we do pay a dividend, and we're very innovative, and I'll get into some details as we get through this presentation. Talking about silver, you've been hearing a lot of people talk about silver, so I'm not going to waste your time in talking about too many details on silver. But on the panel discussion yesterday, you saw me talking about the ratio, and the ratio to me is quite important. Financially, in the financial markets, we're trading in the low 80 to 1 to gold, which is completely nonsensical to me. The miners worldwide are mining for every 1 ounce of gold, only 7 ounces of silver. We've been in multiple deficits, and you can see the production from the miners have been pretty well flatlined for the last 10 years. The mining sector cannot produce more silver. Simple as that. And there's all kinds of reasons why. And we don't probably have enough time to get into all the reasons, but it comes down to price, governments, permitting, the length of time it takes from the drill bit to getting a mine into production is around 15 to 20 years. So it takes a lot of time. So, the juniors that you're following are exciting and all that. And we always look at the junior sector. But for us, we're a producer. We're one of the largest silver producers in the world, third largest in the North American market. We've obviously one of the more well-known stories in the space. But, I've been talking about silver for a long time. And, we've had 5 consecutive years of deficits. And in order to fill this void, you would need 10 First Majestics just to fill the deficit. And that's not going to happen. So the only solution is higher silver prices, because the mining sector needs to be motivated to build more silver mines. As we electrify the planet worldwide, we need silver. Everything you do here, everything you do every single day of your life requires silver. Your refrigerator, your oven, your microwave oven, your coffee machine, all the appliances that you take for granted, all the little gadgets that we walk around with. Nuclear energy, no one talks about nuclear energy, but the renaissance that is currently happening around the world, the building of nuclear power plants now, finally, to solve some of the green issues that we have, we need nuclear energy. Nuclear power plants consume a ton of silver. There's a lot of demand coming that we aren't aware of today, and this deficit will not improve until we see much higher sustainable silver prices for decades to come, because that's how long it takes for the mining sector to make decisions to build new mines. And that's not going to happen anytime soon. So we're likely the most leveraged stock in the silver space to the price of silver. You can go back 22 years and look at how our stock trades when silver moves. And it is one of the best performing stocks in the space when silver starts to move, which we're now seeing. We've got 4 producing mines, which I'll get into in a little bit. I've been told to only do this presentation for 15 minutes, which for a company our size is a little bit challenging, as we've got a lot to talk about, but I'll try to keep it brief. We're also the only mining company on the planet that has its own mint. And there's a slide coming up, and I'll talk a little bit about the mint when we get there. ESG, something that obviously many investors are aware of and sometimes concerned about. I know Eric Strand owns our shares because he likes what we're doing in this part of our business. The mining sector, as you should know, invented ESG. We didn't call it ESG 10 years ago or 15 years ago. We called it CSR, Community Social Responsibility. And it's been rebranded and so on over the last few years. But even from the early days, from my predecessor company in Africa, we were the employer. And today in Mexico, these 4 mines are the only job in these communities. And we do everything. And I'll get into that as we get through this presentation. But if it comes, if the mayor in town, has a leaky pipe on Main Street, he phones the state, good luck. That state's not going to show up, right? He phones the mine manager and says, hey, look, I need this issue solved. Whether it's schools, uniforms, baseball fields, water infrastructure, electrical infrastructure. We do everything. We are the town. Without us, the town does not exist. And we take that responsibility very, very seriously. We just put out our Q3 numbers last night. I'm not sure if those, maybe there are shareholders here that saw those news release, but pretty darn good a quarter. Record silver for the quarter. I'll get into some details as we get through the presentation as well. So this year we'll produce somewhere around 32 million silver equivalent ounces. As I said earlier, 55% of that is silver, 35% of that is gold. So our costs are about $20 all in sustaining. So we're cash flowing nicely at current metal prices, as you can imagine. Our CapEx for the year. Now we did do a major acquisition in January. The Los Gatos operation was put into our portfolio. After that acquisition was news released back in September of 2024. And that's why you see the bump up in CapEx there, because we added a fourth mine. But that's a pretty substantial investment. We have 30 drill rigs currently active through our 4 operations, plus our development project in Nevada. Exploration is pretty important for any mining company, of course. Their job is to replace ounces. So the 30 million ounces that we're mining this year, their job is to make sure they find 30 million ounces. So the life of mine is stable. Right? That's what we look for. That's success if they hit that target. If they do better than that, then that's a win. And sometimes they do better, and that's a good thing. So here, this compares us to some of the others in our peer group. You can see the 4 primary silver companies listed in the U.S. and Canada, and on a purity basis, we are number 1. We ended that's the June 30th cash balance of over $510 million. We'll be putting our financial statements out in early November to bring in Q3. But I can tell you that Q3 was quite a good quarter, and cash, the treasury continually grows. Our revenues this year, 2025, will exceed $1 billion. So that's a pretty big milestone for us as a business. 6,000 employees, primarily in Mexico. So it's a great achievement for the business. And of course, that's a lot to do with the metal price. So, we're very lucky to have 4 mines all in neighboring states. The synergies that this brings to the business and the cost savings that this brings to the business is quite dynamic and very beneficial. If a motor breaks down at one of the mines, it's a simple phone call to, they may have to wait a month to get that brand new motor, yet they can just phone one of the neighboring mines. And in one of the warehouses, it's very unlikely that one of the mines doesn't have a part that one of the other mines needs. So it's great to have that diversity across the portfolio. We can move people across the different mines, which we do on a regular basis, depending on certain issues that may come up. So we can move talent around, and also it gives us huge buying power. When it comes to purchasing tires, purchasing equipment, purchasing cyanide, whatever the case may be, because of our size, we can garner pretty darn good contracts, and that helps us maintain a relatively low cost business. And there's our mint in Nevada as well, and our corporate offices, as you can tell, are in Vancouver, Canada. So Los Gatos, this was purchased in, as I said, January. We paid $970 million for it. It increased the business by about 30%. It took us to about 20 million ounces to a little over 30 million ounces. It's a great mine. It's a joint venture with a company in Japan called DOA. We contribute 70% of the total production. The mine produces about 15 million silver equivalent ounces. 70% of that is silver. We contribute, or we take approximately 10 million of those ounces to our own books. So it's a really great add-on to our business. It's only been in operation for a few years. This is probably our only acquisition in the 22-year history of First Majestic where we didn't have to do anything. So, because the mill was brand new. This mill cost $350 million to build it, and it's only been running for about 3 years. And so for us to buy an asset like this that we had to do nothing was pretty good. And we did, cut off the head and put our own people in place. But other than that, some of the systems, of course, they were a single asset company. We had to put SAP in place and all our corporate policies, and that took time, of course. But now it's all been integrated, and it's cash flowing extremely nicely and adding nicely to the business. And geologically, apparently, if I use this thing, it works. Let me see if this works. Oh, yeah. See that little black square there? So this is an enormous property, and this is what we like when we buy stuff. We want big, big, chunky assets, and this is 103,000 hectares in size. That's a monster asset. This will take a lifetime to explore. It is so big. And the reason why I'm pointing out that black box is because that's where the entire life of mine is, in that little wee square in this huge, huge property. So this mine today has a 10-year mine life, but that hardly represents the potential of this property and the future of this operation. This mine will be producing for decades into the future, and we have very actively drilling this area. We've had some news come out recently that's showing some of our drill intercepts, and we're adding ounces. And as I said, this is going to be producing for decades. So going on to Santa Elena, this was added to our portfolio in 2015. At the time, it was only producing 2.5 million ounces. Recoveries, and on my panel, I spoke yesterday about recovery rates for silver. I'm not sure if you heard that, but recoveries, in silver are more difficult than recoveries in gold. We have an extremely good metallurgical team that is very adept at adopting new technologies and innovation. And over time, we were able to increase production here to current levels of 10 million ounces a year, up from 2.5 in 2015. Recoveries today are 85%. So it's a pretty good achievement for our team to achieve those levels. And again, it is actually our most profitable operation. It's running at about 60% gold, 40% silver in the form of doré bars. And it's a great asset. And again, big chunky property, 102,000 hectares in size. And we've had a huge amount of discoveries here. As you can see the size of the property. One thing I should point out, I'm sure many of you know Coeur Mining. They purchased that little black box, which is right in the middle of our entire land package, because we own all the colored properties. And that black box is what Coeur paid $1.7 billion for, I guess about 6 months ago. That was the Silvercrest acquisition that I'm sure many of you are aware of. And you compare that to Gatos, where we paid $970 million for a much larger property with much higher potential. So if you look at on a cost basis, we did quite well with that Gatos acquisition. So talking about discoveries, the Ermitaño, which you can see on the top there, that right there, Ermitaño, that was discovered in 2016. We developed it, finally got it in the mill in 2021, and that's been the main driver of growth at Santa Elena since 2021. That's what allowed us to get up to the current production levels of around 10 million ounces a year. And lo and behold, we discovered 2 additional major discoveries. And for a geologist in his career, it's quite unusual to have 2 discoveries in a single year. Many geologists go a lifetime, without a discovery. So for our geological team to have 2 discoveries, and this is Navidad, and it's still early days. We put a resource estimate out in March of this year, and our geos estimated about 30 million silver equivalent ounces in this ore body. The metallurgy is fantastic, so the recoveries are going to be great. We're now just starting in the next quarter or so to run a ramp down here. And I think the next slide. Okay, so this is the second discovery. And if you see here, no, sorry. It's not working. No, anyways, so if you look at that topographical map there, you see that the Santo Niño, where the Santa Elena mine is, that's where the mill is. Santo Niño was a discovery that was just made, which is this one here, and Navidad is the one further down. So we're going to build a ramp from the Santa Elena mine into Santo Niño and then into Navidad. That ramp will take some time. It's approximately a little over around 2 kilometers, so it takes time to build that ramp, but that's the future of this operation. And over the next 2 to 3 years, you'll see these 2 other new mines come into the mill, and that's going to really positively impact Santa Elena going forward. And the life of mine here will be very, very good, and the grades are outstanding, which is fantastic. So San Dimas, we bought this mine in 2018. And this mine's been around for 250 years. It's one of the most well-known gold silver mines in Mexico. It's the largest gold silver mine in the state of Durango. It's had a great Q3, which is really nice to see. Have a look at the news release for further details. But this mine should be producing even more than it's currently producing, and we're working on ways to accomplish that. But we're looking for some upside at San Dimas over the next couple of years. Again, large land package and a lot of discoveries. So we put out a news release just last summer of some pretty impressive intercepts that we've had here. So life of mine is staying stable or potentially even increasing over time. So it's cash flowing, very profitable operation, and it's great to have such a strong asset as part of our portfolio. La Encantada, this has been we bought this mine in 2005. Back in the day, it was a 5 million ounce producer. Today, it's about a 3 million ounce producer. It's a bit of a more difficult operation. It is our smallest mine, so it doesn't really have a huge impact on us. But the nice thing about the La Encantada is it's 100% silver. There's very few mines in the world that are 100% silver, as you probably heard or throughout this conference. But it's a doré producer, and it's a nice little addition to our portfolio to bring our purity up to the current levels of 55%. And our mint, we've been selling silver to the retail public market. Many of you maybe even have some of our silver, I'm not sure, but and I got quite frustrated because we were using third-party mints. So we would be sending our refined bars to these mints, and they'd be sitting on their floors for months. And I'd say, what's going on? We have sold out signs on our e-commerce website, and we were getting complaints from your mining company. How can you be out of silver? And it was frustrating for me. And in 2022, I pulled the trigger and I said, look, we got to build our own mint. And it was different business, it's not mining. So we had to hire the people, we had to find a location, we had to figure all that out. And it took some time. We had to buy the equipment and all that kind of stuff. And so we got it up and running in March of 2024. And so it's a little bit, 18 months running now. September, this past September, we had a record month, which is pretty exciting to see. And it's doing well. It's cash flowing, it's making money. We're selling silver about $2 to $4 over spot, depending on the product. Currently, 7% of our production is going through the mint, which is pretty exciting. Our target by the end of the year is to get it up to 10% of our total production going through the mint. And we have other goals as well, but short term, that's our goal. And if we can get 10% of our production through this mint, obviously it adds profitability to our business. And it's an exciting part of our business as well. It's really nice to be doing this for investors in the space. Our premiums are pretty well lower than anyone else, because if you're a mint, and you want to produce a product like this, you're going to have to go buy the silver. So you got to find it somewhere. You got to buy it. Then you got to fabricate it, which got cost to it. So you're seeing these mints, selling their ounces at $5, $7 above spot. And you look at our website, and we're selling ounces, $3 over spot or whatever it is, thereabouts. Because we could do that because we're shipping directly from our mines in Mexico. It goes into Asahi's refining to get into 1,000-ounce commercial bars. We still own the silver, of course. They just refine it for us, and they get shipped in armored trucks up to the mint, and lo and behold, we produce these products. So, yeah, it's pretty exciting. Our financial strength, as I said earlier, we've got over $500 million in the bank. Pretty nice place to be. Look for November financial statements that come out as of for the third quarter, and I'm sure you'll be pleased as investors to see the current cash balances in the business. But we don't need money, which is a pretty good place to be. And our top 10 shareholders are listed there. Most of them are ETFs, and our stock trades like water. I don't know if you really watch our stock, but it's the most liquid mining stock. Maybe it's too much to say in the world, but it's crazy liquid. Trades. I think yesterday it was over like 25 million shares or something like that it trades. So it's an extremely liquid stock. So the institutions love it, and of course the ETFs like it as well. Analysts have recently upgraded us. We got upgraded by TD just recently. We've had all the banks actually increase their target price on us over the last couple of weeks. So it's nice to see those the support coming in from the banking sector. Our dividend, it's something that is likely to increase over time. I can't promise that, but currently we do 1% of our total revenue. So the idea there was to fix it to our revenue, which is obviously fixed to silver prices. So $10 million will be spent, approximately $1 billion in revenue, $10 million in dividends being paid out this year. But there's a potential of that increasing in the short term. And some future catalysts. Everyone's watching our financials really, and exploration results. We try to come out with exploration as much as possible, but we're not an exploration company. People don't generally buy us for drill results, but if we do find something interesting, we do. Once or 2 or 3 times a year, we put out drill results. But look for just continue to improve balance sheet. Continue to improve financial statements throughout the business. And the 10 rules of investing in silver. I'm not sure if you want to take time to read them all, but I put a silver company together because when I looked at I came from a copper company, and I was there, building that business, and left, and then decided to put a silver company together just because the supply-demand fundamentals back in 2022 were pretty dynamic. Compare that to 2025, and it's multiples of the reasons today why you want to own silver compared to when I put the company together, 22 years ago. So none of these rules have changed since then, except the demand has picked up substantially just from industry. 60% of silver produced goes into industry. And that's it for my presentation. I see I got 6 minutes, so wow.
Well, thank you for that. Very interested and invigorated, and I think we have 1 or 2 silver bugs in the audience, so raise your hand and we'll give you the mic. But I just have to expose a little bit of my ignorance here, because you said production was up 96%. But that wasn't due to the capex being up, because so you have increased production by getting more mines on stream, or is that the case?
That comparison is from the same quarter 1 year ago.
Yeah, exactly.
So that would only have the 3 operating mines in it. It wouldn't include Gatos.
No.
So the major increase is really the Gatos acquisition.
So and literally this means that you brought up more silver from the ground.
By adding a 4th mine.
Yeah. Okay.
Right.
And could we extrapolate that? It's a pretty decent increase. How much can you tell the market there?
Well, we are expanding I should have talked about the 2 mill expansions that are underway. The Santa Elena is running around, 300 tons right now. We'd like to get it up to about 3,500 tons. Los Gatos is running around 3,500 tons right now. We'd like to get it up to 4,000 tons. And the CapEx for 2026 will be included in our budget. We put out our budgets in January of each year, so watch for that news in January.
So it looks quite positive, I would say. So I'm just watching here, but every metrics that you brought forward here, the underlying business and your cash position and the demand, it seems like all the stars are aligned. So is there anything that will keep you up at night? Because you seem like you're in the sweet spot now.
It is mining. Mining, we're dealing with Mother Nature, so the mines are doing well right now, and obviously price is doing good as well. So it's nice to see, 3 of the 4 mines improving. Throughput's increasing, production's increasing, and to have that happen as well as silver prices going up, it's the best of both worlds. But it is mining, so there's always stuff happening.
But you sleep good at night.
I sleep fine.
And Los Gatos, you said it was a low-cost mine, but it's also an underground. Basically, is the low cost due to the fact that you more or less bought a ready mine, or could you define low cost versus high cost?
Well, look at all in cash costs are about $18. So and that includes La Encantada, which is a little bit dragging that number up a little bit. So we're always looking for ways to maintain our cost structure. There's always influences on our costs. Energy costs are a big one. With oil prices on the weak side, that's helped us. When buying tires, cyanide, all the reagents, ammonia, all the inputs that we use, are quite stable. So it's nice to see. But Los Gatos it's a big mine. So it's good grades as well. Grade helps. A grade does affect cost, but it's just a good operation all the way around.
And you touch upon the cost side and fuel and so on. And I remember during the previous, particularly the copper boom, then all of a sudden everything exploded like a tire for one of the trucks could go from $5,000 to $50,000 or whatever. It was quite astonishing, I would say. You haven't seen any signs of that as you are a heavy producer. Do you see any cost increase from the Sandviks of the world or the?
Yeah, no, not really. It's I remember in the run up from 2009 to 2011, we did see a lot of inflation. Because I think it happened so quickly.
Yeah. Okay.
Right, and I think the supply chain, including Sandvik, because Sandvik costs went up by 15% over that period of time. I remember that specifically because we were buying equipment at the time. But we have not seen that here. I think the supply chain was more prepared this time around. So it's lead times on equipment isn't that bad really. Okay. So it's we're in a pretty good market.
So if we summarize first Majestic Silver, you're one of the few pure silver plays, and obviously silver is booming, and you also have a dividend policy because you produce and sell. Give us 1 or 2 milestones to look for next year.
Well, I think getting our revenues over $1 billion. Okay, that's a pretty good, darn good milestone. Getting the treasury over 500 million was a big achievement as well. So I think we've done quite well. Our acquisition strategy over the last 20 years has paid off, and we're always looking for M&A opportunities. We have a whole team of professionals in house that. Scour the planet looking for good assets, and we've got a long list. But I built this company through acquisition, and that's not going to change.
No, okay.
So we're always got our eyeballs open, but keeping our costs down, increasing production, and just keeping improvements through technology, and now with AI coming in, there's further improvements. I know our geological team is using AI right now. And it's been quite helpful for them.
So it will continue to be a busy place. Keith, an absolute pleasure.
Great.
Thank you so much.
Thank you.
And now it's time to welcome our next speaker, and that will be Guy Goulet, CEO of Cerro de Pasco Resources, Canadian-based mining and resource management company focused on, repossessing historic mineral tailings. That sounds very interesting. So, and in central Peru, if I'm not mistaken.
Thank you.
The floor is yours.
Well, thank you for attending. What you see on your screen is the community of Cerro de Pasco. It's 4,400 meters above sea level in the Andes of Peru. 67,000 people live there. It's a community, but as you can see, it's also a mine. It has been discovered by the Spanish back in 1630. They started an operation there, and that mine has never stopped its operation since. Rare are the mines that have such a statistics. In 1906, Mr. J.P. Morgan himself made what they still call the greatest investment of the 20th century in Peru. He invested tens of millions of dollars into that project, which is today the equivalent of billions of dollars. The Americans have sent to Peru the best engineers, the best geologists, the best metallurgists, the best equipment. They list the company under Cerro de Pasco Copper Corporation on the New York Stock Exchange back in 1916. Cerro de Pasco became the school of all the mines on the planet. Cerro de Pasco became the cash cow of the country. Cerro de Pasco became the largest gold, copper, silver mine on the planet. So they extracted from that pit over the years 300 million tons. So this is a looking forward statement. The authorities suggest us to add to our PowerPoint presentation. So I suggest you to visit our website and read it. So I just mentioned to you, they extracted 300 million tons over the years. So some of it was processed, 75 million tons. And the rest of it was stockpiled here in the back. You can see the pit, you can see 67,000 people living there. So what we own, Cerro de Pasco Resource shareholders, we own the mineral rights on these stockpiles and these tailings. So we own the mineral rights on what we expect to be the largest above ground mineral resource on the planet. Next slide, I'm going to show you a satellite picture. So you can see the stockpile in blue, you can see in orange these tailings, you can see the pit, and you can see on the right, there are two flotation facilities still in operation that belong to Volcan, a large zinc producer. That mine, Volcan used to belong at 80% to Glencore, and the pit was shut down in 2018. So at some point, when Glencore has no more interest in offtake, they want to go away, so they want to sell the whole thing. And we were, in fact, the only potential buyer. So we look at it in 2019, because for us, that facility was going to be very useful. And we did an intense due diligence for 4 months. We end up not making a deal because when we were ready to sign that transaction, it was March 2020. And what happened in March 2020? COVID. So most of the mine in Peru were shut down. Peru was the most affected country per capita in the world. It's a mining country. Everybody works underground. Everybody were working close. Everybody had COVID. So we end up not making a deal. But I repeat, we sent 2 geologists and 2 mining engineers to the site. And what we did, we compiled the monthly reports from 1906, when Mr. J.P. Morgan made the investment, until 1992, when they stopped sending material in these tailings. So we took month by month what they have processed, what they had recovered. And we end up with that compilation. There was a copper era to start with, okay? There was underground mining, so they were targeting copper silver gold veins. And then in the 50s, it went more on the lead, zinc, silver operation. So we know precisely what they have processed. Total of 75 million tons. Grade was exceptional, 4% copper, 200 grams silver, 3 gram gold during the copper era. And then 3.3% lead, 8.6% zinc, and 3 ounces silver. And the recovery was poor. Why the recovery was so poor? Probably because you go back in time, this was the largest mine in the world. Okay? They were extracting from that pit every day 20,000 tons. They were processing 13,000 tons. They were stockpiling 7,000 tons. When you do flotation, you recover rapidly 60% of your metals within the first 24 hours. And if you keep the flotation going for, let's say, 72 hours, you will end up recovering 85, 87% of your metals. So why should they avoid an extra 48 hours to recover an extra 25%, while they can recover every 24 hours 60%? So they were throwing that rich material away. This is why these tailings are the richest tailings in the world. So knowing what they have recovered, we can estimate the average grades in these tailings, which are still higher than the average of the underground mine on the planet. And we can also estimate the contained metal. So if you put the copper, the lead, the zinc, and the gold into silver equivalent, you end up at 423 million ounces of silver equivalent above ground. Let's recall today, to produce base metal or precious metal, 40% of the cost is mining. There's no mining here. You know what's the problem in the mining business? It's mining. There's no mining here. Count $1 per ton. So it's $15 billion worth of metal above ground. So you can see the value distribution. It's a polymetallic. But if you do the calculation this morning, because of the price of silver, you can count like on this graphic, we use $30 for silver, but today it's 38% silver. It's a silver mine. So obviously we got a very, very good relation with the community of Cerro Pasco. The mine used to employ 7,000 people. Today, that mine barely employs 400 people. So you tell me what people do else than mining at 4,400 meters above sea level. So we are welcome to create the well back in Cerro de Pasco. So at the inauguration, we were speaking with the Presidente, the mayor of the community, and he was telling us, we all want to send our children to college and university in Lima. We just don't have the money anymore. And he was pointing out our stockpile and our tailings. And he told us, this is what's going to send the children back to school in Lima. Anyway, we started a drilling campaign to prove our compilation late in 2024. We start with an impact drill that you see on the left, and then we have to use a sonic drill because these tailings are placed in a former lake, and at some point it's 50 meters deep. So this is how we do. You can see here, we go 1 meter by 1 meter. We isolate the samples, and we freeze them. And we freeze them, and we bring them to the lab. When they come to the lab, we split the sample in two. Half of it went for assay, and the other half goes for metallurgy. So while we're freezing them, it's to avoid oxidation. Because by the time we take them on site and we do the metallurgical test, they might oxidize. So we want the material as is, as it was in situ. So after the first drilling campaign, 40 holes, we are exactly where we were expecting to be, except we are a little low on copper. Okay, why is that? Because copper is here. Copper is from the initial operation, the underground operation, and we will drill the copper in the second phase. This will be in January 2026. So we know from our compilation, the copper will end up, instead of being 0.09, it's going to be 0.42. The thing we didn't know we had is gallium, and we have a lot of gallium. I don't know what's going on with gallium. We've got 53 grams per ton of gallium so far, and more we go to the south, the higher the grade goes. Like the two more southern holes have returned 86 grams per ton gallium. Gallium is essential for defense, aerospace, satellite, semiconductor, lead product. The United States defense needs gallium, and 98% of the gallium is produced in China. Gallium is to replace those silicone chip. More efficient, can absorb higher temperature, higher frequencies, higher voltage. So it's a concern for United States at the moment. We have so far, and if we can recover the gallium that we have 4 times what China has reported in 2024. That means our tailings can support the planet, if we can get the gallium out, can support the planet for the next 4 years. So as I mentioned, it's a real concern for the government of the United States. Recovery of gallium from existing wastes is the fastest way to make the material more available. Like if we can get it from tailings like us, it's ideal. So we have started discussion with the government of the United States. Let's see what happens if we can pull a rabbit out of the hat here. So let's do some economics, okay? So let's take low conservative price of metals. Let's take silver at $30 and gold at $2,500, okay? So that means we have an in situ value of $169 US per ton. If we use the neighbor facility, it's a whole facility with all Denver cells, we're going to recover 40% of the metals. That gives us an NSR per ton at $49. OPEX will be low. As I mentioned to you, count $1 per ton for mining, $7, $8 for processing. So that means OPEX will be $10 per ton. Profit on 75 million tons, it's $3 billion US. Profit per year, base case, $140 million US. We're trading at a market cap of $280 million Canadian. So now let's do an uppercase where we include the gallium and the indium. That gives us an in situ value of close to $200 US per ton. And let's say we built our own facility, modern facility. That means we will be able to recover 70% of the metals. NSR per ton then moved to $100. OPEX will increase a little bit since we'll have a little more grinding and there will be the gallium to treat. That means profit on 75 million tons. This is only the tailings. It's not accounting the stockpiles beside. It's $6.3 billion US. It's $610 million US profit a year using silver at $30 US per ounce. So at the end of the day, we will be somewhere in between $140 million profit to $610 million profit per year. So what are the catalysts for 2025? Well, we got this deal with United States that should come. We got metallurgy to announce, and the most important thing would be to drill what's out of our permit that belongs to the government of Peru. Obviously, the government wants this project to move forward. We're going to pay 30% income tax on the number I just showed you on the slide before. We're going to create the wealth back in the community of Cerro de Pasco, and we're going to clean up the potential producer of acid water, which are these stockpile and these tailings. So all these catalysts should come before the end of the year. So this is how we're going to move these tailings. So what you see in orange are the tailings. They're saturated with water. If you do an excavation, it's going to be naturally be filled with water. We're going to bring a pontoon and we're going to sink those slurry pump. And we're going to smoothly pump this slurry to either the neighbor facilities or eventually the facilities we're going to build by ourselves. You can see we will produce that slurry and we will pump that slurry day and night smoothly. Let's recall that mine was operated over the years very, very aggressively by the Peruvian. It was a machine to produce cash. There was dynamite, there was trucking, there was dust, there was noise 24 hours a day. So we're going to eliminate all that. So it's a project we're proud to do. It's pro-social, pro-environmental, and we're very, very, very welcome in the community of Cerro de Pasco. This will be Cerro de Pasco in 20, 25 years. Last slide, corporate overview. So we've got 335 million shares outstanding. We've got a great shareholder with Eric Strand. So Eric Strand and management own 32% of the shares, and now we've got 3 or 4 institutions that account for another 12, 13% of the shares. So I would say we've got just north of 50% that is float. Where was the resistance here? This stock should keep moving up. It's moving up now. But we had to issue, at some point, we have to do some financing at lower price, and we had to issue those warrants. So we did a financing last year of $15 million, and we're sending to Peru. We're into a feasibility study right now. We're sending to Peru $250,000 US every 2 weeks, and we have more money than we had following the financing last year. So we are in good health financially. Eric Strand still owns $9 million worth of warrants in the back pocket. Eric doesn't need to sell shares to exercise the warrants. This is us.
Thank you. Very interesting. We have time for at least one question. So if we can get the mic over there.
You mentioned you focused on the tailings, but then you have the stockpiles.
Yep.
How much can we expect, and how you are going to treat the stockpiles as well?
Yeah. So we got 75 million ton in these tailings, and we probably have 104 million ton in those stockpile. But the stockpile are a mix of waste and ore, very rich ore and waste. Why we start by the tailings, it's because it's known. So from the top to the bottom, every holes have 1.5 to 2.5 ounce per ton silver and 4.3 ounce per ton silver equivalent. We're sure. You understand? It's safe. Like there's no gap. There's not 1 meter that did not contain this value. So like it's 75 million tons. At 10,000 ton per day, it's 22 years. At 20,000 ton per day, it's 11 years. So you understand we have a lot to do in these tailings, and these tailings are known. We just have to go step by step by step, and no rush. Like every 1% we recover better, we're doing metallurgical tests, represent tens of millions of dollars profit for our shareholders. As my wife would say, it's like a spaghetti sauce. It has to cook 8 hours, has to take the time.
But eventually it will be economical, reasonable to process the stockpiles as well.
Yes, the stockpile, exactly. But we have more work to do. We have a lot more drilling to do. But at some point, like in 2-3 years, we're going to start operating there.
So with that, Guy, very interesting, and we thank you.
Okay.
We give him a warm replies. Thank you, and invigorating. Now it's a great pleasure to welcome Russell Bradford, I should say. On the 15th of September, First Nordic Metals and Mawson Finland announced a strategic merger, and more or less fresh out of the oven, we will now get first-hand information. And I believe that we will have Nora Ahola, Managing Director, on stage as well. So welcome, and the floor is yours.
Thank you. Thank you.
Thank you. I will sit here.
Yeah, Nora, you can sit there. Okay. Good morning, everybody. My name is Russell Bradford. Today, I'm going to take you through a few things. First of all, talk about the merge that's happened. I'd like to go through some of the key points that our assets have, and certainly what attracted me to come on board as CEO. I think it's important to understand we've just announced a raise. We'll go into that and the work that we'll be doing over the next couple of years with that money. And just talk about the opportunity that I think we've got. So Nora's joining me. Nora's the MD of Mawson, and we'll get into Nora's new role shortly. So on the 15th of September, we announced a few things. The first thing was the merge. That was between First Nordic and Mawson Finland. That's a 1/3, 2/3 merge. And coupled with that was a $30 million raise, and that was on the Monday. Then on the Wednesday, there was an announcement that we also going to raise $50 million. So essentially it was an $80 million raise. It was $68 million non-brokered. That close will happen in the next week or so. So essentially, we've got treasury now to look at these two assets with a long-term project view. And I think that's important because we're not going back to the market in any short term asking for money. And then the third thing that was announced there was the board, the new board of the merged entity, and my appointment. So they all points that I would like to discuss. So let's look at the investment highlights. Well, essentially, you brought Finland and Sweden together, so we're becoming a Nordic gold company. If you look at the gold ounces on our balance sheet now, we've got over 2.4 million ounces equivalent on our balance sheet, and we also have the cobalt credit from the Finland asset as well, Mawson. We also have its gold and cobalt, and obviously that is its strategic significance in the EU as well. We've spoken about the new management team. Well, I'll get a bit more into that, but essentially we've come on board now to look at development, and I think that was important with the raise that we did and the treasury we have now. We can get into more project development and execution as opposed to the strategy that First Nordic had was discovering and exploring. we're kind of moving into this development phase now. We're obviously positioned well now for acquisition and consolidation of our assets. I think it's been a fantastic, let's say, exercise to raise this money. It just makes my job and the team's job, we're just thinking differently now, so we're really well positioned. And, you know, I always look at these things, and we've all been in this position. You can only do with the resources you've got. Well, obviously, again, we're just going to start thinking longer term now on our approach to developing everything that's in our portfolio. So part of that announcement was the new board. So quickly, I'll go through the board. Peter Breeze, Peter and I have worked together for over 25 years. We met in 2002. We were part of the Lionel stable. That was the company that we sold to Norilsk Nickel for $7 billion back in 2008. We had 8 operating mines. Peter was CEO and then became CEO of Norilsk Nickel International as part of that transaction. Straight after that, we went off and did Mantra Resources, which was a uranium project development in Tanzania. That was over a 5-year period. We developed that project. That was sold to Uranium One in Toronto for just over $1 billion. And just soon after that as well, moving to Ghana, West Africa, a gold mine, 220,000 ounce gold mine, 3 million tons, moving up to 5.5 million tons with an expansion. And we JV'd that with Goldfields just before COVID, actually. So Peter and I have got this operational project development experience, and we have a team behind us who bring all of that expertise as well. Not only contractors and EPCMs, but management as well. So over the course of time, I'm trying to just show here that this is a type of team that we'll start bringing on board as we move into project development. With that experience, you know, I think it's fair to say we've earned our stripes. We've done this before. And with that knowledge in mind, when we looked at these assets now, and we'll get into that just now, so that was kind of that thinking and that experience that allowed us to, you know, make a decision on coming on board with the First Nordic and the Mawson assets. Darren, I met Darren a couple of months ago, but Darren's been instrumental putting this together, and I think it's fair to say that's Darren's strong point. I mean, he's been very involved with companies like Foran, Southern Cross, and I think, you know, this is no different, you know, looking at the opportunity, bringing, you know, these assets together, finding a new management team, and then raising the money and, you know, letting this thing now loose and let it form its own life. So we're very fortunate to have Darren. It's been great to get Darren's input into everything that we want to do and where we want to go. Nora on the stage. Nora is the current MD of Mawson Finland. Nora is a great asset, permitting, Nordic, worked for the forestry, spent a lot of time in mining operation and management of mining companies. For Nora's sins, I've said to Nora, can you please look after the Nordics? So Nora now will be our Nordic manager. So not only Finland, Nora's role will expand to Sweden as well. I think that's very important. I've always said everywhere where we've worked, you know, it's not my backyard. I don't, you know, I've got to learn that, right? We know how to build a mine, we know how to do metallurgy, we know how to drill, we know all that stuff. But we've got to learn through Nora and others how we do it here. That's very important. So I think having Nora on the executive and on the board is critical to our success. And we'll take guidance from Nora and others in the Nordics. So that'll be a key part of the leadership. Mark, who's an existing board member from First Nordic, he worked with Agnico for over 30 years, a geologist. Obviously, he understands that relationship and the work ethic of what Agnico bring. I think that's important that we keep that continuity. Caroline's a new board member based out of Paris, worked for McKinsey's a long time, done a lot of project development, evaluation, an EU citizen, so that's important. So Caroline's coming on board. And Adam is the existing First Nordic board member who would spend a lot of time with Darren putting this whole thing together. So this will be our new board, and I think it's aligned to where we want to be next, right? We want to get into, let's say, execution, development, and kind of, understand when's the right time to rather go and explore. But I think having over 80 million in the bank and this team, we want to now move into that kind of next phase of development and execution. So the two assets, First Nordic, well, there's the 45-55 JV with Agnico. That's been going for a number of years. The Barsele ore body, great ore body, in the mid-north of Sweden, 2.4 million ounces, majority of it inferred. Agnico have done a great job managing as the operator, not only in community relations, but also environmental. So a fantastic job that they've done, and all the technical work that's been done there is, to the standard you would expect from a company like Agnico. So we've got a great partner in the project there. First Nordic also own ground north and south of Barsele, and you'll see just now on a map. And there's been some success in the drilling and the grades that they're seeing. So we've obviously got to evaluate that as well. And then if you look at Mawson, you have the Rajapalot project. That's just shy of 1 million ounces, very good grade. A PEA was cut on that project in 2023. I've mentioned there it was done at $1,700 an ounce, and we're seeing a lot of this now with the gold price doing what it's doing. A lot of companies are kind of blowing the dust off these studies and putting new numbers in and seeing what that does to the resource, seeing what that does to the economics, and then coupled with that, let's get new capex, opex, and kind of get a new base. Well, at Rajapalot, that is something that is very obvious we need to do. Let's go and redo that. It's not a big exercise, but it will certainly give us a baseline and an understanding of what we've got. So that's something that's on the to-do list pretty soon. We want to recut that and get an understanding of this project. Because I've done the numbers, but I've just done them on the back of a fact packet, right? But we'll get an EPCM to do this. But that will look very differently based on what we're seeing in the gold market right now. So this is where we operate, and when we did our due diligence on these assets, often I think back to when we were working in Tanzania and we were in the middle of the Selous Game Reserve, and there was a small geological camp. We had to fly into Lukuyu, we had to drive through the forest, and it'd been raining. Took us, I think, 8 hours to get there. There's a camp, there's no Wi-Fi, and then you've all been there before, right? Well, I was running a project in Timmins just recently before I came on board, and I went to Timmins, and it's like a Kalgoorlie, right? I mean, but the projects are pretty close around Timmins. So you drive there, there's power, there's people, there's data. Well, I went to the Barsele project and then went up to see Nora Rajapalot, and the infrastructure is fantastic. In the Nordics, I think we're very blessed having that. And it's important that because it's not only about movement of people and mobilization, it's all to do with things like flights and camp. Where's the power coming from? How do you get how do you get the sheets of metal in that we need to weld to build the tanks? Well, there's a rail line at Barsele. There's a road. You drive on a tarred road all the way there. There's a hydro plant across the road. And we all know how cheap the power is in this part of Sweden. It's very, very important. I look at those things and already I'm saying, well, that's a tick. That's a big tick. Because it's not only about CapEx, it's about OpEx. So not only in Sweden, but also in Finland. Tarred road, good access to power, people, water. It's all these things that we do spend time and money looking for and trying to, make a plan in projects to make this thing work. We don't have that issue. So in our due diligence, this was a big tick, a big, big, big tick. I think coupled with that as well was the understanding of the community relationship and the community relations. So up in Rajapalot, Nora's done a great job with her team, keeping the community engaged on the project, on the development, what is happening. Also, obviously, with Agnico and their involvement with community relations, their environmental monitoring, and same with Nora as well. And when I was up there recently, saw all the water stations and everything. So again, we looked at this and we said, this is very important because I'll get back to this, it's the backyard scenario I talk about. You will never build a mine if those things aren't correct. And you can have the cheapest OPEX and CAPEX, but you don't get your community and you don't get your indigenous affairs and you don't get government respect and where we're operating, it's not going to happen. So I certainly feel very fortunate for the work that's been done so far by both companies on that. And we've got a good foundation, and we'll continue with that. So again, that was something that was very important in our due diligence, and it's there, and we know that we can continue with that work. So that was a very positive tick for us. So, and I'm learning about the Nordics, but I used to go to Harry Valter a lot when we were in the nickel business. Nickel work when we were in the nickel business in Norway, and there's a lot of big mining companies in the Nordics, big and very first class, world standard companies. So we're not in an environment where we have to go and bring thousands of expats and teach people what to do and how to do it. No. We can learn a lot. And by the way, this is a cold weather climate, so. Nordics know how to mine and build and operate in these type of environments, as they do in Canada. So again, we have to take lessons from that, and we also have to get on board with that, right? So I think we're in a very fortunate place to operate. There's been well-established work that's been done, and I think that we can only learn and build on that. So. This is a ground. This is a ground that First Nordic have. There's been drilling up and down here, and I'll show some results of that just now. And there's the Barsele project there. So effectively, like I said, it's got the First Nordic grounds bookended with Barsele in the middle. This is over 100 kilometer strike. It's essentially a gold camp. I think this is the largest gold land holding in Sweden, including the Barsele project. The First Nordic guys have been drilling here. They've had some pretty good hits, and I'll get to those just now. But it's a good piece of land, and obviously having the Barsele project in the middle, I think about Ghana and the land that we had there. We had the Obertan mine and Asasi. And in between, we had all these pits, satellite pits, and 2-3 year pits. You can truck ore up and down this belt into a centralized plant, and obviously that's just me, thinking out loud. But I looked at this and I said, this is very similar to what we saw and what we had in Ghana. So I think this is a model that we'll have to test when we start looking at our feasibility work and how we, going to put this whole thing together. This is the Barsele ore body, a cross-section there. So there's 3 zones here. Good grades, good continuity. It's open at depth. We know that. And then it's open along strike as well. There's been a lot of work done on this through Agnico, over 150,000 meters of drilling. Done on it. It's well defined. It's a majority in inferred. This is 2.4 million ounces in inferred.
So obviously more drilling to be done, but the opportunity here is there's expansion drilling, there's other targets in this region. As I keep saying, the infrastructure is fantastic in this area. So I think this is a great project to be part of our portfolio with the 45-55 JV we have with Agnico Eagle. The drilling that First Nordic have done, a lot of you would know about this, but I really just want to talk about the intercepts. These are pretty significant intercepts that they've seen at Ada, you know, over 20 meters running at, you know, plus 1.5, 2 gram per ton. We're definitely in a gold belt here, right? So you can see with the drilling that's been done over the last 2 years, there's not a resource here yet, but as part of our planning, and I'll talk about that just now, what we need to do, but we're certainly in an area that we can build on in that region with the Barcelli in the middle and then, you know, north and south of that deposit, that we can create this gold camp as such. And then you can start putting iterations around processing and stuff around that. So the guys are doing a good job there. And then the Rajapalot project, I'm going to ask Nora to comment more on this, but essentially this is just shy of 1 million ounces, very good grade, near surface mineralization. I was quite surprised in Sweden and Finland compared to Canada, the depth of the till. Here in the Nordics, the till is shallow, it's narrow, it's this is 5 meters and it's not significant. In Canada, we had 20 to 40 meters till cover. This is very different. So, but Nora, if you want to maybe comment on some of the work that you've done.
Okay, thank you, Russell. Some of the people in audience, I saw you looking at the clock. We are having double time here, so we have 40 minutes actually. So, and Russell obviously likes to talk. So you spent already over 20 minutes. I'm not going to do that, but yes, I'm the CEO for Mawson Finland, and for the new company, I will be the managing director for Nordics. And like Russell said, my specialty is environmental issues and permitting, government relations, these kind of things. And like Russell said, it's if you want to get any project permitted in the Nordics, you need to know what you are doing and take good care of the local communities. And I'm very, very happy to live in Rovaniemi. So I live 30 kilometers from the site. Our whole team in Finland is local. And of course, if the people are part of the community, it's easier to get the social acceptance in the area and in the country as well. So we are trying to build a very good Nordic company here and employ people who actually know these countries and how to work here. And I think Russell have a good hunch on that already now. Rajapalot, it's a good project. I've worked with the project for over 10 years now. And we are already in the middle of permitting process. I always call them processes because it's not just one permit. You need to do impact assessments and land use plans and so on and so on. So it will take time. But like Russell said, we're going to update now our resource. We had some good results from 25 and 24 winters when we started as Mawson Finland. So it will be very interesting to see what comes out. Gold price is totally different, and I think, of course, we have some kind of a hunch what will come out, but let's see in, I would say, Q1 maybe, 2026, when we can see some of it. And what else? For Mawson Finland, I can say we are very excited also about the new JV partnership with Agnico Eagle, with Barcelay project, and there will be a lot of discussions what we will be having with them during the coming months. So that's it, much quicker than you were.
Thank you, Nora. Thank you. Thank you. So, so as we said, we're going to cut a new PA on this and get an idea of really what it looks like in today's gold price environment. So it's a simple flow sheet. I've looked at it. There's a cobalt credit that we need to get our heads around, and just update that with, you know, new mining costs, G&A, OPEX, and let's understand what we've got. And then we can start planning what's next. I think that's very important. We've got to be careful that we don't get ahead of ourselves. We've got all the, you know, we've got good treasury now. The team's all coming on board, but let's just do a bit of planning before we go into execution. So let's just talk about, we did the raise, the money's coming in, so you've got this company now with a great management team, a new board, and plus $80 million in the bank. It's a very fortunate position. I've come on board, and there's a lot of things that I've seen that, like, let's just review, let's stop, let's just take stock, and let's respect the process. We're going through a merge, so in some respects we have to be conscious of our corporate activity. We've got to be careful that we don't execute too early. Let's get that merge in place, which will happen the 15th of December, and then we can move into execution. In some respects, that's been a great blessing, because often CEOs are put under pressure, come in a new role, and they have to get into execution pretty quickly. Like, what are you doing? You know, you're in this role now. So we've got the, let's say, the fortunate luxury of taking our time to, you know, rearrange, put the new organogram in place, new roles, and get the technical team to evaluate everything that we've got. And more importantly, put an execution plan together for next year with a budget. And I'm sure you'll start to see me, you know, talking at these type of conferences, and then a part of our language will be, this is what we said we would deliver on, and this is now what's happened. And that's why we spend X amount of dollars. I think it's important there's accountability for a CEO to show not only the plan and what you expect to get out of it. And of course, there'll always be bumps in the way, always, always. But it's important to you know, show this is the plan, this is the execution, and this is why we've got X amount of dollars still in the bank. I feel very accountable for that. And you've got a lot of money in the bank all of a sudden, you know, either $10 or $100 million. It's not my money, it's shareholders' money. We've got to look after it. So I'm very conscious of that. So I'm saying to the team, let's take our time, let's put a proper plan together that the board can approve before the end of the year, and then we move into execution. And as an example, at Rajapalot, when the frost comes in January, that's the perfect time. We go and then do drilling, right? So we're busy doing all that evaluation now. I just think that's an important message, that you can lose a lot of money just spinning around, and that's not how we're going to run this company. And I know that board will not allow that, and certainly it's not going to be part of how I operate this company. So, and with working with Peter for 25 years, I know that's just not going to happen. So that's 25, and then in 26 we'll obviously execute those plans, and there'll be drilling, you know, drilling programs to look at. There'll be PEAs that we've cut, you know. There'll be work to be done on other assets as well that we've got, you know, and obviously we're very excited about coming on board with Agnico and the Barcelay asset and that. So we're getting our heads around, you know, the size and what that is and how that whole JV works. So they'll be part of that. And I think as well, part of, you know, bringing on now, we've just done this raise, And you can kind of say, well, we've got this 2-year horizon ahead of us now. I think it's important that we're bringing a new type of shareholder onto our register, someone who's looking at this longer term, like I am. You know, I really believe that this is the start of building a gold company, not just a mine. This is not, I mean, we can build a mine at Rajapalot, and that's fine, and we do that, but I think there's opportunity here to demonstrate that to the investor community and actually build a company. I was asked this question, and you know, I've moved from Perth, and some of you have been to Perth. If you've ever been to Perth, particularly for about 9 months of the year, it's a pretty nice place to live. It's sunshine and golf, and you know, help people do bits and bobs, and that's all good. I'm getting about 3 hours sleep at the moment, so that's fine. And I've moved from Perth to London because I want to commit to this, because I want to commit and I want to show people that we're all committed, we're all in. And I've done that because I can't run that from Australia. It's impossible. But more importantly, I want to demonstrate that I'm serious about this. I want to build a gold company. And if I look what's happened over the last 2 months between the team, the raise, the board, the support, First Nordic existing board have come on board with it. They've realized we need to change. We need to make this happen. So there's been a lot of things, alignment of planets. It's all coming together. So it's important that I commit to it as well. So I've done that. And I guess what I'm saying is I think back to what we did at Lionel. And in 1995, I was in Botswana. I think I was 26-year-old then. And Lionel was producing 2.2, like 2,200 tons of nickel a year through dry perm rolls. Well, you roll forward 12 years, and it was producing 95,000 tons of nickel. And it's sold for $7 billion. And we all know here, 12 years goes like that. And I see this company, and I'm sharing my vision. I might be right, I might be wrong, but I'm certainly standing here today. This is my dream. This is what I want to do. I want to build a significant gold company. And this is the start of it. And I think we've kicked off pretty well. So hopefully, I'm going to push for that. That's what's I want to happen. So let's see. Let's roll forward 10 years and we'll see where we are. So I heard the Alamos MD yesterday give his talk, and he spoke about working from a home office with a laptop and and look where they are today. And I stood over there and listened to him. I said, well, it's exactly what we all want to do, and I'm no different. That's really my dream. I want to build a gold company here. So I think we've spoken about, you know, what we want to do, how we're going to do it, the team, the money, what we're going to do over this between now and the end of the year, next year's execution plan, the drilling. There's study work to be done, you know, and all the environmental and the permitting and everything. So we'll put those plans together, and in the new year, when the merge is complete, we'll start communicating all of that news and that work to the investor community. So really, it's kind of you know, we're busy doing all of that now in the background. Now we're aligning the team to, you know, the thought process of execution as opposed to exploring. It's a different company. It's a different mindset. And obviously, with the treasury we've got, it's an absolute different way of thinking about things. So this is a commentary around the transaction. It's in the deck. I'm looking at the time. So, I mean, essentially, we did the raise at 38. It's a 1/3, 2/3 merge. And there's been representation from both companies on the boards. That's why you've got the board as it is now. And that will be completed roughly around about mid-December. It's a process. It's all going to plan. There's been no issues. and we should expect that completed mid-December, which is great time, and that gives us that 2-month period for all this planning and work to be done, and obviously the funds coming into the JV as well. This just talks about where we'll be. So obviously with the attributable ounces at Barcelli and the ounces from Rajapalot, will be up to just over 2 million ounces there, and as a total. Then if you look at Barcelli, this is just an example on a 100% basis. Then we move up to over 3 million ounces, and then obviously all the blue sky. I think it just paints a picture of where this company is thinking and where it's going to go and how it could potentially get there. So these numbers aren't numbers that we've got to look for it or find it. It's all there in front of us, and we've just got to now obviously put this together. So these are some financial matrix. Look, at the end of the day, if you look at our EV and where we're trading per ounce, we're running at around about 75. It depends, because obviously with this gold price, things are changing daily at the moment. But let's just say it's around about $75 an ounce. That's where we are at the moment. You can decide if that's under or overvalued. I've got my view on it, but I know with this merge and other things we'll do, I think there's room for growth and more value to be generated out of this merge with these two assets. So I think that's covered everything, really. I'm looking at the time, so we've got 4 minutes left. But hopefully we've given you a bit of flavour of where we're thinking, what we're doing, how we're doing it, and the opportunity to where we're going to go next. Thank you.
Well, thank you for that. And we have at least one question there, and I'm sure there will be other questions there. But please, go ahead.
I saw on one of your last slides what I wanted to see, namely a cleaner situation with ownership. As it stands, Barcelona is a JV where Agnico Eagle is in the driving seat. It had been much better if they had come in as owners of one company, because now you have to keep Barcelona apart from Rajapalot. I mean, you cannot co-use personnel and so on.
Okay, so currently we're going through, obviously with the merge, you have to look at opportunity for G&A. We're going through that at the moment, so geologists, administrative staff, there will be some, let's say, changes around that. Even in Canada, the administrative functions, we can do that. Look, as it stands now, we're a 45% partner with Agnico, and that's how it is. I think with the money that we've raised and the way that we're thinking, there would be opportunity for the potential to, go and discuss the opportunities with Agnico, and that will all come as we move forward. And then there will be more opportunity for consolidation and efficiency of personnel. So absolutely, yeah, I mean, that would be a very obvious thing to do, particularly when it's geologists and drill rigs. You don't want too many of them, because the one thing they love doing is drilling. So we just got to be careful with that. So yeah, hopefully that answers your question.
We got another question down there, I think. Yes, go ahead.
What is your theory about why Agnico haven't progressed since the PEA 5 years ago on Barcelona?
Well, I mean, look, first of all, I've got to be, my view, I mean, if you look at Agnico, one of the best mining companies in the world, and you look at the developments and the projects that they've been working on and developed and are producing. So I think in terms that they obviously have to, each project has to fight for its own capital, right? That's just how big mining projects, mining companies work. So if I look at Barcelona and then you look at the assets that Agnico have brought online over the last 5 years and where they are today, obviously right decisions have been made. I think Barcelona's just been something that it's been there and it's had to sing for its supper, and other assets have come ahead of that prior to Barcelona coming on, in project development. So, and they've obviously made the right decisions, because $120 billion market cap. You don't get that from making wrong decisions, right? They've done the right thing.
So if there isn't any more, then Russell and Nora, thank you very much. And if anyone would like to have your presentation, what should they do? Should they contact you?
They can contact me. It's on the website, and we're down at booth 92. And I'm more than happy to speak to anybody even after the conference as well. But thank you for your time, and hopefully we'll be meeting you again soon.
Thank you.
Thank you.
Thank you. And now we have a break, and we meet up here for the next speaker, preferably 5 minutes ahead, and that would be a fund manager's view of the situation. Thank you. Welcome back to the last episode of Nordic Funds and Mines. It's with great pleasure that I will introduce the next keynote speaker, and that's Eric Strand, whom I don't think really need an introduction, but he is the founder and let's say the brains behind AUAG Fonder, a very successful fund, not only due to the rise in the commodity prices, but also before picking the right investment. So give a warm hand to Eric. The floor is yours.
Thank you. First of all, I would like to say thank you to Nordic Funds and Mines for having this event, and all the people, technicians, service, everything. Alex, Henrik, Sam, thank you very much. I think it's something special that we are becoming not a club, but a community interested, investing in gold, silver, all other metals, miners. And so that's something new in Sweden. It's the second time we have this event, and I think it's the beginning of something really, really big. And today we will speak about gold and silver, and also a lot about miners, because that's what I think is really the next thing within the space. So let's start. AUAG, Gold and Silver, that's our company, and we do invest in a lot of companies. And we are an asset manager, so we are not a mining company, but we are investing in the mining companies. And this started actually in 6 years ago, almost, November 2019. So it's we have some years, but still a very young company compared to the old asset management companies. But we are also very focused on metals and their properties. Wanted to change this number. It should say 4.9 billion Swedish crowns, because we had a good day yesterday and a lot of inflows. So getting close to the 5 billion mark, and that's in US dollar, a little bit over 500 million US dollars. So growing fast, and also growing fast regarding our investor base. Started the year with approximately 40,000 investors. Now we calculated to 60,000 investors, and growing in Sweden, in the Nordics, especially in Norway, but also getting investors from other countries like Switzerland, as we have them here as well. So what are we doing investing? Our focus is actually on portfolio construction the fund. And this is very important because we are measured against ETFs that are supposedly cheap, but that's what we are compared with. So we really have to focus on the portfolio construction. And this is very important because ETFs in small sectors normally are not so good. So sometimes it's rather easy for us to be better. But it's very important to have the portfolio construction because we hold our companies forever. That's what we want to. And we add or sell, but I will come back to that later. And that's one of the good properties with the fund that we have. It's the ongoing rebalancing. So we have target weights, and then we let them ride, but still when they are performing much better than the peers, we start to sell a little bit. Also the ones that are underperforming, we let them underperform a bit, and then we start to buy. And this rebalancing over the years is rather hard to do on your own, when to sell, when to buy more, to keep the portfolio in balance. Otherwise, for us, it's very important to have liquid holdings, so we can buy and sell, because we have daily inflows, outflows, even if it has only been inflows lately, and a lot of inflows. Very transparent. You can see all our holdings on our webpage. So it's no black box, always fully invested, or at least 9.5% invested normally. And we have low fees, both management fees and low transactions fees, because we are long only. So We're going to focus on our flagship fund, AUAG Silver Bullet. I hope you have invested already. And actually, the last few weeks, not every day, but almost every day, all our 4 funds have made all-time highs on every day. All the 4 funds at the same time. And we did one, of course, today from yesterday's. It's another all-time high for the Silver Bullet Fund. But it has a name, another name, and that's Europe's riskiest fund. That's our tagline for the fund when we launched it. And that was a good tagline. Everybody got interested, not afraid. And maybe we should, actually it's a problem because there is a risk scale for funds, UCITS funds. It's 1 to 7, and we were 7. But they took us down to 6, and we were a bit disappointed with this, that it's not 7 anymore. But they made a new system where they also calculated not just volatility, but they also counted counterparty risks. And we don't have that. So that's why our risk went down to 6. But still, volatility. We are the most volatile fund, at least until somebody launches a lithium fund. I think they will beat us. So I also want to highlight, we have approximately 30 holdings in our funds, 25 to 30. Silver Bullet is 30. And I want to highlight the companies that we have in our fund that are also here at the event. From these 30 companies, we have actually, I think, 8 companies attending the show. And I will start with this one because it's one of our core holdings. We have 4 holdings with 8%. One is here, First Majestic. Keith, you are here. Did we get 11% return yesterday? Fantastic. And we actually bought another 100,000 shares. So we had 2.3 million shares, but now we have 2.4 million shares. And so it's 8% of the fund, approximately 315 million crowns. That's 333 million or 32 million US dollars. I said 30 yesterday, but we bought some and it went up a lot. So now it's 32 million dollars just in First Majestic. Our friends, Aya, are here. Benoit, I see you. Fantastic. So we have approximately half, so $16 million invested in Aya. So we are a big shareholder. Also bought 50,000 shares yesterday. McEwen are also here, 850,000 shares, also at the 4% target weight in the fund. GoGold, 3.7 million shares. They are 2% of the fund. Avino is here, 1.4 million shares. Americas Gold and Silver, almost 2 million shares. And then we have some new ones that we just added last week that are here. Skina and Santa Cruz with 100,000 shares and 1 million shares. But they're only at the 0.5% target weight, so they are small holdings, our little babies, so to say. So this is 8 of the 30 companies. We hope to see even more of them next year, of course. So this is the fund, and had a good return. For some, this is a 1-year return, but this was 1 month, September 25. That is in Swedish kronor. And for the year, it's here it says 105.99%. That was up until the last of September, but now we are in October, so now it's actually 120% in Swedish kronor. So it goes fast, and compounded returns above 20% per year. But here is the difference. I said 105 or 106. In US dollar, it's 146% return. Or actually, after now October, it's about 160% returns. When you compare how much gold and silver went up, you have to take this number, not the Swedish krona number, so you don't mix apples and pears. But here comes what is also interesting for us. As I said, we have to beat the ETFs, and SIL is the largest silver mining ETF in the world. And up until this year, we are 20% better this year. And since the start, since inception, we are 86% better than this SIL. So that was important for us. When we get another institutional investor and they look, oh, you should buy the ETF, it's easy to buy the ETF. Yes, it's easy, but when you do an ETF, the construction of the portfolio gets really strange, and that's why they underperform in the performance. So this is very important for us. So what do we look at? I will try to make it easy. But number one for us is when we look at the miner, we look at the metal percentage, so to say. How much silver do they have? How much gold? How much copper? And then secondly, if there are miners here, we are really looking for liquidity in the stocks because we have to be able to buy and sell. We don't want to have a fund that has a big part that we cannot sell, and then if we get outflows, we have to sell the liquid ones, and we are stuck with the illiquid stocks. That's not a good portfolio management. So for us, portfolio management, construction is really, really important. And so if you can get off the venture exchange, the big exchanges, I know it costs a lot of money. If you can get to the US exchange, that's good. The more liquidity, the better. Because we are growing fast, so we have to be able to invest, and you have to grow there. Another topic here, I want to say to the miners that are on the venture exchange in Toronto, please try to get your shares up over $1. If not, do a reverse split or something, because we are not allowed to buy stocks, low-priced stocks under $1, because it's something that the custodians don't like to see, because it's a space, like in crypto, they start something at 0.0001. It's very easy to get a lot of high percentage returns. That looks good. So try to get the price. Otherwise, you have to buy a lot of shares and the price goes up, but over $1. Then comes jurisdiction. That was very important for us from the start, 2019, where we said we don't want to invest in difficult countries in Africa. We don't want to invest in Chinese companies. That means mining in China and Chinese management. And we don't want to invest. We decided then not to invest in Russian companies. And that was good. But the good thing was that we had the process to do this. We could have said that we should invest in Russian companies, but it's to have as a manager, to have the process. Not like the other many fund managers, they went out, we have sold everything Russian, we are so good, we have sold. But did they have the process to think before something happens? So jurisdiction, and this was important 2019, and of course everybody knows it gets even more and more important. We see different things happen in different countries, and we also see politicians now really fighting for the metals. We see Trump. I mean, he wanted to make Canada a state. He wanted to make Mexico a state because they have metals. He wanted Greenland. He wanted the Ukraine minerals, metals. Congo. So nobody's watching this. I mean, you are, but nobody else. That's what they're out for. It's not the money, it's not the trades, it's not the tariffs, it's the metals. So they are, and let's see when the other people pick up this. Then for us, it's management, really, really important, of course, the history of the management team. Also coming to sustainability, our gold fund is actually the most sustainable gold mining fund in the world. Also our essential metals fund, 2 other funds. And this is not a bad green thing. It's a good thing because we want the companies to care about their people. I know they do. Actually, mining companies are really good at sustainability. When we want to talk with them, they take the meeting. I have been investing in other companies like solar companies. They don't want to take a meeting, even if they have problems with their staff or whatever. But the mining companies, they are really good at this. And we are really proud. Actually, First Majestic even made a video about the social work story, about how much it means for the people who get a job, for their families, or whatever is happening around the mine. So, and what I tell the companies is that if you do this really, really good, you will get more institutional investors. If you get more institutional investors, you will get more money into the stock. And the management, of course, they own stock. We own stock. Stock price will go up, so it's good for us. So it's actually an investment thing to get the sustainability better and better. And this is, of course, a dialogue. This is where capital has the power to talk with the companies. And as we said, we saw the companies before. From nothing, we are, I would say, at least in the top 20, in some companies, top 15 shareholders now. So they are starting to listening. Or they listened before. Or Benoit. Good story with Aya. We were actually the first institutional buyer in Aya at 150. And because we saw the new management and what possibilities that are in Aya. So now we have it averaging up because we have to buy from the inflows, so, but still. So I would change. This will be very, very short, but I won't talk so much about macro. I will show no graphs. So it's a different presentation today. And I have no watch, but how I don't know. Oh, only 4 minutes. I'm going to speed up. So with this, we do really fast. $37 trillion US debt. That's a lot of zeros. 125%. This is the US. Debt to GDP. This is not sustainable. Budget deficit, 7% in the US, ongoing. So there's only one thing coming, and that is more money printing. We are very sure US will low rates. They will have to do QE again to get the long rates down. And this, I mean, we think gold has gone up a lot, but now it will really fly when this starts. So this is just the beginning. So you need to own precious metals. But this theme is not about metals so much, because we will see gold. We heard 4,000, we did that. We see the bank say 5,000 already. The thing is, when do we get 10,000 already? I mean, 5,000 is only 25% from 4,000. And when will we see triple-digit silver, but not just 100, but 300 silver? And I got 3 different years. 2035, if gold just has the normal 10% a year, we will be there, 2035. But I wouldn't be surprised if we get a 2030. And I saw Lausanne said 2030, we will have 17,000 gold. So then we will have 10,000 2028. We shall see. It doesn't matter when it happens, it's just going to happen. But 10,000 gold, that's 2.5 times the price today. 300 silver, 6 times. I'm sure the miners will do 10 times, 20 times, or even more. So the really place to be is in the miners if you're going for the returns. We see a weak dollar. We can talk a lot about that, but we don't have the time, I realize. We see the margin expansion in the miners. They are enormous, and they're getting better and better by the day. And a big thing that hasn't really happened is the rotation of capital from the overbought, overvalued US stock exchange or the bond market. When that capital comes into our market, commodity market, that would push prices really, really high. So you got to be in the miners. What is important here is that the companies have become much more investor-friendly, raising rates, doing buybacks. They're not spending money on stupid projects like they did 2011. So it's a very different environment. So that's very good for us this time. And then there is the double buying. It doesn't matter if people, oh, we don't want to buy the miners, we buy gold and silver. But that's good for the miners as well, because that takes the price of gold and silver up. So the miners win in every case here. And this is my dream one day. And I think First Majestic with the mint, they were keeping the silver until the price is good enough. When miners start to become price makers, like Apple is a price maker, they decide the price of the phone. Miners have been price takers all the time. Very interesting. Also interesting to see that we see maybe different prices on sustainable gold and silver versus not sustainable gold and silver. So a lot of things happening here. So you have to be in the miners. Miners, we are in a world they are unloved, underowned, and undervalued. And this is the perfect place to invest. So you have to be in the miners. And maybe lastly, I think asset allocators that are thinking about adding gold into the portfolio, they don't know anything about precious metals, gold miners, but they start to think about gold like Ray Dalio or the central banks. But the good thing is, if they add miners, we have a 2.7 times return of the commodity. They can use less of their total portfolio to get the same return or effect in the portfolio. So instead of having 10% gold, they can have 5% in our fund or in miners. And they have 5% more to use for something else. I think that's important for smart asset allocators. Equity with low correlation, we're down to 0.2, almost over. And I think when they start to see the opportunity for the returns in this space, that will create massive flows into the equities. So you have to be investing in the miners.
Well, thank you. I think that was pretty straightforward. Now, pressed for time, if there are any questions, you have an excellent booth, which is in that direction. So if you have any details and you need to find out how to invest in all your funds, I strongly recommend you to pop over there. But I think we will thank Eric with a big applause. And now it's time for a little discussion, so prepare yourself for questions, and remember to raise your hand so we can see you, and particularly the boys with the mics can see you. The panel discussion will be consisted of first Nordic Metal, and that's Russell Bradford. So please enter the stage, and you can have you can choose seat. And then we have Arctic Minerals, Peter George. So just pop up here, and Valkea Resources, Chris Donaldson. We have Nora Ahola Mawson, so you're familiar with the stage now. And then last but not least, Ivar Fossum, Nordic Mining Advisor, I should say. So please have a seat. And the topic today is the Nordic mining region, and I will kick off with some questions, and then we will look out here, and you will get the mic. So thank you for joining us here. Now I'm going to first I'll make a short reflection. We have no Swedish managers here. We have one Scandinavian, Norway, and we have one from Finland, but no one in Sweden. That's disappointing, I think. But it's not your fault, it's our fault. And we will come to that, of course. Why don't we understand this sector when we do have the LKAB, the Sandvik, and the Atlas of the world? Well, but first, I would like to ask each and every one of you one thing, because we have seen the macro environment, and we also see that the EU is coming out with one manifesto after the other, critical minerals, and we need to be self-sufficient and so on. But in practice, does it really matter? If we start with you.
Does it really matter?
Yeah, does it really matter? Can you practically say, yes, we benefit from the EU, or is it more local support that you need?
Well, I tap into my experience, and some of you heard my talk before. I've worked in some pretty remote areas around the world, and I look at Europe, I look at Sweden and Finland, and I think what's important for any developer is the rules of engagement, and they have to be understood, and they are the rules, so that's how you got to play. So I've worked in some parts of the world where those rules change during development, or depending on lots of things, right? And it makes it difficult for capital deployment, makes it difficult for shareholders, it makes it difficult for management and the board. What I feel about Sweden, and I just talk about Sweden and Finland, that's where our projects are. I'm very impressed with the infrastructure. I'm very impressed with the understanding of mining in these countries. And we all know that Sweden and Finland, you know, in terms of their risk profile, you know, is very seen in a very positive light. So there's always a cost to do business. It's as simple as that. There's no free lunches anymore, right? But as a developer, I think it's important that our governance is correct. I think it's important that our environmental compliance, our social approach to building these mines. I said earlier, the easy bit's building the mine. We've got to build a mine anywhere, right? That's what engineers do. But it's incorporating that understanding with the backyard that you're in. So I feel very comfortable coming to Sweden and Finland and to understand and see how these countries operate. I'm very comfortable with it, so I don't have a problem with it at all.
And Peter, you're as comfortable?
Yeah, I'm very comfortable. Look, I've been operating in and out of Sweden for 30 years. So I started my time in Boliden as a junior engineer going back into the 90s and come through a period where, you know, we've got the left and the right side of politics couldn't agree on anything. Whereas I think 2-3 years ago, both the left and the right both acknowledged that they love mines, which was a bit of a watershed moment, I think, especially for Sweden. And so I think if you look at the European Union and the Critical Metals Act, I think we're actually ahead of that. You know, we're actually trying to lead the way as far as Europe is concerned.
Yeah, exactly. And when you say we, you refer to the Nordics.
Yes.
Yeah. And Chris, obviously you would agree because you're here, but the finer point here is really the Scandinavians are ahead of EU, so whatever EU will say, we've already done, if I rephrase the question. Would you agree?
Yeah, I mean, we're kind of a newcomer to Finland and northern Finland, and you know, what attracted us to the area was, you know, we're right next to the Kittilä mine, which is the largest gold producer in Europe. So there's a pathway to develop mines. To me, it's what's happening locally that is most important, and then it goes out from there. In terms of the timelines of permitting and the ability to move a project forward, you know, it's okay to have a little bit longer timelines. And you know, in Finland, they have some set guidelines, but at least they're set. And in other parts of the world, you know, sometimes, you know, they may have 2-year timelines, but then you have an extra duty to consult, and you don't want to be confrontational with the locals. So that can get extended out many years, and that has real effect on, you know, obviously your timelines, but also the lack of certainty scares away capital, and you know, that's been very challenging up to date.
And Nora, of course, you're partial here, but if we look, I think you mentioned that you lived in Rovaniemi.
Yes.
Yes, and that is the main hub for the Finnish Lapland. But how do you see that the Finnish Lapland is, well, the municipal, as it were? How do you feel that they support your projects?
Well, of course, we have been working there in Rovaniemi area 15 years now, and the whole team is part of the community, so they know us. We live there every day. It's our neighbors who we talk with, so it's easy. All the decision makers there, they know the project very well. They know the team, which is important. But it's also important to have the government relations, EU connections, because it's always the EU legislation which applies in every EU country, no matter if it's Finland or Sweden. So there are little differences in the national legislations and like the permitting processes. But yeah, I think it's easy when you live there, and you need to show your face every day. So of course you are very transparent on everything you do.
And Ivar, as an advisor, so how much are you advising in the, let's say, approach to the EU?
Well, I'm doing my best as a part of also the Norwegian Quarrying and Mining Association, and now I've been heading Nordics for 19 years now, so just being advisor. I think the push from EU is really important, at least for Norway, but also I think for the Nordics. And I think there's a lot to harvest from the synergies across the three nations. And there has been for many years. There are some value chains with transportation of iron ore, smelting. Boliden is a good example. And I think, at least for Norway, the push is really necessary to get perspective. And EU, I think, if you look at the Nordics in terms of international area, it's a fairly small area. So we should have a common view about it. It should be a harmonizing of the laws, and the picture is just not great. I mean, there is still more and more appeals. It still takes time, and even though the constitutional risk is very low, I mean, you have your rights, they stick. But there's still a lot of political risk in our countries, and we see that the NGOs are extremely clever in nurturing the narrative that mining is bad and we don't need it, and they mix in the climate effects and many different things. So I think the EU push is important.
And I think that's a good segue to my next question. It's like we rehearsed. But coming back to your presentation here, Peter, where you touched upon this. So how well do you think that the public understands the mining industry? Because you're actually there with mud on your shoes and trying to persuade the local authorities. Obviously, if you have the support of the government, but then you need to persuade the local authorities and perhaps the local inhabitants. How well do you think we understand this industry?
I mean, I don't think we understand it well as an industry, but each project is different in some respects and depends on where you are. I mean, we're operating down there in Dalsland, for example, and they haven't had any mining for 150 years. So the old guys are long gone. But I mean, Sweden especially, it's no matter which way you look at it, we're a socialistic bunch. We have our rules and our processes that we follow, and everybody is allowed to have their say. So you have to keep that in mind as a mining company or an explorer when you come in, and you have to listen. You can't just go over the top of the people here. You have to take into account what they have to say. You have to do your homework with regards to what the flora and fauna looks like, what the culture looks like, and as I said, it's different in every place. But you then have to, as part of the process that we go through, understand how we could potentially impact on all of those things, and then explain what it is we're going to do about it as we move forward.
And then coming back then to what Ivar said, then obviously you're up against some big boys then. But Russell, you just had a presentation about the merger here. So how well do you think that the Swedish investment community understands mining? Because it's quite interesting to see. Let's say, if I express myself a little bluntly here, foreigners taking over Swedish assets and merging with a non-Swedish company. It makes perfect sense, but why haven't we done that? So how well do you think that the investment capital in Sweden understand this? And beware, you have them here.
Yeah, thanks for that question. Look, I mean, there's an opportunity here. Look, what I've seen of the Nordics, and again, getting back to my experience where I've worked and operated, there's a time and place to bring skills into a country, but I think the Nordics, Sweden and Finland, you guys get mining, right? You've cracked the egg, you know how big a mine is and you know what it has to be done and the investment, the capital, the skill requirements. I mean, Nora's a big part of what we need to do in this part of the world, to be quite frank with you, because, you know, my skill set, I've got to learn how to operate here. I haven't done anything here before, but luckily we've got Nora on board. So we have to take that all on board. And I think what we have to do as foreigners is demonstrate that we're good corporate citizens. As we do in other countries. you'll never build a mine if you don't get that right. I know that. You know, one thing I've learned is just respect where you're working, and we have to spend a lot of time understanding that, because the mine will come. And if it takes a little longer, that's so be it. But we have to integrate with all of our stakeholders, because if one is not happy, it's not happening. It won't happen.
And integrating with all the stakeholders, and I'll turn to you then, Chris. Is it easy to integrate with the stakeholders, EI, the institutional capital? I have a feeling that it's difficult to get the big funds on board. It's not only a question of market cap, because they're happy to blow the money on any IT startup here. And I can say that because I'm Swedish. But
so is the question: is it hard to get
institutional capital?
Institutional capital from the
when
Nordics?
You knock on the door, do they open and say yes?
Well,
very interested.
It's getting better. You know, certainly the last 8-10 years have been very, very difficult, especially for smaller companies. This last year is dramatically different from it was a year ago. And the example, I was at a conference in Denver that many of us go to last year, and I was hat in hand, begging, hustling, trying to get some money. And then this year, you know, I had every banker there saying, "Oh, how much money do you want? You got to raise it now. It's out there." So the funds have done well. We saw with the last presentation, they've had some tremendous success. And those who predominantly invest in producers, when they're overweighted in producers, then they'll start trimming that, and it comes down to the developers and juniors, and that's happening. And I think, you know, we've had a few blips along the last decade, but I think, you know, it looks like this is going to be a sustained run here, you know, driven by fundamentals that haven't been there in a long time.
And if I turn to you then, Nora, and coming back to Finland, as you have in your back pocket there, do you find it easy to attract investments, retail or financials, into Mawson and the Newco?
Well, yes. I would say we have been very lucky with our shareholders. We know them all very well. They are long-term shareholders, very steady. Most of our money comes from Europe, actually. So I think when you know your investors and you have good shareholder base, it's also easier to attract more and more also Nordic investors, because they follow you, they see what's happening, how you're doing. So I'm very happy when we did the IPO with the Mawson Finland. It was a few days' time, and we were able to get investments from almost 100 different Finnish investors.
Okay.
So it's not bad. But yeah, you need to be able to present what you have there in the background and who are your supporters.
If I could just add to that, there was a study this year put out by the Fraser Institute that ranked Finland as the #1 mining jurisdiction in the world. And some people poke holes in that study, but it got a lot of attention to Finland. Jurisdiction matters, and when you get that kind of endorsement, it allows people to be more comfortable to invest in the region. And Finland is getting a lot of attention now because of that.
And if we move westwards to Norway, then Norway is full of capital, or risk capital, I would say. But in my humble opinion, that would be more focused on oil, the oil industry and the shipping industry. So as an expert in the sector and in your country, where do you, is it risk capital or is it long-term investments that will flow into the mining?
No, you're right. There's not a lack of capital at all. There's almost too much capital because you don't have the commercial drivers to actually establish new mines in Norway, and the investment sector is really small. The knowledge of the mining sector between the investors is really low, so they have to be educated much more. So there is a lot of potential there to grow, I think, and also when you look to Sweden and Finland. there is still a lot of juniors that are struggling to get risk capital to they are down there, they had to stop exploration. So we had to face that. There is a lot of potential if there are more educated investors that see the potential also in the small juniors, I think, coming across. And coming back to Russell's point about the local communities, I think we have to realize that we are doing social development along building a mine. So we have to have that empathy with the local community, and in our societies, a lot of the authority is actually pushed down to fairly small municipalities in terms of zoning plans and so forth. And if they are not your partner, you're dead.
Yeah, and that comes back to one of the reflections that we had a previous speaker here saying that also a non-Swede working in Canada, where they would say that one of our problems would be that if we are in Canada or somewhere else, you can go to the local community and say, okay, well, you know, we can build the road for you, we can build the kindergarten or what have you, but that isn't really doable in Sweden. Am I correct there? You're nodding, Peter. You agree with me?
He has to answer. Look, I think that's fair. I mean, you know, and we've studied this a lot with regards to our projects as well. I mean, you have to be extremely careful. I mean, you can go in there with the attitude of, yeah, look, let's sponsor the football team, or let's buy this road or this thing, but it's to a large extent that's also can be considered as bribery in some aspects in our society here. So you just have to be extremely careful with the way that you approach those sorts of things. And there are ways to ensure that, you know, as a company that we want to invest in the communes that we work in, you know, but you have to ensure that the money that goes into there is shared on a viable way that doesn't necessarily benefit one or two individuals more than anybody else. So it's just a trap for foreign players, I guess, to ensure that you just do things in a socially acceptable way.
So you're trapped a little bit as any politician that likes to invest in the infrastructure or a hospital. You don't win an election on that, one could argue. But so what can you do as an industry to improve, let's say, the attitude in civil society here? Because obviously we have the legislation, which you all are very much in favor of, the infrastructure and the knowledge, and you have the equipment and energy and so on. So it must come down to, let's say, the public opinion and the investors' opinion. So let's go for the public opinion and then perhaps the investors. So Russell, I come to you again with the tricky one.
Well, look, you know, there's nothing better than demonstrating, right? It's one thing saying we're going to do X, Y, Z, but you've got to demonstrate your action to your communities. You know, I remember the one project we did. We had to bring this equipment in. We were building that, and we had to bring this equipment in, and the truck came over the bridge, and the bridge collapsed, and it was just a mess. And anyway, and of course the community, like, well, what have you done now? That's cut off the light. We can't get to this. We can't get to the market, and all this kind of stuff. So I say, well, we have to not only communicate the plan. It's important. A stakeholder engagement map is so important. There's different messages. There's different frequencies of that message. There's different kind of underlying message in there, right? So there's a time and place to talk about certain things, and a big part of how we put projects together is with a stakeholder engagement map. You know, the Prime Minister wants to hear one thing, and the mayor of that town wants to hear something very different, right? So we have to, it's fine to say that we've done a route map and we're not going to drive over that bridge. Well, don't drive over the bridge, because if you do and it collapses, the community's going to say, you guys are jokers. You're not doing what you told us at the town hall meeting. So we have to, our actions have to be followed through. So there's a lot of planning, there's a lot of understanding, engagement, and then execution. If you've only got one chance at this, so just get it right. So, you know, you learn these things, right? And the one thing you learn is before you execute, do reconnaissance, because it's 90% reconnaissance, 10% execution. That's my view anyway. So get that right. And if you get that right with your local communities and your stakeholders, everything will be fine. But get it wrong once, well, you got to backpedal, and then that's time, that's money, that's reputation, and then that's the thin end with the wedge. You don't want to go there, so it's important, right? Just get your vision and your planning correct, and then everyone will be on side.
And if I turn to you then, Ivar, as an advisor, if we can get an advice for free here, when it comes to the public approach, what do you think can be done? And also, may I ask, do you think we need a different approach for the different countries? Although an outsider may see the Nordic as Nordics, whereas I'm as a Swede would see the difference between Finland and Norway and Sweden.
Well, first a general comment. I certainly consent to what Russell says, and in general, I think we have conveyed the message to the community and also public, the little bit the evolution of building a mine. In terms of there is so much need for capital, and you can easily get a stamp because you're running around and you're trying to finance things, and the perception of you can be different. So I think people need to understand the evolution, how to build a mine. And the other thing, an example from Norway, specifically regarding legislation, a small municipality doesn't really know what the outcome will be in the future if they're hosting a new mine. Because most of the income tax goes straight to the treasury, yes, and they get something back. So my proposal would be that some of the income tax should go directly to the municipality. So they have a predictable regime. They know what happens if they build a mine within their boundaries. Today, it's a little bit kind of a game for them. So that would be my very, very specific proposal for Norway. I don't know exactly how it works in the other countries.
What would you say, Nora?
Well, yes, I think when everything is predictable, it's much better for everyone. But I see when it comes to exploration and mining, I remember when I started with the project over 10 years ago, everybody was already expecting the mine to be there in a year or two. So it's kind of, you need to educate the local people, decision makers, everybody on their own level. What is exploration, what is mining, where we are heading, and how certain we are that certain things will happen or not. And if I think about like the communities, the municipal level, people change there. There are elections every 4th year, so you need to start all over again. And it's kind of constant work, keeping everybody updated where we are at and where we are heading to. And but yeah, I think the more predictable it's for everyone, it's more easier.
And that's interesting because it's in your own backyard, so to speak. But Chris, you're not that Finnish, are you?
No, I'm a third Norwegian, though.
Oh yeah, okay. But so what do you experience as let's say the most difficult? When obviously you tend to agree here, but in your communication.
Yeah, a couple things. So I'm based in Vancouver, and recognize that we don't have somebody on the ground. We employ Geopool, who does a lot of this for us, but we've just hired a country manager who's, as Nora said, they see every day, and which is important. But I agree with what everybody said here. The only thing I would add is, the industry has gotten a lot better than it has, over the last 20 years. If you had this conference 20 years ago, we wouldn't have this panel. And I think, I'd like to think we're modern miners. Our history, I ran community relations for a big project up in the Yukon. It's the first thing you do is consult with the local peoples and understand, what might benefit them and what their concerns are, and you lead with that. And you try to get ahead of any potential issues before it happens. In Canada, in fact, it's mandated that you have a duty to consult. And I think most people, even in northern Finland, where you don't necessarily have that duty to consult with the Sami there, we do it anyways to get ahead of it, because it's probably the main thing that could stop a project. And so I think we're improving, but at the end of the day, what Russell said, we've got to demonstrate it now, whether we're having kind of a new wave of projects moving forward.
So you are a pleasant surprise to the to the Finnish Lapland inhabitants there when you knock on the door. Peter, I know for a fact that you've been very busy with the local municipal at Hennesberg or Henneviken there. Do you think that you get good mileage for the effort, so you get the support? And would it be more of the same going forward, or will it be? Are you so to speak done with the communication?
No, I don't think it ever ends as long as we're there. You know, when we're potentially talking about a multi-decade project there, so that's most important to get the groundwork done right from day one. And we've spent a lot of time talking to both the federal politicians and the local mayors. You know, and it's most important that we. And I think I've had in the last year probably 3 or 4 catch-ups with them, and I think I even have another one tomorrow with one of the mayors, just updating them on what we're doing. You know, we're hopefully we've just finished a geophysics campaign over there. We had an MMT survey with a helicopter flying over the top with a probe hanging 50 metres below it, which. You know, for most people that have never seen anything like that in the mining industry, it looks a little bit like an atom bomb, I have to admit, and it can be a bit scary for some people. So we did a big campaign and made sure that we had a big meeting with all 4 mayors, and you know, we sit over the top of 4 communes, which makes it quite complicated. But we also went out with a big information campaign to the local people, and even went so far as to contact the landowners with horses, just to make sure that they weren't scared by the helicopters coming over the top. So, and I think that went down really well. So, you know, and hopefully that will set us in good stead for when we start our next drilling campaign in a few months.
So even the small things matter. And I'll turn to the audience here. So if you have any questions, please raise your hand and we'll deal with those. Feel free to open. And while you consider your questions, I'll just ask the panel here. I mean, it's interesting to see First Nordic and Mawson. We have a merger and consolidation here. This is the start of something. You can get the feeling of that. Obviously, Russell, you're part of the part in that discussion. So obviously for you, it's pretty natural that there will be a consolidation going forward. But Ivar, as a Nordic mining advisor with many years in the industry, would this be the golden age for consolidation among the miners? Are we entering that now?
Well, I'm not so sure, but there is we're moving in the right direction, and I think conferences like this is really a good contribution to have the perspective and to have people to meet. And at least speaking for Norway, we should be very humble. We have a lot to learn in this business. Okay. I mean, it's a reawakening. The sector has been almost virtually nothing, very, very few mines. And different in Sweden and Finland, you have big technologically companies, institutions, you have bigger mines. So it's a different aspect. So I think we have a big upside in Norway.
And Peter, you mentioned, because you were asked the question, what's your end game? And obviously you said that, well, it takes a while to go from a developer to a producer. Do you think that there will be consolidation among the miners, as it were, or will the big boys knock on the door?
Oh, look, it's a very small market here. There's not many players. And we've had 50 years of underinvestment in exploration in this part of the world, which is disgusting in my opinion. But that's what's happened, and consequently, there are very few new projects coming along. So, you know, in one respect, that gives me as the executive director of one of these companies gives me a massive advantage, because I have things that I know that bigger boys want. So, you know, fantastic from my point of view if they come along and would like to take a part of what we have, but we're in no particular hurry either. You know, we think we have a 5-year window where we can add a huge amount of value to the company, take us all the way through to construction ready. And we also know that in 5 years' time, there's going to be 10 companies lining up, knocking on our door. So.
If you look at the recent merger that we heard of today, Russell and Nora, what kind of timeline do you think that we should look at as investors here? We're talking about 5 or 6 years, or to the next step, or are you preparing, or do you think that the industry is preparing for something to happen more rapidly? I just get the feeling that we're on a tipping point here.
Well, look, we can all get excited about the gold price, right? And whatever, right? I mean, and is that in my control? No, it's not. So I've got to focus what's in my control. And if we've got $10,000 an ounce gold, is that going to make my timeline any different? It's not.
No.
I've got to do the work. And, you know, you've got no choice. You have to do the environmental monitoring. You have to do the seasonal monitoring. You have to do the stakeholder engagement. And then all of the engineering work. And by the way, you've got all the drilling and the compliance to pull out a feasibility. Can you fast track that? I've been doing this for 30 odd years. Probably not. Because some clever guy's going to come knock on your door from the banks one day and say, where is that study? Well, we're clever and we didn't do it. And they say, well, that's why you're not getting that 300 million to build your bank, because you haven't done that correctly. So you've got to tick the boxes, right? And we know the script. So I think you've got to be careful you don't get ahead of yourself, right? It's all great, and you know, I've been in the nickel game. Well, we all know what happened in 2008, right? I've been in the uranium game. Well, we all know what happened in 2012. So now we're in the gold game. So I look at these things it's great. I mean, it's lovely. All this money's coming back into mine. I was in Canada 2 weeks ago. What a difference. There is money everywhere. I mean, last year it was tumbleweed. It's changed. It is so changed. And, you know, we've all seen it before, and our company's no different. You know, we've got 80 million raised in a week like this. You've got to be careful now. Your discipline on capital management is more and more now important than ever. You've got to demonstrate to investor and stakeholder community you are a responsible company deploying capital for the right things. You will not, regardless of any commodity price, change your runway to get into development. So, I mean, someone said to me in Canada, so, you know, with this gold price, 2028, 29, going to be production. Like, no, we can't. It's going to take 2 years to build the mine anyway, so we can't do it.
That's true.
So, yeah, let's not get ahead of ourselves with these commodity prices. Great time to be in mining, but hey, we've got our work to do. So I don't know what the rest of the panel think, but that's my view on life.
Anyone disagrees? But you touch upon one thing that I thought was interesting. You referred to in Canada, and there's a lot of money floating around here, and also the banks would like to have something. But do you finance yourself with the local banks here? You're not Swedish, some of you are Finnish, of course, but you are operating here in Scandinavia. But are you financing? If you go to the bank, would it be a Scandinavian bank, or will it be a Canadian bank, or Australian bank where you have your connections? So we start with Chris here.
To date, I haven't. You know, we've raised our money locally through our connections in Canada and a little bit in Europe. But I'm hoping to change that. I mean, this conference is a good example. I mean, last year it was about maybe half the size, half the investors here. This year, you know, it's a tremendous response. It's been a fantastic conference. The best sign for me is I'm seeing funds that were in other sectors that are now coming in. Generalists are coming in, they're branching out. It's also, you know, expensive to travel back and forth. But as we move forward, certainly, you know, our project resonates with Europeans, and I'd love to have a balanced shareholder registry.
Mm. Yeah, and one of the best things to do that is to be listed in the Swedish market, as you are. Peter, any comments or thoughts on knocking on the Swedish banks?
Yeah, well, look, we're a Stockholm-listed company. We are a Swedish company, so it's. Our investors have changed as we've moved through the different milestones over the last 12 months. I mean, we've raised about 40 million. I mean, when we started over a year ago, it was a lot of Australian money, and that's morphed into a significant percentage of Swedish money and European money. But we're also moving now into probably a bit of a larger investor type as well, getting more and talking to the banks. I guess one negative aspect of that is I don't think the Swedish banks really understand the junior mining sector. If that's the answer you're looking for, that's an education process that we have to go through to educate our investment community, but as well as the banks. The Swedish banks have had a good run on the tech sector for the last 10, 15 years, and some of them are still stuck in it, if you ask me. But I think that will change.
So I think the key point here is that you still have a lot of education to do on let's say the local on the local ground and on the institutional side and also on the banks, and it's just started, so this should be very interesting to see. Well, we're out of time, so I thank you so much. I think we give them a round of applause. Thank you so much. Thank you. And thank you. Thank you. Thanks. Thank you. And it's high time to introduce the next speaker here. It's Uranium Energy Corporation. And we will have Bruce Nicholson, Vice President for Corporate Development, if I'm not misinformed. Welcome. The stage is yours. America's leading, fastest growing uranium mining company. That says a lot, so please tell us more.
Thank you so much. Thank you kindly. We'll be making some forward-looking comments today. Please spend some time with our disclaimer. We are the leading U.S. uranium company. We're positioned as the only vertically integrated U.S. company, all the way from mining to conversion, soup to nuts. You can see to the right here are 3 key U.S. processing plants. We have Eskay. Let's see if this works here. Maybe not. Eskay is in Wyoming, Hobson's in Texas, Sweetwater's also in Wyoming. On the bottom, you see our world-class Athabasca Basin project. It's called Rough Rider. We're going to cover that in a bit. So we have the largest licensed production capacity in the United States of America, 12.1 million pounds of U3O8 licensed capacity. And we're building for end-to-end capabilities. On September 2nd, we announced the launch of U.S. uranium refining and conversion to advance our nuclear fuel cycle. We have a strong balance sheet, $321 million in cash, inventory and equities at market prices, 100% unhedged price exposure. So recently we put out our 2025 year-end results and highlights. You can see this was a breakthrough year for UEC. The most important metric is low-cost production was achieved. You can see a total cash cost per pound of $36. That includes $27 non-cash costs. The U.S. ISR production ramp-up is in full swing. The Christensen Ranch expansion in Wyoming is happening. We have 2 new ISR mine units constructed. And down in Texas, in South Texas, we have a project called Burke Hollow. It's America's next ISR mine, and we're targeting a December 2025 startup at the Burke Hollow project. And this establishes our 3rd U.S. hub and spoke platform with the accretive acquisition of Rio Tinto Sweetwater Complex. Oh, you want me to stand here? Yes. Sorry about that. And we've also managed to vertically integrate with our recent UREC spin out. So here's some of the year-end highlights from the most recent results. $321 million in cash, inventory, and equities at current market prices. no debt, 66.8 million in revenue, and 1.4 million pounds of production in the drum. Here's a very important chart. This is demand for uranium exceeding production. You see here the WNA projections. That's the dotted blue line on the top of this chart. The projected production is in green. So even if you lose the base case, which is the black line, you see right now we have a pretty significant gap in this market of about 51 million pounds. That could get as much as 1.75 billion pounds by 2045. That's using WNA base case. That does not take into account some of the recent press releases regarding tripling of global nuclear. There was a global pledge to do just that, triple global nuclear by 2050. This happened at the most recent WNA event in London, England, where 31 countries basically pledged to do this. That's 140 plus leading companies, including some of the biggest utilities in the world, 14 of the biggest banks in the world. And as you can see, domestic uranium has really taken center stage with some of the big announcements that many of you have seen coming in from the tech companies, the hyperscalers, Amazon, Microsoft, Meta, NVIDIA. It's a who's who of tech, all wanting and needing nuclear fuel. And this is in keeping with President Trump's executive orders to build out the nuclear power base in the States. And these are some of our partners, including Terra, Department of Energy, and Radiant. This is probably the most important slide in terms of understanding how we got here as a company, in terms of making bottom of the cycle acquisitions to create the largest footprint in the United States. It goes back to 2017 when we first did the Rio Tinto, or I should say Reno Creek acquisition back in 2017. That got us into Wyoming. And if you look in rapid succession, 21, 22, 23, 24, we did pretty much a deal a year. And you can see by the flags, 2 of those were in the States, 2 of those were in Canada. The Uranium One deal in particular really put us on the map. That put us into Wyoming with a processing plant. UEX and Rough Rider were 2 significant transactions in Canada. We'll get to Rough Rider in a minute. And Sweetwater, that was our most recent acquisition in Wyoming. If you look at the largest publicly listed America's focused portfolio, you can see where we stand versus our peer group, and this asset base in excess of 500 million pounds. That's measured, indicated, inferred, and historical versus the peer group that you see to the right. How does it shape up? To the left, you will see Wyoming and Texas. To the right, you will see some of the projects that we acquired through UEX and Rough Rider, Eskay Creek, Millennium, Horseshoe Raven, Christie Lake. Also, a couple of hard rock projects in Arizona. That would be Anderson and Workman Creek. Again, 4 hubs, 3 of them in the States, 1 in Canada. All very much ramping towards a 4 million per year production capacity. That's Irigaray in Wyoming, Hobson in Texas, Sweetwater also in Wyoming, and Rough Rider in Canada. And this is the recent launch of United States Uranium Refining and Conversion. We launched this September 2nd. And as you can see here, we have the capability to move now vertically in the fuel cycle. This is a little bit about in situ recovery, how it works. It's really just drilling water wells. Here's the Irigaray Central Processing Plant. This is what we acquired from the Russians. It's in production. It's got 4 million pounds per year licensed production capacity, 4 fully permitted projects, 17 satellite projects. You see the ones that have stars are the ones that are fully permitted. That would be Christensen Ranch, Moore Ranch, Reno Creek, and Ludeman. A photo inside the plant. Aerial view of the Irigaray Central Processing Plant. You can see a little bit of what it looks like with our logo, the U.S. flag demonstrated proudly, some of the plant infrastructure. We recently had a production milestone at Irigaray, sort of a proof of concept, if you will, 130,000 pounds of precipitated uranium for the fiscal year ending July 31. Again, the cash cost came in extremely competitive, $27 per pound, 36 all in, including non-cash costs. Some photos of Irigaray, Christensen Satellite, and some stuff from the field. Sometimes people will ask, well, how are you going to feed Irigaray? What are the key projects in the portfolio feeding into that processing plant, that central processing plant? It's three, really. It's Reno Creek, what we acquired in 2017, Ludeman, and Moore Ranch. Reno Creek is probably the most interesting of the three by virtue of its size, 26 million pounds M&I, 1.5 million pounds inferred. It's 50 miles by road to Irigaray, so it's quite close to be processed. Ludeman, a bit smaller than Reno, 9.7 million pounds M&I, 1.3 million pounds inferred. And there's engineering underway for the plant facility. A little bit further away, 120 miles by road to Irigaray, CPP, and Moore Ranch is the smallest of the three, also about 120 miles from the CPP. Here's the Hobson Central Processing Plant. We acquired this pre-Fukushima, again from the Russians, 4 million pounds per annum licensed production capacity, 3 fully permitted projects, 5 satellite projects. You see the ones with the green arrow, Goliad, Burke Hollow, and Palangana have those permits in place and they're ready to produce. You can see here the construction progress at Burke Hollow, aerial view of the plant. Burke Hollow is 90% complete. It will be America's next ISR mine. It's positioning for a startup in December. Just under 11 million pounds measured, indicated, inferred. We have the construction of the IX facility pretty much done and the columns. So we're looking at December production coming out of Texas. We'll have Wyoming and Texas producing simultaneously at that point. Moving over to Sweetwater, this is another processing plant that's going to happen. 4.1 million pounds licensed production capacity, 6 satellite projects, 175 million pounds in historical resources. You will see an Eskay 1300 report proving up those resources in the future. And here you see what the acquisition of the Wyoming assets from Rio did for us in terms of creating a third hub and spoke, accretive growth, the land package, and significant scarcity value. A little bit more about Sweetwater. It is the third hub and spoke. Recently, the president put into line Fast 41. It's a permitting advancement that would take a permit that would normally take 5 years, and we can do it in a year. So for Sweetwater, it's very important because, as you can see here, Sweetwater is going to be hard rock mining and ISR mining. That'll advance that ISR permit in a year's time. And here's just a footprint of the map. Moving to Canada, to the Athabasca Basin, we're scaling up in the world's most prolific uranium mining district. This is truly the elephant country. After Cameco and Orano, UEC controls the largest base in that region. It's 109 million pounds M&I, 68 million pounds inferred, and 1.14 million acres of land. And you can see from the graph where we're situated in the basin. The Athabasca Basin, that is. Rough Rider, truly world-class project. You can't say enough about it. Pre-feasibility has commenced, subject of the one and only bidding war in the uranium sector. Back in the day, Rio Tinto beat out Cameco. They paid $640 million. They put $90 million into the asset. We bought it for $150 million, buying again at the bottom of the cycle. Great economics to talk about here. You're going to be producing 6.8 million pounds per year off of this asset. That's 61 million pounds life of mine, 9-year mine life. And as you can see, the EBITDA gets very interesting. Even if you keep prices at the same level of around 85, that still throws off almost 400 million of cash flow per year. But if you get back to all-time highs around 150, that EBITDA rises to 730 million per year for that one world-class asset. We're very excited about the leverage to the uranium price that Rough Rider possesses. And you can see here some of the technical metrics of the project. There's other growth prospects here in the portfolio. We picked this up from our acquisition of UEX, Christie Lake being one of the situations we're very excited about, 20.35 million pounds of uranium there. Also, Horseshoe Raven is a project that we're very keen on, 37.43 million pounds of indicated resource at Horseshoe Raven. Strong JV partnerships on some of these, Cameco, also Orano in there, in the case of Millennium owning 15%, in the case of Eskay Creek owning 48.1%. And we're also at the forefront of Sustainalytics. We have a good score, an ESG rating of 23.8. You can see that ranks quite high, medium risk. UEC at a glance, this is just some key metrics to consider in terms of the share price. Some of them are lagging the big rally we had this week. You'll see now that some of these metrics, well, for example, if you look at the average daily value traded, you see about 100 million USD a day. We did over 200 million yesterday. In terms of where the stock is, you see 13.05 on October 6th. We closed at $14 yesterday. We raised money at $13.15 with Goldman. We put away 200 million. We have no debt and a great capital structure. And the team. We have to talk about the team just a bit. Great world-class team from left to right. Amir Adnani, CEO, founder, sits on the World Nuclear Association board. Spencer Abraham, former Secretary of Energy, Bush administration. Scott Melby, he is the president of the Uranium Producers of America. He is also CEO of Uranium Royalty. Brent Berg ran Cameco's ISR in Nebraska and Wyoming, over 20 years experience. And Donna Witchers, who worked for the Russians, worked for Uranium One as COO for many years, a technical expert in the field of uranium. And this is just some of the pipeline that we possess moving forward with some of our other projects. We're very keen on, especially the ISR production platform to the far right. As you can see, that represents a 12 million production base in terms of pounds. And kind of wrapping it up, we're going to just leave you with a couple thoughts. 12.1 million pounds of combined U.S. licensed production capacity. That's the key takeaway. That's from the 3 hub and spokes in Wyoming and Texas. And you have the Rough Rider project, which is a world-class asset coming online with a pre-feas by the end of the year. Strong balance sheet, no debt. Stock's at an all-time high. We have great sector fundamentals behind us. And with that, I'm going to give it back to, I guess, the moderator, and we can go from there.
Yeah, so let's have some questions. Thank you for that.
Oh, sure.
And if you stand here, then the camera will be able to catch you.
We can stay right here.
I have to expose my ignorance here, because when it comes to uranium, how is the price set?
Yeah, the price set is, let's talk about the spot market versus the long-term market. So historically, the long-term market has dominated. That is, let's say a contract you would sign with a utility would represent, let's say, 80% of the market. The remaining 20% of the market we would place into the spot market. The spot market, it can be anyone. There's nuclear fuel brokers, there's utilities buying and trading. Japanese trading houses are quite active in this market, and even uranium producers themselves. If you have a production shortfall and you need to deliver, let's say, to a utility, you might go into the spot market, grab 500,000 or 1 million pounds so that you can deliver as per a contractual agreement you may have with a utility.
Okay.
It's basically an 80-20 split.
Okay, and I think you answered one of my questions here, and I'm looking out. So you can sell to anyone? There's no restriction on the buyer?
No restriction on the buyer. We pride ourselves on being 100% unhedged in our book. That is to say, we don't have any commitments because we really want to give our shareholders the most torque and leverage to the uranium price. You'll see some of our competitors do it a bit differently. They'll sign contracts with ceilings and floors. We're not big advocates of that. The last thing our shareholders want and need is a ceiling, so that if the price of uranium goes back to all-time highs, which we believe it will happen in this cycle, we want to make sure that there's no ceiling preventing our shareholders from reaping those benefits.
And we have a question here, please.
Could you please enlighten me on any difference in profitability between hard rock extraction and the in situ extraction?
Excellent question. I would say the reason that UEC is in business now and producing in Wyoming is actually, it points to your question. The difference is that most ISR producers, including UEC, can operate profitably at a production cost around $27 cash cost, which is our cost, and it's very similar across the ISR landscape, perhaps a bit lower in places like Kazakhstan because they can use acid leaching and some methods that are not permissible by Western standards. But overall, in order to get that price signal to really do hard rock mining, which is not being done as much as it was in the past, you really would need a minimum of US $100 a pound, but many say even closer to $150 a pound, because the extraction costs of hard rock mining of uranium, particularly in the western US, can exceed very easily $75, even $100 a pound, versus $27 cash cost per pound for our ISR operations in places like Wyoming and South Texas, which is a proven technology. It's been around for 50 years. We just put out our first fiscal results. We believe you'll continuously see those type of numbers moving forward. I hope that answers the question.
Could you elaborate a little bit about competition here? Because this has been a sector that's been, really in the dog room, and all of a sudden it's a global revival here. So you need authorization to mine, I take it, and it takes time to get the permit. So. Who do you compete with? Do you compete with anyone?
Yeah, so in terms of permitting, the good news is many of our projects are fully licensed and permitted already, and the ones that are not, the good news is, for example, we just acquired some assets from Rio Tinto, which are called Sweetwater. That's also in Wyoming, by the way. We believe that could be coming online in the next 2 years. But that's a great example. The old regime, pre-Donald J. Trump, that could take upwards of 5 years to receive an ISR permit to mine ISR in the state of Wyoming. Trump has come in, completely overhauled permitting. He's created something called Fast 41. Fast 41 takes a 5-year permitting process, narrows it down to a year. He's been basically taking a blowtorch to all the bureaucracy in Washington, D.C. He's shuffled up the NRC. He's making bold moves to move these projects forward. And not just in uranium. He's making big moves in rare earths, lithiums. He's the most pro-mining president since Herbert Hoover. Okay. He's been great for the sector. We haven't had a president or an administration cared about mining like this man in many, many years, maybe 100 years. So we're just ecstatic at what we see in the U.S.
And you raised capital, and that was easy?
Yeah, you know what, easier than we thought in a market like this, with our good friends Goldman Sachs leading the deal. We put away $200 million about a week ago at US $13.15 a share. And guess what? We closed at $14 yesterday, all-time high close. So the market certainly endorsed that transaction and the use of proceeds to move our efforts into more vertical integration in the fuel cycle. You'll hear more about that, by the way, in the coming weeks when we put out more press releases about that.
And I know you mentioned no debt. Is that and a strong cash position? Is that by necessity or by choice?
Yeah, we have many opportunities, and our peers have taken advantage of many opportunities. As you know, the convertible bond space is on fire. Some of our competitors have put away big convertible bond raises. Many of our competition have convertible bond debt. We prefer to be a bit more conservative than that. We believe in having a debt-free balance sheet, and we're a very liquid stock, and we have a very tight capital structure. We've never done a rollback, so it's worked out well for us.
Yeah, it seems like you're ready for the future here. And you mentioned that we will get more information on the financial side. So is that what you want the market to look for in the near term?
Yeah, I would say before year end, let's say by Christmas, you'll see updates on UR&C, the refining and conversion effort. You'll see an update on the Rough Rider project in Athabasca, on the pre-feasibility study, and perhaps even some more comments about how Sweetwater is going in Wyoming. So those three big key areas.
So it will be a busy space.
A busy space for sure.
Yeah. All right, Bruce, thank you so much.
Well, thank you so much. Great event.
Yeah.
Quick question.
We'll give you a great applause. Thank you.
Quick question here. Sorry, I had a...
And now it's time to introduce our next speaker, who I believe is in the room, yes. So NexGold Mining Corporation, it's Kevin Bullock, I take it? Yes, please enter the stage. NexGold is strategically positioned to become a mid-tier gold producer, if I'm not mistaken. And how this is going to develop, you're here to tell us about. So please, enlighten us.
Thank you very much. Good afternoon, everybody. I'm happy to be at this event. It's my first time here, and it's a fantastic event so far with some very productive meetings. I'm going to tell you today about Canada's most advanced gold developer. And this was put together with a vision by a fellow named Frank Giustra, who's built many mining companies, of let's build the next mid-tier mining company by putting together single asset companies that weren't getting much attraction and building one project after the other of a pipeline of projects to become the next mid-tier, as opposed to trying to build one big project that sometimes is multiples of your own market cap for the capital of the project and difficult to maneuver. So this was formed with a couple of M&A in the last year. One was to put Black Wolf Copper and Gold together with Treasury Metals. Treasury Metals has a 3 million ounce deposit in northwestern Ontario, and Black Wolf's main shareholder was Frank Giustra. So it was putting an access to capital through Frank Giustra and his network, together with the first asset of what will become a pipeline of projects. Within 3 months of that being accomplished, NexGold acquired Signal Gold, which had another 3 million ounce deposit in Nova Scotia called Goldboro. So really, starting in this January, it's a fairly new company that has access to capital, 2 partially permitted projects in Canada, over 6 million ounces of resource, over 2 million ounces of reserve. Each of Goldboro and Goliath have 100,000 ounce a year potential for production. And this has been recognized by a private equity group called Appian. And last week we announced a royalty sale on Goldboro, which is the project we will build first, for $24 million US, a 2.9% royalty, of which we can buy back 1.9% for $29 million for 3 years. Quite a good deal for us. They did 7 months of due diligence. That sounds like a lot for an NSR. However, what it comes with is a letter of intent for $175 million US project finance for the Goldboro project. So that's the debt component that's required to move Goldboro forward. A little bit about management and board. Our chairman is Jim Gowans, quite a big name in the industry. Jim was CEO of Placer Dome, CEO of Barrick, CEO of De Beers, very well-known name in the space. We have Andy Bowring, Rob McLeod, Margot Noddy, who used to run the Canada Pension Plan investments into mining, strategic advisors with Frank Justra and Sean Kunkun. A little bit of my history. I started out as a miner in the 80s, got injured, went and got my engineering degree to do something where I wouldn't break my nails, and ended up on the operating side of a few mines. And then when, about 25 years ago, started running companies. And I was sent to Africa, to Ghana in 1994 for NexGold Corporation, which was private. We signed some joint ventures with Anglo and Ashanti and took it public the next year in 1995. That was a success. I was asked when I came back to Canada, I was asked by a couple of individuals to find an asset for a shell company called Fox Point Resources. And we negotiated the purchase of the Macassa mine and mill. And I moved to Kirkland Lake to reopen that mine. We changed the name to Kirkland Lake Gold. That was quite successful. I started my own company called Volta Resources, which I took public, and drilled off the largest deposit in West Africa at the time called Kiaka in Burkina Faso. That was sold to B2 Gold in 2012. I'm still a director of B2 Gold because of that sale. That mine is now built and producing 350,000 ounces a year. I then permitted a mine in Nicaragua, which is now in production, called Mako Mining, and saw the assets that were at Signal Gold at the time, which is now NexGold, and thought this is the next one that actually can be financed and built and really show true value, moving it from a 0.1 NAV to a more than 1 times NAV over the next 2 years. Capital structure, Frank Justra owns about 7%. Management owns 3%. These management's holding is, there are no founder shares. This is all purchased on the market or through financings. 45% institutional, and the retail is 45%. I would say half of that is high net worth families, et cetera, from Europe, mainly Switzerland. 3 analyst coverage with a 4th soon to happen. Our current market cap is around $280 million, and I think when I go through the Goldboro project, you'll see that we will be producing that in cash flow annually for the next 10 years. We have $8 million in cash, and last week with our royalty sale, we have used that money to pay off our debt. So we're debt-free with some cash and 2 quality projects in a great jurisdiction. So these 2 mines, both feasibilities were done on both, or at least technical reports, a pre-feas on Goliath and a feasibility on Goldboro, and they were done about $2,000 to $2,500 ago. One at $1,600 gold, one at $1,750, and the NPVs at a 5% discount of each were $330 million. At today's price of gold, they're well surpassed $1 billion value each in NPV. The Goldboro project is in Nova Scotia. One of the things, the most important thing for a project in Canada to have is a signed agreement with the First Nations. We have the first of its kind signed agreement with the Mi'kmaq of Nova Scotia, so there's no First Nations risk at this project. We have received the Crown land lease, the mineral lease, and 6 weeks ago we received the industrial approval, which allows us to construct. That was a big deal for us. About 6 weeks ago, the stock more than doubled based on that permit. The government made a big deal about it in provincial government in Halifax, Nova Scotia, gave us our permit and invited all the news agencies to show that they're open for business and investment. They haven't given a permit in 5 years. We're the first. So we have the permits, we have the agreement in place with the First Nations, we have a site on financing for project finance, and we have 3 million ounces, of which 1 million ounces is reserve. Community, we have a mutual benefits agreement with the community as well, and no opposition to the project. So the feasibility, which was done in 2022, shows an all-in cost of $850. That would be the lowest quartile at the time. With inflation and what we will do is update the feasibility study by the end of the first quarter next year. We believe that number will be closer to $1,200. So at today's price of gold, that's a $2,800 margin on 100,000 ounces a year. So that's why I say $280 million a year of cash flow US, so much more than our market cap annually. The 271 million initial capital is probably going to come out at 375. So with the 175 million facility from Appian US, which is 240 Canadian, a $50 million contract for equipment with Caterpillar, and 10 million in the bank is 300 of that 375 million. So we'll need to raise about 75 to 100 million of equity and be fully financed, fully permitted in Canada with the highest grade undeveloped open pit in the Eastern Canada. Since then, and not part of the plan going forward yet, is the extension to the west of the current 3 million ounces. We've discovered that this ore body continues 700 meters to the west, and we will have a new resource that includes that in inferred. We think it's going to be another 400,000 or 500,000 ounces of open pittable material, which is, as you know, another few $1 billion worth of gold. And we're just hitting the same type of intersections as we hit east of the, this one does this. So this line that's here, everything east of that line was Crown land, everything west was private. It took us 3 years to acquire the ground to the west, which is why it wasn't drilled in the past. The mineralized fluids, when they formed, they didn't know there would be different types of land ownership, so it just continues to the west. Underground, there's another 1.7 million ounces that isn't in the current plan at 6 grams per ton. When we incorporate an underground scenario combined with the open pit, it doubles the NPV. So it goes at $1,600 gold, it went from 330 to 660 million. Today it would go from over $1 billion to over $2 billion. That underground is not included in the plan because it's currently inferred, and it needs to be tighter drill space to become measured and indicated. We will do that out of cash flow once we start mining the open pits. It doesn't make sense, and it's not a good use of capital at the moment to drill deep holes. The Goliath complex, because this is not going first, we have 2.5 years. We will not build 2 projects at once. So while we're building Goldboro, we'll be optimizing Goliath and exploring further. It's another project that looks like a 100,000 ounce a year producer at similar costs. So that will be something that we work on over the next 2.5 years. The main asset of Goliath in northwestern Ontario is the infrastructure. It is on the Trans-Canada Highway with power running 300 meters away from one of the pits, a power line through the entire license, 3 open pits comprising of 3 million ounces of gold, of which 1.3 million ounces is reserve. And we plan to build that as a second project. And during that 2.5 year period of optimizing Goliath, building Goldboro, we'll have an M&A strategy to pick up the third project and keep rotating, one in construction, one in permitting, and one being acquired until we become that 400,000 or 500,000 ounce a year producer. Goliath, similar thing, low cost producer, 100,000 ounces a year. Today's dollars, $1 billion NPV again. Yes, our costs are going to go up from the previous feasibility studies. Costs have gone up quite significantly, but the production margin, and this was done just a little while ago, and gold is still $500 an ounce more than this chart shows. So things are moving quickly. I think projects that'll develop quite quickly, and we plan to start construction second quarter next year. And it's a 22-month build. So we will be producing gold, hopefully at these types of levels, very soon. As far as valuation goes, when we received our final permit, our final provincial permit in Nova Scotia, our stock went up 150% to 0.24 times NAV at $2,000 gold. there's two boxes of developers that we see. One box is the developers, and there's many of them that people believe will never, ever develop for various reasons, and they trade at a 0.1 times NAV. There's another box of developers, like the Skinas of the world, that people believe will get developed, and they trade at a 0.6 or better times NAV. And we're moving from that 0.1 NAV to the 0.6 NAV box by getting our permits and showing that this is real. So we've got a long way to go to get there as far as price movement and uplift. But when built in Canada, this project would be 1 or better than 1 times NAV, which would be $1 to $2 billion company. So there's a long way to go for us. We're investors in and we believe that this is a great investment, why we invested in ourselves. I think when you put it all together, we have projects in a good jurisdiction. We have alignment with a willing government, a willing First Nations, a willing market, a high gold price, and a shovel-ready project in 6 months to build. So I'll leave you with the key investment takeaways, which is, here's the next producer in Canada. There will not be a coup, we hope, when it's built, and the mine won't be taken from us from the government. It's a great jurisdiction to be in, and quite a large delta between operating costs and the price of gold. I'll just leave the rest of the time for questions. Thank you very much.
Kevin. So we have the mic here if we have any questions, and I will open up here with one question and expose my ignorance, if I may. The merger between NexGold Mining and Signal Gold, and I quote now, resulted in an enhanced portfolio diversification, as we could see here, but also with operational synergies. But if I understood correctly, you're taking one step at a time. So could you explain the operational synergies?
Yeah, so the synergies are when you're a single asset company, our original capex for Goldboro was $271 million. Now it's $375. One of those differences is going from no capital for an equipment fleet to capital for an owner-operated fleet. And the reason for that is, as a single asset company, we couldn't get the attention of the Caterpillars and the Komatsus of the world, so we were going to go contract mining. So the synergies is that there's room for us to grow with these with funds, etc., for a similar mining project where the Caterpillars of the world will give you, financing for the fleet, knowing that there's more carrots further down the road. The other thing is, Caterpillar 10 years ago would want you to put 25% down for surface mining equipment, 50% down for underground equipment. Today, they're talking 10% for surface equipment, and in some cases 0% as long as you sign long-term contracts for maintenance, parts, and spares.
Well, that's interesting because that's partly answer one of my questions. I've been curious why no one in this industry see any major signs of inflation, and one of the reasons has been that the oil price isn't going through the roof. And here it seems like Caterpillar needs you more than you need them if they lower the terms. Am I right in that?
They haven't seen the uplift yet that they were expecting with this explosive price of gold and more people coming into this market, which is a small market globally, mining market. So they're incentivized to. They're basically giving you the phone so that they can charge you for the minutes that you use, by giving you the equipment, because then signing maintenance contracts and long-term parts gets their equipment in use and gives them revenue for that they don't otherwise have.
And in your slide portfolio overview here, you had a gold price assumption of $750 for Goliath and $1,600 for Goldboro. And we now have a current price above 4,000 here. But as you are ready to shovel up the gold, so to speak, could you give us a feel for the leverage of your operations? Because if I saw the cost on your slides here, it's like 800 or something like that. Can I be so simple so I would say it's 800 minus 4,000 that you will make a profit?
No, because I think that the 800 was in 2022. I think that will become 1,200.
Okay.
with inflation and extra costs that are of today's costs from 2022. So the difference between 1,200 and 4,000 is that delta that you will see on 100,000 ounces a year.
And am I right in understanding that you have the environmental approval needed, and you are on speaking terms with the First Nation?
So at Goldboro, we have a signed agreement with the First Nations, and we have all of our permits. And in Goliath, we have our environmental permit, but not the agreement with the First Nations yet. We're in the middle of negotiations now. So the benefit of starting Goldboro and Goldboro being ready is we have 2.5 years to get all the rest of it done and optimize the project, which is important because rushing to get something done maybe isn't always the best for the project. So time to look at it as a whole, because it's 3 open pits, and understand where the infrastructure should be that benefits the project best, which in turn benefits shareholders.
And this may be a cheeky question, but I'll bring it on anyway. So given the fact that you're focusing on getting gold out of the ground on Goldboro, and you're more or less working with permits and preparing Goliath, and Goliath is neighbor to some of the bigger boys here, would there be any ongoing discussions about divestment or investments? Or?
Well, the only ongoing discussion I can tell you about is that we have another project in Alaska, which is a polymetallic project, and we wish to sell that to the benefit of our gold projects. As far as other companies, I can only comment that projects that have permits and have First Nations agreements in Canada, projects that are ready to be built will catch the attention of others. Size is always something that's important. So 100,000 ounce a year producer, the reason we chose that as a size of various projects to become the next mid-tier is because it doesn't really push the needle on a major. They wouldn't want to acquire 100,000 ounces a year. And we're not interested in selling. We're interested in creating full value by building it. We've positioned the company with its employees that way. What that means is we're not for sale, but if someone pays us too much to build it, it will be sold.
It's a good negotiation start to say we're not for sale.
Correct.
Well, Kevin, an absolute pleasure.
Thank you very much.
So we give him a round of applause. Thank you. And without further ado, it's time to ask Don Turvey, CEO of Cornish Metals, to enter the stage. Please. Cornish Metals is a dual-listed mineral exploration and development company, and you're working to re-establish domestic supply of tin for the United Kingdom, which in then ancient days were a big producer of tin. So this would be very interesting.
Yeah, thank you very much. Yeah, thank you, ladies and gentlemen. Thank you for staying on this late hour of this conference. So, yeah, very excited to share with you. We're going to be the first mine to restart tin mining in Cornwall. At the height of mining in Cornwall, there were 2,000 mines in Cornwall. The last one closed in 1998, which is South Crofty. This is the mine that we're planning to reopen. It was basically, at the time of closure, it closed because of, not because they ran out of tin, but because of the price. As the price was less than $5,000 a ton, today we're over $36,000 a ton. So a major difference in pricing. And again, gives us the opportunity to restart mining. We're sitting there with existing infrastructure, and but let me talk you through it. So we are based in the southwest of England, of the UK. A lot of mining has taken place over many years. We're 100% owned by Cornish Metals. We permitted with existing mine infrastructure, and I think that's huge because that creates the opportunity to become like a brownfield project rather than greenfield. We're basically within reach of roads, rail. We literally can see the sea from the mine. We have, the plan is to produce a low impact underground operation where we're going to take all the tailings underground, so we'll be no tailings on surface. Huge environmental, economic benefits to the community. We've commissioned a water treatment plant in 2023. So we're cleaning the water. The Red River is no longer red, it's now clean. And obviously the impact on the community as the project kicks off. We're one of the highest grade projects in the world that's not in production, and I think I'll show you as we go through. And we see a lot of upside potential going forward. Some of the key milestones: we acquired this project in 2016. In 2021, listed on AIM, raised £8 million, started with the exploration work. In 2022, raised £40 million. Vision Blue joined us as one of our strategic shareholders, Sir Mick Davis. We've updated the mineral resources, completed a PEA, and that's when we built the water treatment plant. In 2025, we raised £57 million, anchored by the UK's National Wealth Fund, which is the UK Investment Bank. When they came on board, Vision Blue stood their corner, but that enabled the company to bring the project nearer to production by funding some of the key capital items. It also provided us the runway through to Q1 of 2026. We're busy with existing work streams, including the dewatering of the shaft and shaft refurbishment. We're doing some early project work, so we're essentially already in execution phase, placing orders for long lead items and advancing our engineering studies. This just gives you an idea of the quality of this resource. We're just around 1.5 or 1.6% tin. The size of the resource there is a bit of a underestimating really what's in the ground there. That's really what we have in our mineral resource estimate, and I'll show you later that that bubble could grow at least 3 times that. We recently published our updated PEA, shows a very robust economics, £180 million of NPV, 20% IRR, average EBITDA of about £7 million per annum, very strong margin, over 60%, capital just under 200, but a very short payback period of 3 years. So we're planning to produce about 4,700 tons of tin in concentrate between year 2 and 6, and there's a reason why we talk about 2 and 6. I'll show that a bit later. Essentially, we're a very low operating cost, all-in sustaining cost of less than $14,000 a ton. And again, reminder of where the price is at the moment. The plan is to employ about 300 people, permanent, high-skilled people, well paid, with a further 1,000 people that will be impacted in the community, indirect jobs. Because mining has not been, there's been a demise of mining in the UK, we have to do a lot of the training ourselves to bring people up, the local talent. Although they're willing, we have 350 people on our database that want to come and work on the mine. But we need to do the training, and we're planning to do that, as we go along. At the moment, we have 80 people on site, 40 of them miners that we've trained up, and they're busy doing the shaft refurbishment. This picture just shows the cost curve issued by the International Tin Association, and you can see us there in the orange bar there, basically situated in the first quartile of the cost curve. And I mean, that's the only thing as a miner we can manage is the cost. The price, unfortunately, not in our gifting, but important for us to stay in that first quartile of the cost curve to maintain those margins. Historically, the mine were able to replace every year as they went along. And we just took the last 25 years of the mine life. In 1974, they had about 3.5 years left. And remember, those days they didn't drill, they basically mined. the loads. By 1997, there were 4.6 years left. So they managed to replace everything they mined and managed to push that mine life out there all the time. So we see this trend continuing as we go down here, and I'll show you some of the, just from a layout perspective. So the red line there indicates our mining permission area. It's about 5 kilometers by about 4 kilometers. The orange is what we're planning to mine. And you can see the loads are basically open on strike and at depth. We did an extrapolation case which we published last year, and it shows we can easily double or even treble the life of the mine. So obviously that's key for any investor. Currently where we're at, we're now halfway down the shaft. We've basically dewatered and refurbished the existing shaft, and this photo on the right-hand side is a pumping chamber that we opened up. Now that chamber was developed in 1950. It's been underwater for 30 years. It's intact. We literally walked in there. We did put in extra bolts, but really for things to hang on. The pumps and stuff that's in there, because the water is not acidic, it's pH neutral. We're literally going to take those pumps out and get them refurbished and reuse them again in the mine. So we're busy with that pump station refurbishment. We're starting with the excavation for our process plant. We're busy building on the right-hand side bottom. We're building workshops and stores facilities. We're upgrading, our existing change houses. Some of the near-term things that we're planning to do is advancing our project engineering studies, some early project works, continue with long lead items, for the underground and for the process plant. And obviously a key thing is secure project finance to bring it into production. Our indicative timeline to bring this into production is mid-2028. And the key aspects there is obviously the refurbishment of the shaft, building the plant, some underground development, and that's really because we're changing the mining methodology from conventional to mechanized mining, and we're busy putting in ramps between the different levels. We have access to 500 kilometers of underground development, and we expect them to find them in exactly the same condition as the chamber I just showed you. Just a little bit about tin. I think tin has been the best performing base metals out there in the last couple of years. If you look at the bottom left, you see just the forecast for tin from the International Tin Association. The blue basically indicates new production. That's essentially saying we need about 12 South Crofties to fill up the shortfall that there will be. We're not sure whether all of that can come into fruition. There's already a bit of a shortfall. So the supply side of the market is very, very tight. You can see the base load supply is tapering off. On the right-hand side there, a lot of people are not that familiar with tin. A lot of people, when you think about tin, you think tin cans, but it's a lot more than that. In 2005, the EU banned the use of lead for soldering, and instantaneously the market for tin doubled. It's now 53% of the market. And if you look at the future, you can see just the impact that, if I can just turn to the next one, just some of the interruptions that we had in the supply side. Basically 80% of all tin comes out of China and the East, and only 20% out of the rest of the world. This is from the pure metal. But from a supply perspective, we've had major interruptions with Myanmar. There was a ban for 2 years for mining. They're busy starting up, but it's been a slow start. Indonesia, I think they've been in the news. They just closed 1,000 tin mines, and they're very small. and they've basically taken over all the smelters that was handed over back to government. In the DRC earlier this year, we had some conflict and there was a supply stoppage there for a while. At the moment, we're really sitting with this very, very tight market, a bit of an undersupply, and going forward, there's a real concern whether the supply will stay in touch with the demand. So in summary, we're sitting here with the highest tin grade asset that's currently not in production. We permitted. We've got support from our local community. I've been in mining 40 years. I've never seen the level of support that we have here in Cornwall. This is an existing mining jurisdiction. People are used to mining. In fact, the only question we get is, when do you start? Very much support from the local government. The UK government is now bought into the project and very supportive. We believe we can produce a project here at the low end of the cost curve. We've got good economics. We've managed to put together a very strong team to not only build a mine, but also to operate. Most of our senior guys have got 30 years plus experience in this type of mining. We have a lot of potential to increase the size of this resource, as we said. And I think the key is here, we're in a market like tin, undersupplied. So this bodes really well from a margin perspective. And I think we basically going to be the first major producer in Europe for tin, and even potentially in the northern hemisphere. So thank you very much.
Well, thank you, Don. Very interesting and a little bit exotic to hear about tin in the UK on a conference like this. I will expose my ignorance, as I have done consistently during this conference here. But you said that the UK government is behind this project. Would that, let's say, is that necessarily depending on who is in the government, or is there a broad agreement on the fact that you need tin and you will get the support?
I think the fact that we fit with the critical mineral strategy of government and their plans for obviously net zero, we fit that bill. And the fact that the economic development, the Southwest has been known for being depraved, and so with all the mines that closed in the past. So this is really the first one that will bring some development and some excitement in that area. So I don't think it's linked to the current of the government. This is a policy that was there. They basically just added cash to the pot. And I think they're sitting with 27 billion pounds. So this is very small in comparison.
But so basically what you're saying, there is an argument for any side of the aisle in the government for supporting Cornish metal and tin production, particularly in Cornwall and that area. Very interesting. Do we have any questions? Yep.
First of all, Cornwall was a producer pre-Roman days, I believe, so it's a long time. Could you expand this? I mean, I think there were hundreds of tin mines in the old days. Could you expand this surface area that you may mine considerably?
Absolutely. I mean, we're sitting with our mining right area is about 1,500 hectares. We have mining rights for 15,000 hectares. So we have other opportunities outside our existing area. And I think these hub and spoke model here is really going to come into play. We're going to be the first tin concentrator that's going to be built. And I think that could attract not only from ourselves, but even from others. And many others already approached us and say, listen, if they produce something, can they bring it into our concentrator, because we have the permits to build them. So I really think this is going to be like a catalyst for other developments. And obviously we have our own plans to grow organically in the area.
So it will be a busy space.
Absolutely. You
mentioned here also on a slide that EU is not producing any tin here.
No.
So who else can deliver? Who would you compete with?
Well, I don't think we compete with anyone. I think there's enough space for all of us in the market. There are obviously projects in the EU. That's currently in Germany and in Spain. They're a little bit further maybe behind from a development perspective. But yes, there are other projects in the EU that come on board, and obviously in other parts of the world, and mostly in Australia.
But even if there are other products, there are not that many in Europe. That's very interesting. Do we have any more questions here? I think you said you raised £40 million with the UK National Wealth Fund. Is that correct?
Well, we raised 57 in the last raise. Of them, they brought in 29 million.
Okay.
So yes.
And to us who doesn't know the UK National Wealth Fund, it sounds like it's a governmental.
Yes, it is.
Is that a way of showing that they support you? And does that come with do they own shares in you or? No?
Yes. Yeah. So it's an equity.
Okay.
They have an equity share. So they own 29% of the company, or sorry, 28 point something. It's the UK Investment Bank. So yes, it is government funded, but the way it's operated, it's very much like a commercial bank.
Okay.
And we found them very, very, the approach, the way they approached it was very, very rigorous, and but also flexible. So we have one member of the National Wealth Fund on our board.
Okay.
So they are represented there. But they're not involved on the technical side. They're really just as a shareholder.
Well, Don, it's been a pleasure, and I think we thank Don and the Cornish Metals with an applause. And they're looking forward to see the development.
Thank you.
So our next speaker here would be from Amex Exploration. It's a junior exploration company with high-grade gold discoveries in Quebec. And it's my great pleasure to welcome Victor.
Thank you. Thank you.
The stage is yours.
Great. Thank you very much for attending. And like you said, this is really it's a high-grade story. So I'm going to start with number one. Is really it's like in real estate, it's location, location, location. And why do I say that? You're in the Abitibi Greenstone Belt, where this is us, where this red star is. The Abitibi Greenstone Belt has produced over 200 million ounces since 1901. It's one of the most well-endowed areas in the world for gold production. Now, not only are you in the middle of the Abitibi Greenstone Belt, you happen to be right beside a town. Our project is 5 kilometers from this town. It's an old mining town. You have a hydroelectrical transformer station right there. What you're seeing over here is an old tailings dam. The reason we show this is where community can live very well right beside mining. This has completely been rehabilitated, and houses have been built up right against it. And these houses have been built up after the fact. So just to show you that mining and communities can live friendly together. Our core shed is actually it's a former curling rink. We didn't take it away from the city. This was an abandoned curling rink. We took it, we rebuilt it, and on the inside is it's a really nice core shack. This is Kelly Malcolm. He's with Borealis right now. He's sitting right there. So let's talk about the gold now. Let's talk about now. I told you everything about location, everything about infrastructure. And also, just 23 minutes south of us, there's another town. It's called La Sarre. There's 12,000 population. That's important, is because where are you going to get the workers, and that's where you're going to get a workforce. Casa Berardi, which is, if I'll come back to this is where Casa Berardi is. And Casa Berardi, the majority of their employees all come from the town of La Sarre, which is 23 kilometers just south of us around there. Now let's talk about this resource. This is a really fantastic resource. You're looking at a total of 2.3 million ounces of really high grade. You're looking at over around 5.4 grams per ton. Indicated and measured, you have 1,615,000 ounces at 6.14 grams per ton. That is really high grade. And within that, you also have what we call the Champagne zone. It's got 831,000 ounces at 16.2 grams per ton. That is more than half an ounce. That is really spectacular to find that. And it's not only just the high grade, it's the fact that it's high grade, you're beside a town, you're beside roads, there's water, there's electricity, and the deposit does not encroach any living fish, like it does not encroach any rivers, streams. It's really being built on dry land. So post that resource, we did an economic study on it, the PEA. And what we did, we de-risked the project in the sense we've done it in two phases, a phase 1 and phase 2. There's another phase just before that, which is also what we're going to be doing is we've sent in permits for a bulk sample. Now we'll go over the numbers on the PA. So the phase 1, we're contemplating it's a 4-year, 1,000 ton per day, low capex on this. It's $146 million. There will be pre-production revenues of $68.6 million. But now we're talking about average annual production for those first 4 years of 102,000 ounces. Because it's so high grade and because of where it's located, this is where we were able to ask the engineers, okay, I want to produce at least 100,000 ounces a year. Find me the lowest capex to start producing at least 100,000 ounces a year. And this is the solution. You have a capex of $146 million with an all-in sustaining cost of $1,165. You know, if you take at $3,200 gold, which I think now it's about $800 lower than that, this project would be making more than $2,000 an ounce. On 100,000 ounces, that's more than $200 million US. Convert that to Canadian dollars, that's over $280 million a year. It's a really spectacular project. The first 4 years will pay off for everything. And then there's phase 2 where we'll be increasing it to 2,000 ton per day. When you look at some of these numbers, it's really spectacular. Your pre-tax total cash flow, look at that number. It's $5 billion. That's $5 billion. Let me underline it where it is. It's right here. And then when you look at your NPV, again at $3,400 spot, it's $1,841. I've had questions asked to me, well, you know, $2,500, $3,400. What happens if gold falls? So what happens if gold comes down to $2,000? Well, the answer is right here. When you look at $2,000 gold, what's wrong with a 2-year payback? What's wrong with a 47% IRR? Post-tax NPV at $659 million. Take that number, divided by 146 million, you're around 4 to 1. That number is very important because a post-tax NPV over your capex, normally 2, the project passes. 4, it's a great number. We have 7 at 2,500. It'll be 4 at $2,000 gold, and at $3,400 gold, it's going to be 13 times. And this is where I say this is really a project that's really special. I'll show you the development plan. So when we look at the first number, the PA update. So we just put it out. We put that number out on September 4th is when we released our numbers. All this is all on our site. Then we said we're going to do a bulk sample. The important thing here about the bulk sample is that we're going to be constructing, it's going to be a production size portal, decline, above ground infrastructure. It's all going to be production size. And that's key. That's really important because when you do get fully permitted for phase 1, you're basically going into production. Like, so when you look at this, for example, this is our environmental to get all our authorizations. This is pretty precise. So in mid-2028, under normal circumstances, you're going to be permitted, and then you have to do construction. But now, because we've done We've done here. We're expecting our permits for our bulk sample. We already announced it that we've applied for them. We're expecting them by the end of this year or first quarter in 2026. It'll be 15 months of construction, and after that you get it out. Now we've applied for 40,000 tons. The number that we expect to get will be anywhere from 20,000 to 40,000 tons. You're in an area where it's fully diluted. You're at half an ounce material. We're going to be producing in late 2027 either 10,000 or a number between 10,000 and 20,000 ounces. You look at the price of gold today, even if I have to back up a bit, it's $5,000 Canadian an ounce. That means we'll end up generating $50 million to $100 million in revenues. So it's quite substantial revenues we'll be getting. But it's not just because of the revenues. It's really because of permitting. The minute you're permitted, you can start straight into construction. You don't need to wait 18 months anymore. I'm going to show you a picture of the Champagne zone. So the Champagne zone is pretty much a vertical body coming straight down, and it starts here at 75 meters and goes all the way down to 1.4 kilometers. There's no missing stopes. It's going to be production right through. This is a mining engineer's dream where something comes down it's almost vertical. It's between 85 and 89 degrees because as you're ramping, you're able to ramp properly. You don't have to start drifting over. The Champagne zone is so rich that it'll end up paying for everything. Like even zones like this. This is from the Denise zone that's beside it. That under normal circumstances that would not be economic. You would not be able to get it. Here you'll just drift over because the Champagne zone has already paid for everything. So this part is really it's the development plan going forward. Now we still want to continue exploring. We do believe there's going to be a lot more ounces to find here. So all the ounces and all the economic study I was talking about, it's in this area here. All the gold is right here of everything that we've talked about so far. That's 45.6 square kilometers. In the month of March of 2025, we acquired along the Greenstone Belt, we acquired another 152 square kilometers. That's now we have a total of 197 square kilometers, and we're still working on getting more land inside this Abitibi Greenstone, in the middle of the Abitibi Greenstone Belt, along the Shakobee Deformation Zone. So there's definitely a lot of blue sky potential going forward. And the way we've designed it is that get into production as fast as possible. And this way you can continue exploring, you can continue making an aggressive exploration programs, and you're doing it with the least dilution possible. One of the reasons we picked up this land on this other side is there's our structural geologists believe that there's a mirror image of the Beaupré block on the other side. The age of the rocks is pretty much the same thing. This is 2724. This is 2725. Looks pretty much the same. There was sonic drilling that was done on this property back in the 60s. 6.79 grams per ton, 4.79 grams per ton. What's important is sonic drilling is really an exploration tool that leads you to drilling. You're basically going over the overburden and 1 or 2 meters in bedrock. When you're getting these kind of numbers in bedrock through sonic drilling, it's very impressive. It's really something that it merits going in there and doing more work. We're currently doing work there. Sometime in 2026, we'll probably start a drill program. We're fully financed. We just raised $37.25 million. 25 million of it was flow through. 12 or 13 million of it was in hard dollars. And Eldorado, they went from 9.9% to 17%. They were 64% of the financing, of the last financing that we've done. And just to show you that area, the high-grade zone, we've drilled this all the way down to 1.4 kilometers. That's where we defined it. We did drill a hole down to 1.6 kilometers. That's just to show that there's continuity. When you look at this area here, it's not because it thins out, it just hasn't been drilled. So as we continue drilling it, drilling deep is really, we can do that later on as we're drifting lower, and then we're going to be able to drill. What we've done, we've really defined it. Even going to feasibility study now for phase one, we don't need to do any infill drilling. The drilling on the Champagne zone has pretty much been done, been drilled out properly. Just to show you also the kind of grades that led to this. This is the Champagne zone. When you look at these kind of numbers, 102 grams per ton over 6 meters, 29 grams. That's almost an ounce per ton on 8.4 meters. When you look at these numbers, these are really fantastic numbers. Even 84 grams per ton over 5.6 meters. This is what really led to being able to put this program in place and advance it. The other thing that's really important when you're going to be mining is, okay, so how's your metallurgy? The metallurgy is fantastic. We were in lab, 3 samples. We were able to recover 99% recovery in both gold and silver. What's really important, we don't include any of our silver numbers. This is all the numbers that you've seen here is only gold. There is some silver. We will report it. It's not material. It's still almost 1 million ounces of silver that we have so far in there. It'll flow with the gold, so it's going to be free. Now, 99% recovery. In the study, we used 95%. That's just for the Champagne zone. That's that high-grade zone. It's basically free gold. This is for the rest of the zones. Now, here, what's important is here. These numbers here, again, if I'd have to average this, you're probably around 98%. Again, for the study, we used 95%. The numbers that you see on this side, this is the recovery of the silver. So, I mean, maybe it's 60, 70% recovery on the silver. Again, it's free. It flows with it, and that's the recovery of silver in the other zones. In the Champagne zone, both gold and silver, we were able to get 99% recovery in lab, but we're expecting around 95%. That's going to be coming in from there. The town of La Sarre, that's just 23 minutes south of us. Again, just to show it, it's 23 minutes south of us. It's a full town, 12,000 residents. The deposit, I was saying, I'll show you an overview of the deposit. This is really dry. The laydown is going to be right here. That's where the portal is going to be built. That's where the decline is going to be built. And again, like I was saying, where the development is, there is no water. The only water that you see here is on this side, and these are basically swamps. It's dead water. There's no fish. And I think that's it. We're 5 minutes for questions.
Yeah, that's fine. Well, thank you, Victor. Very interesting and invigorated, I would say. So if you have any, we have one question down there, but. As we walk around with the mic there, I was just going to ask you, how did you manage to get the Perron project? Because I think there's been a long time. There was an option, 1996, and then something happened.
Absolutely. It's been in the company. So this company used to be called Coleraine before. It's the same corporation, and they changed it to Amex Exploration. Our former chairman had made multiple discoveries. One of the discoveries was in Peru. So basically, this project was left alone. It was, basically not much. We showed up in 2016. I really liked it. The fact that Agnico was there. So there was a lot of, where there's a lot of smoke, there's usually a fire. We financed the company, and then we made the discovery, and it's been history since then. We've actually invested $125 million that went into the ground. That's not counting the $37 million that we just raised now, and that all went. That's $125 million in the ground.
But it's interesting to have an option from 1996. So you have a question down there?
No, it's not an option anymore. We own the property.
Oh, yeah,
100%.
of course.
Yeah.
I have a rookie question. So you showed an MPV. Is that the way I should value the company, or should I look at challenges as well, or should I just compare the MPV to the market cap?
Well, so NPV. What's important is to bring it. Look, I can tell you there's projects. The reason I actually like using the NPV because I'm bringing it back to today's dollars. And when you look at a company with a capex of $146 million, and you're able to generate NPVs depending the price of gold you're using, whether it be 2,500, you'd be at $1.085 billion, or 1.8 billion. It's definitely one of the metrics. You can also use a PNAV. Like so we're basically trading. If I use the $3,400 gold, we're basically trading at 0.2, which it is fair because we haven't completed our feasibility or started construction. But the minute you complete your feasibility, the minute your feasibility is ready and you start construction, that number should get to 0.8 and maybe even higher. We can do it also. We can do it also on a PNAV. And what's important also is the ounces. Not all ounces are made the same. These ounces are on the side of a road, high grade. You're in a body that's pretty much vertical. I'm talking about the Champagne zone. The other ones are a little bit different. So yeah, I mean that's definitely a metric that you can use. I mean I can just show you projects where great projects. They're world-class projects, but they'll have to put in $1 billion. That's their capex also, over $1 billion. And at the end, they end up with the same NPV today. And that's because, if it's lower grade, that's what it is. We're not smarter than other people. It's just we have those circumstances, and we were able to phase it out. By phasing it out, you're doing two things. You're de-risking it from a financial standpoint of view, because I don't need to put up $500-600 million. I'll do it while I'm in production. And after that, also on a technical risk. I mean, what are the two major items that there's failures or delays? Is your tailings management facility. So at the beginning, I don't have a tailings management facility. And also from a technical risk, sometimes you'll size the mill improperly. Like it'll be too big, then you're trying to feed this mill and, with lower grade material. After a couple of years of toll milling, you'll be able to size the mill properly. And at $1,165 of AISC versus $1,027, we've done the trade-off study. It makes a lot of sense because those two items are really important. Those two items could end up being the difference between very successful or a failure of a mine. And I think we've really de-risked this. And also putting ourselves to a near-term producer. In 2027, I'll be producing gold from the bulk sample. At the latest, by 2028, we'll be producing over 100,000 ounces a year.
So we will take the last question here.
A quick one. You showed a slide with a Champagne.
Yes.
Down to 1.4 kilometers.
That's correct.
But then you had another stretch of land that seemed to have been drilled only to 300 meters or so.
That's correct.
What is the geology the same? So could it be that there is gold even a kilometer deeper, even on that side?
Absolutely. The drill bit is going to tell the story. One of the reasons why we really continue drilling that, with those kind of grades, if we ended up at the beginning, we didn't know it went all the way down to 1.4 kilometers. Now, as you're drilling, we really drilled it intensely. And we've put in over 500,000 meters of drilling. Is there possibility on the other side? Absolutely. But I'll try to do that we will do that with free cash flow later on. That was the reason. Like, it's rare that someone can tell you that I'm going to feasibility and I don't need any infill drilling. The infill drilling's been done already.
Well, so thank you for that, Victor.
Thank you.
Very interesting, and we wish you the best of luck. And this will be a busy space, I take it.
Yes.
Yes, so we'll give him a round of applause, gentlemen.
Thank you.
And now it's time to introduce our next speaker, and that will be Rai Kang, CFO, Corporate Secretary for Cornish Silver. And if I may be so bold to suggest that an investment in Cornish is also a play on a significant revaluation of the junior silver mining sector. So here to tell us why and how.
Yep, thank you very much. Thanks very much for being here. Cornish Silver's been focused on silver expression in Mexico since about 2006. We have 4 resource properties, and there's just some forward-looking statements. So the reasons to buy Cornish is simple. One of the largest junior-owned silver asset bases in Mexico, therefore a significant leverage to the price of silver. We just released a maiden resource on our flagship property, which is Columba high-grade epithermal vein system in the Chihuahua state. After 53,000 meters of drilling, an inferred resource of 54 million ounces was reported in June. So we see an ability to, after a financing done also in June, to have 50,000 meters more drilled on Columba, which is fully funded as we go. So the potential re-rating in this market is looking very good. Management and board, basically just to signify from grassroots to exploration, we have the experience. Grassroots exploration and production. James McDonald's our president and CEO. He was one of the founders of National Gold that had the Mulatus project, which they merged with Alamos Minerals, and that became Alamos Gold. And that was in the early 2000s. That was his first exposure into Mexico, and since that point, we've had a number of discoveries there, being 4 in total. So we just have that depth of experience to take us through from exploring, resource building, and production. Capital structure is 82.5 million shares outstanding. Currently trading about $1.85 with a market cap of 152 million. The average daily volume is probably over 1 million now on a 90-day average. Currently sitting at about $18 million in cash. And we have a number of warrants that are in the money, and we're seeing those come in, which will add about a further $8 million. Key shareholders, we have Eric Strand, Condire, a hedge fund from Texas. A number of institutions making up 35%, both in Europe and in North America. And we've managed to have a number of investments from former, majors who are former investments, such as Core Mining, Agnico Eagle, and Pan American Silver. They all came in for different projects, and they've all divested since that time. So what we have here is 54 million ounces in this high-grade Columba project. Globally, we have 325 million silver equivalent ounces over our 4 projects, all in Mexico, and we're focused on expanding that Columba resource. We're located in northern Mexico, Promontorio and La Negra in the Sonora state, and Columba and La Cigarra in the Chihuahua state, all along that Sierra Madre trend that's hosted a number of mines in the past. So definitely a good spot to be in. The catalyst we see for the coming year and the year after is basically building on this resource that we had, which averaged 284 grams per ton silver, using a silver price of $26 and a cutoff grade of 150. On average, the veins within the resource are between 5 and 6 meters. So definitely a good start after the 53,000 meters we've drilled. Highlights, it was a past producer in the early 1900s to 1910. Mexican Revolution shut down all mining. They did put a shaft down to 200 meters with 6 levels on the main vein of this property. A little bit of a stint in 58 to 60, collapse in silver price, stopped all mining at the property. So when we took it over, no modern day exploration whatsoever, basically being no drill holes. So we went in there and drilled our initial holes and had 17 meters of 650 grams per ton silver, 6 meters of over 2 kilos. So definitely a property we wanted to acquire. And in May 2023, we made the final payment and acquired 100%. Since that time, 211 holes have been drilled into the property, and that culminated with the maiden resource. When we're looking at this picture here, just wanted to highlight, up in that top right corner, there's a yellow line. That is the main highway that runs just past the property. So it's about a 30-minute drive off the main highway. It's in rancher territory, agricultural, and we're in private rancher land. In the center of this picture, you see the bottom of that arrow. That's where the Fortuna vein was, the main vein at that time. And that's in the middle of this caldera. The caldera has an elevation level of about 1680 meters above sea level, which is important because when you grade along that vein there, there's grading at surface. But as you come up the hill, the vein remains, but there's no grade in silver. But you go back down the hill to the same elevation, and you're back in the silver. So what we had through our geological team was a viewpoint that there's a preserved system under there. And to work that through, we went in and drilled, and lo and behold, there is. And I'll show you some slides which show that case in point. Before I get there, just wanted to indicate we want to get this to 100 million plus ounces in a vein system in Mexico. So what we have here on the left is, actually on the right for yourselves, is the Silvercrest Las Chispas, and in the middle it's Vizsla's Copala, and we are on the right, all to the same scale, showing for the first two what 100 million ounce plus deposit looks like. Silvercrest was, I think, in the reserves 140 million ounces. Vizsla's at 300 million ounce plus. And we're there at 54. Big difference in all of these is the level of how much drilling took place. I think there was about 600,000 meters drilled at Silvercrest, 300,000 meters plus at Vizsla so far, still growing. And we're very junior to that, but we can see how we can get to that scale. Quick overview of our resource, 150 cut-off grade, average grade 284, pretty robust. Even if when you look at 200 gram cut-off, we still have 43 million ounces in the inferred category. Just some notes. So what this picture is interesting is that the red is the resource, as shown in our report. And those wire frames that are overlain on it show what our visual of or interpretation of the vein system is as it goes underground. And you can see it matches up pretty well. We have to do a lot more drilling to infill a bunch, but we're in the expansive mode to see how big this is, and that's 100-meter step-outs. Again, some overview on this one. There's about 31 million ounces in that D vein. We went from a 650-meter strike to 1,250 in the last year. And you can see to the far left, 34 meters of 540 grams per ton. And then what we see is the veins somewhat converging towards the east. And we had 98 meters of 211 grams, including 12 meters of 531. So the system is pretty robust all the way through. We think we can build on that for sure. And this is that whole grade elevation that we have in the grade zone. This is the middle of the caldera. There's the shaft that went down 200 meters. And you can see the red, this is gram meters. So the red depicts a high result of silver being found at surface, hence the shaft went all the way through the bottom of that. And that's at an elevation of about just under 1,800 meters. So when you go to the D vein, we saw the same thing when it comes to the elevation just leaving the caldera, that you could see grading at surface. But as you go up the hill, the blue appears, which is the vein still there, but the grade isn't. Until you get below this grade line that we found, and you can see the numbers grow from there. So the deeper the system, we're seeing better grades coming through. And it still is open in all directions and to depth, and definitely needs more drilling. So what we're going to do with this 50,000 meters is focus on the pink fuchsia veins that you see there, D, B, and F, and the JZ. And you can see that that's basically going to be about 40,000 meters, with the focus being F, B, and D first. And there's a number of prospective targets that are higher up in elevation, but definitely can add more to the mineral resource than where we are right now. So we really feel this 50,000 meter program could increase this well above 100 million ounces. So just an overview, 50,000 meters of drilling. We've started that late July. The initial 30,000 phase will likely take at least 8 months based on 2 rigs. So there's going to be continuous news releases and also an expanded prospecting and mapping program on the property. Additionally to our high grade, we have the La Sagara, which is in the Perel district. And this one, we control 20 kilometers of this 40-kilometer trend that runs south into the San Francisco de Laura mine and Santa Barbara mine. They're drilling down to depths of about 2,000 meters. We've drilled down to about 150, and it's open at depth and in all directions. We do see a plan of how to expand this, but it's not our main focus, but definitely a good asset to have. The resource has been updated, 102 grams per ton, containing in all categories 62 million ounces. And then lastly is Promontorio, our original discovery, a big polymetallic deposit in the Sonora state. And as you can see, it contains 140 million ounces in the M&I category, and then a further 40 million ounces in the inferred. It's a mix of gold, silver, lead, zinc. Definitely a good asset. We will be looking at economics on that in some future date. And also La Negra, our discovery in 2014, which was optioned to Pan American, who were going to take, or took an option to carry it to production if it got to 50 million. We didn't quite get there, it became 26 million ounces, and they returned it to us, so we own it 100%. So investing in Kootenay gives you access to a large junior silver-owned asset base, continued drilling, so drill bit discovery, unleashing hopefully the potential of this Columba property to be a next deposit in Mexico, or next producing deposit in Mexico. So the value of re-rating, especially in the silver market, is very positive. Thanks very much.
Interesting to hear a Mexican story, and if there is any question, just please raise your hand here. But I will tag on. You mentioned that the area has been mined before, and then there was the Mexican Revolution, and one could argue that in mining terms there was a new revolution now because you have a new president. Indeed. And as I understand from other operators in Mexico, things seems to be lighting up. You would subscribe to that?
Yeah, I would subscribe to that. I mean, for our operations in Columba, we have the permitting to do the drilling. It's an underground. It always will be an underground mine. So we haven't had any derailments. I think the effects are still left over from the past president, and those will have to be looked at in the Mining Reform Act. But I think it will be coming in the future. So positive outlook.
Yeah. So, but I mean, the main point is that there is no negativity coming from Mexico City. So as long as you play your cards right. Strong underlying market and a demand. And I did a little bit of homework, so I saw that you raised 20 million Canadian here in July, June.
It was June.
June. Yeah. Was it easy?
Probably for the first time, we had a number of investors wanting to be part of the Kootenay story. It's been a slog for past raises, but in this case, it wasn't easy, but it wasn't difficult either. It was probably more difficult not taking too much.
Yeah. And the structure of the deal, that was a private placement, or
it was a brokered prospectus placement, $5 with a 3-year warrant at 168.
And forgive me my ignorance then, but did that mean that you got new shareholders, or was it the ones just adding up?
No, a number of new shareholders, but still existing ones participated and adding to their portfolio.
And you mentioned that you need to drill more, and drill program equals drill rigs. So would that be a bottleneck now that everybody is looking at the sector?
We're using man-portable rigs. We haven't been told of any bottlenecks. We've used the drilling company for approximately 6 years now, or 7 years. So a really good relationship. Don't foresee any issues in securing rigs.
And could you just elaborate a little bit on the balance sheet? You're debt-free?
Debt-free, yes. Currently hold about 18 million in cash. There are warrants coming in, so we should see the receipt of the $8 to $9 million from those warrants. Also, we're collecting back some outstanding Mexican taxes that are owed to us as well. So far, so good.
So far, yeah. So you have a pretty strong cash position and balance sheet there.
Yeah, we are funded for that 50,000 meters.
Yeah. Okay. From discovery to production, is that your end game, or would you sell?
We are planning to drill out Columba, build it, do all the de-risking as we go along, and basically see where we end up. We have the experience to take into production, but we are an exploration company.
Okay. And what to look out for if we summarize coming quarter and this quarter and the beginning next year? What do you want the market to look for when they evaluate you?
I think it's continued integrity of the results, just outlining and carry on the positive results we've had in the past. It's a very strong system, and we see it capturing that 100 million ounces quite quickly.
Okay, but it will be execution of your testing, and then we can make our own judgment.
Yeah, absolutely. Yeah.
Well, Raj,
thank you very much.
Pleasure. Very interesting. Thank you. And
appreciate it.
Give him a round of applause, please.
Thank you.
And now it's time to welcome our next guest. Is the CEO of iMetals, Saf Dillon. So if you just enter the stage here, it would be nice. Domiciled in Vancouver, iMetal Resources is a junior mineral exploration company focused on discovering and developing gold and graphite. So please tell us more. The stage is yours.
Thank you. Hi. As Carlo mentioned, my name is Saf Dillon. I'm the president and CEO of iMetal Resources. We're a Canadian company. I'm based in Vancouver. We have 3 projects, 2 gold-focused in Ontario, and the third one is across the border, excuse me, in Quebec. That one's focused on graphite, as I mentioned. As we clearly stated in our mission statement, we think that we truly are on a mission of discovery, and I'll show you why. Public company, forward-looking statements. So there's a number of thousands of public companies. One of the reasons I think you probably want to look at investing in a company like iMetal is that part of it is where are the projects. All our projects are located, as I said, in Canada, very safe jurisdiction, one of the most mining-friendly, prolific regions in the world. It's called the Abitibi Greenstone Gold Belt. Excuse me. Part of the Abitibi is host to some of the largest mining companies in the world, and our focus is on a project called Galganda West. Galganda West. We've actually completed about 4,600 meters of drilling in the last 2.5, 3 years. We actually announced a discovery hole about 2 years ago. That hole, as you can see, it's indicated, that hole, as it's indicated, was about 50 meters of a gram of gold in the ground. And I'm going to show you why this is very important. At the time, gold was trading at about 1,800. It seemed like nobody cared. But times, of course, have changed, with gold now sitting just north of 4,000 an ounce. It's a picture of Tim Henneberry holding some of the core, and a real quick snapshot of our cap structure. There's about 36 million shares issued and outstanding, and management, directors, and friendlies, meaning long-term shareholders, own roughly 70 to 80% of the shares issued and outstanding. There's about 32 million warrants that are basically in the money. They're priced primarily at 20 cents. So if those were all converted, that would bring in roughly another 5 to 6 million Canadian in cash. This slide actually kind of just really gives you a little bit of a snapshot of what the Abitibi Greenstone Belt looks like in Ontario. Not sure if you guys can see it, but to the right of the slide, you can see the border between Ontario and Quebec. And what we're trying to identify here is show you deposits of gold that contain 3 million ounces or more. You can see there's a handful of them around our projects. Our 2 projects are listed in the black with the white lettering, Ghost Mountain, and of course our flagship, Galganda West. Galganda West sits right next to a well-known and currently much talked about deposit called the Juby deposit. This kind of gives you a little bit of a higher or bird's eye view of the whole Abitibi region. It's a big swath of land or geological formation that crosses the border from Quebec into Canada. Quebec into Ontario. Our 3 projects, let me see if I can show you here. Okay. Our 3 projects right up the top there, that's the graphite project. Kind of in the middle is the Ghost Mountain, and then our flagship right here is Galganda West. I think this is probably one of my favorite slides because I think it's very simple, gets to the point. There's a number of successful companies that are around us, and that's us kind of smack in the middle of the slide. We're in the red color, and this was at one point about a 147 square kilometer property, but we have dropped some of the claims on the right-hand side of our property. Reason why is that part of the property doesn't have, or it's the mineral producing zone is just much too deep and it would be too expensive. Our focus has been primarily in zone 1, and that's very key because if you take a look at some of the grades at if you take a look at the grades right here, you can see these guys have hit 7,000 grams per ton of silver. There's 8 million ounces roughly of silver equivalent. There's about 270 grams per ton of gold in that discovery there. I won't go through all the companies, but this is on our website as well. They're all listed here. And the key point that I want to point out is that we share a border with that green claim block that hosts what is called the Juby deposit. And the Juby deposit has actually just been in the news as of yesterday. It was once owned by a company called Aris Mining. Aris is now roughly about a $3 billion market cap company. They're focused in Colombia. They actually sold that asset to another public company called McFarlane Lake Mining. And they just announced that they updated their mineral resource estimate. So that deposit that was once right there, that deposit was once reported as a 2.5 or 2.3 million ounce gold deposit. That deposit sits roughly 750 meters from iMetals discovery hole that we announced 2 years ago. So the thesis has always been that we host the continuation of the Juby deposit. And our plan is to go out and prove that. So we announced October 1st that we just kicked off a drilling campaign for 2025. And we're looking to drill 1,500 to 2,000 meters, probably going to be between 4 to 6 holes, hopefully. Plans are to hopefully get the assays out for sometime in the first quarter of the new year. As I had mentioned, for the last 2 years, after we had that discovery hole, the company was basically trading shell value for less than about $1 million market cap. Currently, we're trading at about a $10 million market cap now. But during this period, we were thinking, we need to have a bit of a clearer strategy, diversify the company, de-risk the project here, because the Juby was idle for the last 5 years. So what ended up happening was we got an opportunity, we announced it, I don't have it in the slide. We also signed an LOI for a potential antimony project that's located in Bosnia. The LOI was signed a couple of months ago. We're waiting to finish our due diligence and hopefully get to a definitive agreement. And part of that agreement is going to have the vendor make sure that they provide us with all the necessary permits. If you haven't heard of antimony, it's one of the 2 probably most sought after critical minerals. It's used along with tungsten. They're very comparable, but they're heavily used in military grade equipment. Just like the price of gold has gone from roughly 2,000 a couple of years ago to over 4,000, antimony prices have actually gone up 4 or 5x as well. They're still expected to maybe accelerate into the new year. So the company has now gone from having just 2 gold projects and a graphite project, potentially have another exciting project here in Europe. This slide here just kind of gives you a little bit of a better idea of the actual gold mineralization. These are new trends that we identified. And if you look at this, this kind of shows you the Juby deposit, and this is just the blow up of that. And again, we're focused here in Zone 1, literally 700 meters from that actual Juby deposit. And it looks like there's potentially a number of structures here. This is about 7 kilometers from our Zone 1 to Zone 3, and we have identified gold mineralization throughout it. Our second gold project in Ontario is right here, the little red dot, and we are surrounded by a company called Agnico Eagle, which happens to be one of the largest mining companies in the world, and they actually have a mine that's less than 5 kilometers from our property. Here's a quick snapshot of our Carhill, or the graphite project in Quebec. We have encountered three zones of graphite hitting grades as high as 13%. The focus, however, still again is on our flagship Gauganda West, but at some point I think that this property could be either up for option or an earn-in type of deal. Again, this is the graphite property just across the border in Quebec. That's us in the red. And we're surrounded by much, much larger market cap companies. I think one of them there hit a major polymetallic discovery, and they're trading at about a $200-300 million market cap. That is really it. And if you have any questions, that's a picture of the drilling at Gauganda West, and that's a company that we're actually using.
Well, thank you, Seth. We have a couple of questions for you,
sure,
if you don't mind. So first, I'm looking over to the audience. If you have any questions, as per usual, just raise your hand and you get the microphone. But you are a developer at this stage. So gold price explorer, yes, sorry. So gold price development and inflation doesn't really affect you, apart from people getting more interested in looking at you. Would that be correct?
I think you're right. Correct.
So in that case, one could argue that you are in the shadow of the head frame of a gold mine because you're very close there. Exactly. So are you in a discussion with the head frames of the world, so to speak?
At the moment, no.
Yeah? No.
Yes, and you know.
And why is that?
I think that, I think it's still too early at this stage. We don't actually know what we have in the ground yet. I think what we want to do is, before we have any kind of discussions with anybody, you really have to know what you're worth and what you have and what the potential is. And we're not going to do that until we drill at least another 5,000-10,000 meters. And once we get a better idea of how big the system is, how many potential structures there are, then I think at that stage, and I think we're not quite there yet, but I think it is going to get very exciting, because now that the Juby has changed hands, I think this new company, McFarlane Lake, they're not a new company, but the new owners of the Juby deposit, it seems to be that they're aggressively going to be developing this asset. So that's going to give us external tailwinds.
Okay.
And the macro, I guess, factors are really kind of starting to look like they're going to be in our favor. $4,000 gold doesn't hurt either.
No, and everyone has been fairly positive towards the price rise and B, let's say, the renewed focus here. But am I interpreting you correctly that there is no, let's say, discussions with the head frames, as it were, mainly due to you're not willing to have a discussion? Is that the way for me to look at it?
No, I think what I was trying to say is that, we're open for any discussions, but I don't think it would make sense to have those for us yet, because we don't know what we have.
And if you could give us a time frame here, a year from now, would it be More granular and closer.
I think I just made this comment to one of my last meetings outside. I said, my wife wants us to, she wants a new house. And I said, sweetheart, I think the time is finally coming, probably within the next 2 years. I think we're going to see this company finally go from basically being an explorer, less than $2 million market cap for a number of years. We're currently trading at about a 10. I think it's quite possible that we could see something big happen with our neighbors, and I think that could include us and maybe some of the other properties.
Because it's interesting to see that we have had. I mean, you have the geopolitical situation, and you have the demand outstrip the supply, and gold price going up, and therefore. But the juniors, well, they have picked up, but they haven't picked up as much.
That's right. But you also have to remember that a lot of the majors, they're sitting on a lot of cash. Their margins have exploded. And now, like I said, I think I forgot to mention that I did mention that the Juby has doubled basically in size from 2.4 to potentially 5.5. And I believe that, I think the consensus is that this Shining Tree camp, as it's known where we're based, probably has the potential to host 10+ million ounces. And that's where the majors like to get involved. So I mentioned that Agnico Eagle has a mine less than 5 kilometers away from our second property. I'm not saying they're going to take us out, but somebody like that would be an ideal candidate for us and our neighbors, if it's not them.
And we have a question there.
You started out by saying that all projects is in Canada, but then at the end,
yes,
came this antimony project in Bosnia.
Yeah.
Why? How did you reason?
Yeah, that's a good question, because the 3 projects in Canada, we own them 100%. Right now, that antimony project in Bosnia, as I mentioned, we were trading at a less than $1 million market cap for almost 2 years. So we were trying to think outside of the box, diversify, de-risk the company, and as I said, antimony prices have exploded as well. That opportunity came up, and we don't own it yet. We've only signed an LOI, and so there's hopefully a pending definitive agreement, maybe next 30 days.
Oh, next 30 days?
I hope so.
Okay. Yeah, but it's not like in 3 years.
No, it's not years.
No, that's an interesting question regarding the Bosnia-Herzegovina, because at least in my uninformed world, it came like a bolt from clear blue sky.
You could say that, yes.
So, and just out of curiosity, how does that work? I mean, do they come to you, or you come to them, or
the project?
Yeah. And projects.
Well, I think, as I was saying, actually, one of my fellow directors, Tim Hannaberry's here. He's a geologist. So, the industry's fairly small.
Okay.
And, it's getting smaller. It's a global economy. But, of course, people tend to know other people. So when the word went out that, we have great vehicle, good management, we're looking for maybe something exciting and outside of the box. And so we were made an introduction, and hopefully we can get this deal signed.
Pretty cool. It's just a phone call away.
Pretty well.
So it will be very interesting to follow IA Metal, and we will thank you for this presentation. Thank you.
Thank you.
So we give Saf a round of applause. Thanks. So it's now time to introduce Dan Stewart from Juggernaut Exploration Limited. The company acquires, explores, and evaluates mineral resources properties, primarily focusing on high-grade, precious, and industrial metal projects in Canada. That's pretty cool. So with that, I leave the stage and your samples in your capable hands.
Yeah, thanks. Thank you very much. Need the pointer. Thanks. So busy with my great rocks, I forgot the magic stick. It's a rock conference, so I thought somebody should bring some rocks. There's nothing like feeling or touching something, right, to really connect with it. My name's Dan Stewart. I'm the CEO of Juggernaut Exploration, and we are an exploration company focused in northwestern British Columbia. Elephant territory. The Stakina terrain, Hazelton Volcanics, a region that is known to host some of the world's largest copper, silver, gold deposits on the planet. It's a known fact. They're drilled off. They're there. Now, I've seen a few things in this business. I started working in the industry when I was 19 years old. I'm certainly not 19 today. Gray hair gives it away, but I'm now 51. And I've been in this mineral exploration business for 32 years. I haven't seen everything. I don't claim to know everything. And there's a lot of great stuff that's found. But myself, for what I've touched and seen and known of, I've never seen a discovery like the one that's been made on the Big One property. In 5 days, in 2024, the Be All Minerals Syndicate went out ground truthing targets in northwestern BC. On that program, they found over 200 polymetallic veins at surface. Never documented, never known, never seen by the eye of man before. The reason for that is snow and ice. They were covered in snow and ice. The world, whether fancied or real, is seeing something that's called climate change. And it's uncovering rocks in a world-class terrain that's known to host elephant discoveries. If you want to find a penguin, you go to Antarctica. If you want to find an elephant, you go to Africa or Southeast Asia. If you want to find an elephant deposit, you go to where elephants have been found before. And right next door to us is Newmont's Galore Creek that has 42 million ounces of gold equivalent. One of the largest, highest grade porphyries in the Americas is sitting right next door. The BC government is building a $25 million road within 12 kilometers of our property. And they're going to have BC Hydro on that too as well. Great. Guess what? We don't have to pay for it. They do. So the discovery right next door has proven that we're in the right terrain. This same group that went out and made those discoveries in 5 days, we then in turn optioned that property and put it inside a Juggernaut Exploration. When that news went out, we put out a financing to capitalize the company. Need money to explore, right? We raised $12.5 million in 30 days with only 5 days of boots on the ground. Not a single drill hole. Crescat Capital came in for 30% of the company. Dr. Quinton Henney with Newmont, Homestake, and Crescat's technical advisor went through all our data, and Crescat came forward, one of the top mineral resource hedge funds, performance-wide, globally right now, placed their bet. There's a saying in this business, follow the money. They voted with their wallet. 5 days on the ground. We went out this last summer with some of that money, and we spent 30 days on the ground. In 30 days, we found over 300 additional polymetallic veins at surface. That's over 500 veins in 35 days. Some of these veins go for over 500 meters and remain open. They just go into the snow and ice, come back out again. That's 5 international soccer fields in length. Some of them have shears up to 50 meters wide. That's a 15-story apartment building. We see over a kilometer of vertical relief on several of them, and they remain open. Go into the talus, go into the snow. That's over 2 Empire State Buildings in height. Now, I don't know everything. I haven't seen everything. But like I said, I've never seen anything like this before. And the smart technical people that put their money in on that $12.5 million funding told me the same thing. Donald Trump said it was Liberation Day on TV and the markets went over a cliff. That was the same day I picked up the phone on that financing. In that market, $1,000 gold ago, rewind the tape, that's the interest that we received. This same group, the same technical team, the same drillers, geologists, helicopter pilots, prospectors, project generators. At the same time this discovery was being made, simultaneously, they were completing a 64,000 meter drill program. The largest drill program in North America. Helicopter supported. Isn't a bigger one on the continent. And that was for Goliath Resources, our sister company. Born out of the same group. On a drill program that has a 100% hit rate, generated from scratch, open ground, staked terrain. The same group is doing that at the same time. Now, I don't know if we're that good, but we've certainly been lucky, and we're in the right package of rocks. Goliath Resources is on to the largest high-grade gold discovery seen in Western Canada in probably 20 to 30 years. So the group has a track record of discovery. When we found Goliath Resources, it was one vein. One. in the sediments, not the volcanics. It was about 1 meter wide. And you could follow that for 1 meter or 2. We did a channel cut on that vein. That vein ran 7 meters of 8 grams gold. That geologist back there, Russ Ashton, who kind of looks like a younger version of Dolph Lundgren, good-looking guy. See you back there smiling. Then in turn went and drilled that vein. Drilling into that vein has now resulted in the discovery of over 12 loads of high-grade gold. One of the best discoveries in this business that's returned investors over 3,500%, 35 bagger in the past 3 years. Now, if I'm a betting man, I'm going to follow that geologist. That's the same geologist that helped find these over 500 veins at surface, running up to 8.25 ounces per ton gold. He's done it before. And the evidence this time is much more compelling. We have a lot more hard evidence in our hands. Now I'm going to show a few slides, and I'll try to keep it simple, and I'll try to keep it visual. What we're looking at here is the El Dorado system. It is 22 kilometers squared. That is 40% of the size of the island of Manhattan. There's over 400 polymetallic veins found here, running up to 8.25 ounces per ton gold. On the top, the tip of that iceberg, that mountain of gold, we're finding what you call the 15-kilometer long highway of gold that goes around the El Dorado system, this high-grade veining. We're seeing vertical relief here of up to 2 CN towers. The geologists on it, I flew there in a helicopter this summer. I was looking out the window. They look like ants on these things. It was shocking, really. So, as you can see up here, there's 2 geologists doing sampling. They're so small on these veins, we have to outline them. And if a geologist is walking down the street, is he going to pick up a $1 bill or is he going to pick up a $100 bill? He's going to pick up the $100 bill. That's grab samples. But when you do a channel cut, and the channel cuts come back higher than the grab samples, a channel cut's a horizontal drill hole at surface. If there's something you notice when you go through our information, which is on our website, the channel cuts are higher grade than the grab samples. Over an ounce in a channel sample, 13 grams in a grab. Channel sample, 17 grams, 5 in a grab. It's a much more indicative representation of what the mineralization will be in a drill hole. A mountain of gold, and we're just seeing the tip of the iceberg. This zone over here is 22 kilometers in size. That's the mountain of gold that I just showed you, where we've got 15 kilometers of these veins just wrapping around the outside. This zone over here, gold swarm, running up to 226 grams per ton gold, is quarter of the size of downtown Vancouver. I've got 30 million shares issued and outstanding. A very tight company. So when you have good news, the stock reacts by going up. I have $11 million in the bank. And the company is fully funded until Q2 of 2027. We don't need a single cent. The assays I've shown you are gold-only numbers. We had to rush them for Beaver Creek. We were selected to go to Beaver Creek on this discovery. Probably the only company there without a drill hole. Stifel Partners wrote us up. Very large bank. A handful of companies, out of all the companies at Beaver Creek, they wrote us up and said, watch this company. Gives you an idea of the geologist up here. There's Nikolai Gopel. All right. Here's another one over here. I implore you to go to our website. All of this information is on our website. And to do a deep dive, take a look at this. Because I've never seen anything like this before. Juggernaut's sister company, Goliath Resources, generated a 2,400% return if you bought the stock in the market. If you participated in that financing, you made a 35-bagger. If you miss Goliath Resources, when it had a $30 million market cap, this is your chance for Goliath 2.0. $11 million in cash, fully funded for 10,000 meters of drilling. I'm so excited, I can't wait to go drilling this thing.
Excellent. Well, thank you for that. And this is not for keeps, I take it. We have time for one question if we have anyone from the audience. If I understand it correctly, you have at least 5 precious metals properties in the Golden Triangle. Is that correct?
We currently have 4.
Okay.
Yeah.
But given the focus on this one, do you have time to cover all the same, or will you have to prioritize?
We're going to focus solely on the big one property. Yeah.
And as you then mentioned, you're in that case you're fully funded. So basically, one should be looking for news on, and that is the big one.
Yeah, the big one. Yeah.
Which is easy to remember.
Yeah.
Well, thank you so much, Dan. It's an absolute pleasure. So we give you a warm hand of applause. Thank you for that. And it's high time to introduce our next speaker, which is Cliff Hale Saunders. Sanders, sorry. Sorado Gold, the Toronto-based precious metal mining and exploration company, owns and produces gold mines in Argentina and has acquired a project in Portugal, which is very exotic, I would say, in the mining industry, and in Quebec. So please, the floor is yours.
Great, thank you very much, and thanks everyone for sticking around until late in the day on Thursday afternoon. Sorado Gold is a slightly different story than many of you will have heard today or over the last couple of days. It is today a gold producer, and in the future can be a producer of a significant different commodity suites. But going back in time, 2024 represented a year of significant restructuring for Sorado because our core production asset is located in Argentina. At the end of 23 and into 24, there were significant political and fiscal policy changes that put some severe pressure on the balance sheet. So throughout 24, we spent the time restructuring the company, and we've now exited and into 2025 in a very strong position with a great suite of assets from which to grow. So I just wanted to give you a little background on why we think we have significant room for re-rating of the stock just to catch up to our peers. And then I think longer term, as I'll demonstrate, we have significant opportunity across a suite of assets to grow. So what is Sorado Gold today? We produce approximately 55,000 ounces per year from our Minera Don Nicolas mine located in the Santa Cruz province of Argentina. We completed a PEA back in 2024 just to outline to the market our near-term strategy, which outlined a 5-year mine life, producing at $2,100 gold, about $50 million of EBITDA, and $25 million of free cash flow. Obviously, if today's current gold prices stick around, those numbers will be significantly expanded. Our near-term focus is twofold, is really on exploration to extend that mine life. We're doing a 20,000-meter drill program in 2025. We've recently announced a further 50,000 meters in 2026, and really targeting to grow the grade through the mill and continue to produce from our heap leach facilities as well. We've also started an initial underground development, but that's really going to be for long-term exploration. In the medium term, we're looking at developing the Lagoa Salgada project in Portugal. It's a VMS project along the Iberian Pyrite Belt, a long strike from the likes of Aguas Teñidas and Neves Corvo, so a very well-developed belt and a lot of history in mining polymetallics. At current commodity prices, precious metals will probably represent in excess of the revenue stream coming from Lagoa, and we'll get into more details later. For the longer term, some optionality to the green steel market. We have the Mont Sorcier high-grade iron project in Quebec, which we're progressing to feasibility study and call it late Q1, Q2 of 2026. And we think that will outline a very robust project. An initial PEA done in 2022 outlined a potential of $1.6 billion US on that project. We're well funded to deliver on these growth programs with minimal dilution going forward. At the end of Q2, including a prepayment we received on an asset sale, we had about $15 million of cash. Obviously, at today's prices, we're generating substantial cash flow out of Argentina to continue to fund the various projects we have going forward. So what are we trying to do as a company here? We're a team, when you look at the board and the operating team, that have built mines, operated mines from the ground up, from zero through initial exploration, through discovery, through feasibility, construction, and then operation. So we're not afraid of developing the mines ourselves, and we think that's the best way to unlock the value. Looking at the third-party technical reports that were published, and obviously at much more conservative prices than you see today, the NAV for Minera Don Nicolas on a standalone basis would have been about $111 million US. You add the value for Lagoa Salgada, you're looking at roughly $260 million US, and a potential down the road adding Mont Sorcier for about $1.8 billion. Now, obviously, a lot of things have to go right, but that's the equivalent of going from a 55,000 ounce gold equivalent producer to a 328,000 ounce gold producer in the span of about 5 to 6 years. Another way of looking at that sort of same scenario and using those building blocks to grow the company is the cash that's going to be generated from each of these assets to allow the next asset to be built. So at MDN, again, at $2,100 gold, we're looking at something in the order of $45 million of EBITDA. If gold sticks around here north of 3,500, you could expect that number to be more like 75 or 80. Again, if you added Lagoa Salgada before we do the updated study, you're looking at 112 million. So what we plan to do is use the cash being generated from the Argentinian operations to fund the equity contribution that's needed for Lagoa, and then longer term, use those two mines to fund a significant component of the equity contribution for Mont Sorcier down the road. Now, this is a pretty busy slide, but it really shows you the blocks that each asset has to move through over the next 12 to 18 months and the number of different catalyst factors that we expect the company to go through during that period. Clearly, the primary focus in the near term is Minera Don Nicolas, maintain that cash-generating machine in the background by extending the mine life. We want to get to 5 to 6 years and just kind of keep that rolling. And as I'll demonstrate later, we think we're in the right district to make that relatively straightforward as long as we do the drilling. Lagoa Salgada is going to go through a series of steps over the course of the next 6 to 9 months, really to get to that construction decision by the middle of 2026. And that's the release of an optimized feasibility study in probably early December, getting the final EIA permit in Q1, and the construction permit at the end of Q2. And as I'll demonstrate, we have strong backing for the non-recourse project financing. Mont Sorcier will take a little bit more time. We expect to have a feasibility study done at the end of Q1, Q2 of next year, and then enter the permitting phase, which in Quebec can be quite long. 2 years is fairly normal. And we would expect to have position to be in a construction-ready decision sometime in 2028, with potential for production as early as 2030. That could slip into 2031. But you can see how these various assets can really support the next leg of going up the ladder. A little bit more detail of Minera Don Nicolas and why we're so confident that we're going to be able to grow that resource. We have the largest land package in the Deseado Massif. We have 330,000 hectares of primarily unexplored land. The previous operators who we bought the mine from in 2019 were not miners. They were in this business for other political-driven reasons in Argentina to generate US dollars. And every other mine in the district that goes through an exploration cycle has been extremely successful. So we think with that position, our surrounding mines of Cerro Moro, Cerro Vanguardia, Cerro Negro, San Jose mine, we're in the right district to see significant growth. We're not trying to do anything unique here. All the other mines have open pit, underground, and heap leach. We have now open pit, underground, and heap leach operations. So we have all the infrastructure in place. What we need to do is outline some more high-grade ore. So the ore going through the mill, instead of being the sort of 1% low-grade stockpile we're currently processing, to get it back to 5 grams per ton, which is what we were processing in the past. And you could quite quickly see our production profile go from 50,000 ounces to 100,000 ounces. So that's going to be the focus over the next couple of years. Not saying we'll replicate what Cerro Negro and Cerro Vanguardia did, but we see the potential be given our district. Looking at the operation themselves, as I said, we acquired it in 2019. The first 2.5 years in Argentina during COVID were very restrictive, but the team was still able to really reposition the mine from a very underperforming operation to one that has now had 4 years at over 50,000 ounces of production. And despite our relatively small scale, we've been able to keep cost in line with our larger peer group within the area. And we're targeting somewhere between 1,500 to 1,700 on an all-in sustaining basis. The mine itself is quite remote, very much fixed cost mine. So the more you can produce, the lower your unit costs will be. This is just a little background on the PEA that was done in 2024. It did outline a 5-year life at the time. And as I said, this is kind of the starting point we had to give comfort to the market with all the changes going on in Argentina, that we had something there to grow from, to continue to build on. And now we're in that position, obviously with the cash being generated, to really kickstart that exploration program that has been missing. And as you've probably all heard before, Argentina is now opening up to be one of the perhaps most attractive places for new mining endeavors, especially at the larger scale. Switching over to Europe and the Lagoa Salgada project, it's a VMS project located in about an hour south of Lisbon. It's been deemed a project of national interest within Portugal, so that means we're getting a lot of support as we go through the permitting process. There was a prior feasibility study done in 2023, at late 2023. It outlined an NPV of 150 million round figures US and a 39% IRR. I would point out gold and silver at the time were, shall we say, somewhat lower. And that's going to be a significant mover in the new updated updated feasibility study by year end, is not only the price difference, but a significant focus on metallurgical improvements to improve metal recoveries and also concentrate quality, all of which will translate into higher revenues. We don't expect a big change in CapEx or operating costs, but more a significant improvement in the revenue line. As I said before, we're expecting the environmental approval in Q1, and during that period, in parallel, we'll continue to talk to the UK Export Credit Agency, backed with Santander Bank, for up to 70% of the upfront capital requirements. So this project is slowly maturing into one that's going to get to that construction-ready decision by middle of next year, and with a fully funded package. Again, why we like this project so much, it's not just what we have today in the feasibility study, it's what it could be in the future. We've already outlined a proven and probable reserve of approximately 15 million tons, with a further 20 million tons in measured and indicated. That measured and indicated material could quickly be upgraded to proven and probable with some drilling. This asset hasn't been really re-drilled in the last 3 years, so there's significant room to grow. But when we look at our peers on the Iberian Pyrite Belt, obviously they've been around for 20 plus years at Neves Corvo and Aguas Teñidas, both of which were acquired over the last 2 years for a little bit under $2 billion each. They have continued to expand their VMS pods, for lack of a better term, and over time and towards that depth, you've seen significant expansion in the resource, and at both mines, you've seen significant expansion over time in the throughput rate, and we see no reason why we shouldn't be able to replicate that with the appropriate amount of drilling. As I said, at today's prices, we're still going to be a significant precious metals exposure at the addition of this asset. About 42% of its current revenue stream would be precious metals, which combined with our Argentinian asset would mean the company is about 80% precious metals. And yet we would still be producing in Europe the critical minerals of copper, zinc, and tin, which again is getting a lot of support domestically here in Europe. These are the key catalyst benchmarks for the next 6 to 9 months, as I mentioned before. The updated feasibility study should be completed around the end of this year. We get the EIA approval in Q1, and I think that will be the key trigger for everyone's confidence that this project is actually moving forward. It's going to get built. The recap phase, as it's termed in Portugal, is really detailed engineering to make sure what you said you were going to build is what you're going to build. And as I said, project financing at that point would be well in hand. Construction is relatively straightforward. It's about 18 months. Nothing new, no new technology or anything special here. It's really off the shelf. It would be an underground mine, so no surface disruption, very little impact on the local community, both of which are very supportive of moving this project forward. And if all things go well, first production in Q1 of 28. I'll go quite quickly through Mont Sorcier. It is a bit of a different animal in the precious metals sort of forum. Mont Sorcier is a project for the future. It will produce 67% grade iron ore concentrate, which is ideally suited for the so-called green steel transition and the environmental benefits it will bring to the steel production process. But like all bulk commodities, logistics is key. This project is ideally suited in northern Quebec, just outside of the town of Chibougamau, which is a historical mining district. We benefit from 370 kilometers of CN rail being in place to the port of Saguenay, which is a year-round port owned by the federal government. The federal government is currently funding about 200 to 300 million in upgrades for the port facilities in anticipation of opening up northern Quebec for future resource development. We are the only project currently moving forward in northern Quebec. So we're ideally suited to benefit from that investment. A study initial PEA was done in 2022 on a slightly lower quality product at 65% iron ore. That did outline a 21-year mine life, which only consumed about 25% of the 1.2 billion tons of resources that have been already defined. So this is not an exploration play by any stretch of the imagination. That was generating in excess of 350 million of EBITDA and about 235 million of free cash flow per year during that timeline, generating an NPV of 1.6 billion. CapEx was about 575 US. I think that number will obviously increase. We're seeing some CapEx inflation across the board, but that inflation will be offset by a better product offering with premium pricing, but also the product the industry wants. Within the iron ore space, the high grade 67% or higher material is growing in excess of 10%. How are we going to fund this? You know, as I said, we have about 14.5 million in the bank currently at the end of Q2. and that'll fluctuate at the end of Q3 here, up and down just a little bit. We have free cash flow coming from Minera Don Nicolas, somewhere in the order of 25 million, which we are reinvesting into Portugal and Quebec at this time. Obviously, if gold prices sustain these levels, we would expect that number to be significantly higher into 2026. We still have some outstanding cash deliverables from the Hochschild's transaction, where they still owe us $5 million in early 27, and a potential 10 million option payment due from Cerro Vanguardia for some land we sold them in Argentina that was non-core to us. Capital structure, very clean, 134 million shares outstanding, 152 million fully diluted. Management and directors own 11% of this company, so very much aligned with the street to get this in the right direction and see that value unfold as we've outlined. So just to quickly summarize, current production, steady state gold producer for at least the next 3 years, hopefully significantly longer than that at 55,000 ounces or higher. Using that cash to grow through exploration at MDN in Argentina, funding the development and future construction of Lagoa Salgada with minimal, if any, equity dilution depending on metal prices, and longer term offering that optionality from Mont Sorcier. What do we do with it? Do we build it? Do we sell it? Do we joint venture it? We'll see what the market has to bear in the future, and we think we're one of the few groups well funded to deliver. So with that, I'll wrap it up and open up to questions.
Thank you, Cliff. Very exciting there with Portugal, I think. Do we have any questions from the floor? Then just raise your hand. I will expose my ignorance. Multi-jurisdictional, I mean, we're talking Argentina, we're talking Canada, and we're talking Portugal. Is there such a thing as a common denominator, or how do you juggle this?
Going back in time, there were 3 different separate companies. We saw the opportunity due to the lack of capital that was available to junior base metal companies and junior, in the Canadian context, iron ore companies. A lot of people think that is a large company game, if you want to call it that. We saw opportunities to bring good projects into Sorado at reasonable prices, move them on given the cash we had. If Ascendant, the company that we acquired Lagoa Salgada from, had gone to market, they would have had to do 30-40% dilution just to raise $4 million. So this is more attractive for us, more attractive for their shareholders to see minimal dilution going forward.
And how did you find the assets if we look at, for instance, Portugal?
A lot of them were brought through industry connections. Myself, I'm a longtime sell-side analyst before joining the corporate world about 10 years ago. Mark Brennan, our chairman and CEO, they ran Desert Sun. They sold that to Yamana for $700 million. They acquired and developed Largo Resources from zero early stage exploration to a high of 2.5 billion market cap. That was a vanadium mine in Brazil. So the team itself has a lot of track record of discovery and development in multi-jurisdictions. And each, just so people may be concerned, we have too much going on, 3 different jurisdictions. Yes. Each one has its own technical team, specialized in that area. So we're not stretching the guys too much.
Okay. And do we have any questions here? Just raise your hand. But if my notes are correct here, Lagoa, that's in Portugal, and you had a free cash flow of 75 million a year when you were operating.
Yes, once that mine is in operation, based on the old study, it would be 75 million a year, at least for the first 5 years. It's doing the high grade. But the previous study also used $1,700 gold.
Yeah, okay.
So maybe we'll use 22, 25. Okay. In the new study, we'll see a significant increase, let alone the improvement of copper recovery, zinc recovery, and everything else.
And just remind us, when do you expect that to be on stream?
All being said and done, Q1 28.
Yeah, because it's now, more or less. But it's significant upside to the numbers that you presented here, given the spot price.
We believe so, not just for the spot price. I think if people understand how we're going to use the various cash flows to support the next leg of growth without having to go to the market for significant dilution on each phase. Maybe there's a 20% top up that's needed to finish Lagoa, and down the road something for Mont Sorcier, or we bring in a partner. But unlocking the value of both Lagoa and Mont Sorcier is going to see significant re-rating for Sorado as a corporate.
But if I get this right, you are a producer, and then you have interesting projects coming on stream in the near time future here. So you expect your cash balance and free cash flow to grow as production comes on stream.
Yes.
So what to do with that? Reinvest in projects or pay out as dividend, or
in the short term, as we're delivering these two projects, I would say most of that cash that's being generated is going to be reinvested. Once we're have Mont Sorcier up and running, and you're generating somewhere in the order of $500 million of EBITDA, it's either going to be starting to be returned to shareholders, or we'll be doing something significantly different.
Okay, so one should follow Cerro Gold and
I think
watch
so.
it. Thank you so much. Very invigorating. So a warm hand.
Thank you very much.
Thank you. And now it's time for our last speaker here, JJ Jennings, Communications Manager. And I will embarrass myself by trying to pronounce the name correctly. Guanajuato Silver. Did I get that fairly okay?
Not even close.
Not even close. Thank you.
No, you did very well.
And it's a precious metal producer that focuses on reactivating and operating past producing silver and gold mines, and primarily in the state of Guanajuato, Mexico. So please go ahead.
That's correct. So I'm going to just test this. Is this the forward button? Yeah. Okay. Guanajuato Silver. Hello. Yes, it's true. I'm the last speaker here today. Thank you for hanging around and hanging with me. I will make it worth your while. We produce silver, we produce gold, and we also produce these remarkable 1-ounce silver coins. The most attractive silver coins in circulation today. They've got a map of Mexico with the state where we operate, Guanajuato. They've got the alchemist ancient symbol on the back. I'm going to give 2 of these coins away to the people at the end of my presentation who applaud the loudest. How about that? I'm not doing it for me. I just want to do it for you. If you really want the silver, all you got to do at the end of this is clap really loud. Let's go. If you want to maybe have more than just an ounce or 2 of silver, Mexico is still the best place to go. It's the #1 producer of silver in the world. All of our projects are in Mexico. You can see we have 4 producing silver mines today. 3 of them are in Guanajuato, right smack dab in the middle of Mexico. We have 1 mine in Durango called Topia. Both of these states, Durango and Guanajuato, have very long and rich mining histories. That's Guanajuato, that's our hub. It's getting a little cool here in Stockholm. You might want something warm, a warm place to go. Come down to Guanajuato, beautiful colonial city, oozing with all kinds of great restaurants, amenities, museums. You can come down for a site visit. We mine those hills you see right there in the back. And in fact, can I do this? There we go. That's our infrastructure right there, in fact. Worth visiting. It's a university town. That building in the middle is the University of Guanajuato. It's the best mining school in the world. In Mexico, I should say. We have about 950 employees today. About 150 of them came from the University of Guanajuato. Mexico is also one of the few places you can find a primary silver mine. So as you're probably aware, most silver is mined as a byproduct. There's a really good example of that here, just really close to Stockholm. The Garpenberg mine is one of the biggest silver producers in the world, but it's really a zinc mine. And what this means for silver investors is that it makes the market inelastic. So the silver price can run as gloriously as it is this morning, and no one's going to put a zinc mine into production just to get the silver credits. It helps support the higher silver price. We are a precious metal producer. So the primary metal is silver and the secondary metal is gold. But it's essentially 50-50 silver and gold, a little bit of lead and zinc from our Topia mine in Durango. I am the last presenter here today. If you have sat in this room for any length of time, whatever metal they were talking about, they told you it's in deficit. The same is true for silver. What I can tell you for sure is that the silver miners today have been mining about 850 million ounces of silver. They've been doing that for about a decade now. It's in decline. There's nothing ahead of us coming online that's going to change that trajectory. All of it is going to lead to higher silver prices. Silver has the unique dual investment case. So you all the arguments they're making with gold, and again, we produce a lot of gold, all those arguments apply for silver. It's a hedge against currency debasement, a hedge against calamity. Lots of people stack silver. 2 of you at the end of my presentation are going to be stacking some silver. But the more interesting argument is the increasing industrial use or industrial demand for silver. And that's based on the fact that silver is the best conductor of electricity, and because of that, every modern switch, every modern electrical device, car, requires some silver. And as we build out this modern world, a world where I do not belong, it's going to require more and more silver. A big area for growth is the solar panel or photovoltaic industry. So when I was a kid, they had 2 big projections or predictions for the future. One would be that we would all be flying around in flying cars by now. That didn't happen. The other one would be that we would cover the world's deserts with solar panels, and that's how we would power the earth, and that is happening. This is the Badla Solar Park in India, one of the biggest in the world. This is the Tengar Solar Park in China, and when you look at these from 30,000 feet, what I want you to take from it is that they're all designed for future build-out. This is the Benban Solar Park in Egypt, one of the biggest in the world, but you could put 20 parks right beside that one. There's no limit to scalability. You just keep adding solar panels and move on. Every gigawatt requires about 500,000 ounces of silver. And they're thrifting all the time, but all of this puts greater and greater demand on silver. And the biggest park today, I think, is 5 megawatts gigawatts. Over the next 2-3 years, you're going to see 10 gigawatt parks. That's the future. All of it will be powered by silver. You don't have to take my word for it. Elon Musk says the same thing. We're going to cover the world's deserts with solar panels. That's how we'll power the planet. And in terms of ideas that human beings have had, this is probably one of the better ones. So I think everybody should have some exposure to silver. Why not have it through a growing silver producer like Guanajuato Silver? So I'm going to describe for you now the growth of this company, which has occurred all within the last 5 years. In 2020, we had the idea, we want to build a silver producing company. 2021, we bought our first mine, the El Cubo mine in central Mexico. It was a restart. We told everyone we're going to get this up and running very quickly, and we did. By the end of the year, we produced our first concentrate. So very important. 4 silver mines producing silver and gold. They're all underground mines, no open pit mines, and we produce concentrate at every single one of those mines. If you're not familiar with concentrate, that's what it looks like. It looks like dirt. It's very valuable, though. We put that in the back of a truck, drive it down to the Port of Manzanillo, where we sell it to our metals trader, Ocean Partners. Things are going so well in 2021, we bought 3 more mines in 2022. These were the former mining assets of a company called Great Panther. Same thing, 2 of the 3 were restarts. We got them permitted and operating again very quickly. San Ignacio, for example, we were operating within a week after buying the mine. So anyone that tells you that you can't get permits in Mexico doesn't know what they're talking about. We, for our business, underground mining, we haven't encountered any hurdles at all in terms of the permitting process. We go through probably about 45 permits a year. 2024 came close on making another acquisition, didn't happen. 2025, so here's where we are today, and literally, I mean today, we just closed, as of this morning, a $31 million US financing, so 300 million krona, and that financing is a genuine war chest. We're going to use it to make additional acquisitions. There's a lot of opportunity around us, and particularly in the Guanajuato area. There's no transaction we're going to announce tomorrow, but we're deep into due diligence on a number of assets. So you can look for that if you keep following us, and I hope you will. This is the annual production since inception. So the blue line is revenue. We did 75 million US in revenue. The average cost, or the average spot price last year was $28. I suspect revenue will increase this year. We did 3.3 million silver equivalent ounces last year. That may go down a little bit this year because we're being a bit more selective in the material that we move through our mills. Mine operating income has been positive for the past 5 quarters. I suspect this will continue as well. These mines are making money. I'm going to quickly go through each and the 4 producing mines. We have other projects as well, and I hope that you'll take a time to take a look into those. But this is El Cubo, our first mine. All of the geology in Guanajuato is the same. We're chasing narrow, high-grade epithermal veins. They may be a meter and a half wide. They're quartz veins. They bear silver and gold. The mine itself has been running for about 125 years, so these are very long-lived operations. Mining is very standard. We use cut and fill mining. We mine out a stope, we bring it to the surface, we crush, we grind. We use flotation, you see there in the foreground, and then we create the concentrate and drive that down to Manzanillo, where it's sold to our metals trader. So El Cubo is about 10 kilometers to the east of Guanajuato, that beautiful city that I showed you that you're going to come visit later this year. Right in the city is Valenciana. So the Valenciana Mines Complex, this is our mill. It is a little older. It's a little smaller than the one over at El Cubo, but excellent condition, 3 ball mills, all of them the same size. It's called Cata, and it's also where our head office is located. So you come down here, you'll visit with the geological team, the administration team. Everything's located here right in the city. And again, we are the #1 employer in the city of Guanajuato. When you come down, you will also visit our Valenciana Mines Museum. So this is a UNESCO World Heritage Site, and I always like to put up this image because people say, well, why do you own a museum? We own a museum because this mine's been running for 450 years. It has an incredibly rich history. At one time, it was providing about 2/3 of all the silver being produced on the planet, and it's still providing silver today. You go another 20 kilometers, straight line again to the west, you'll come to our San Ignacio mine. This mine is a mine without a mill, so there's no processing facility here. What we do is we mine, we bring it to surface, we do a little sorting on the surface, and then we'll drive it over to Cata, that mill I just showed you, for processing. The San Ignacio mine, in terms of geology, is a little different. It's a gold-silver mine, so the primary metal here is gold with some silver credits. Very high-grade mine, and I'm going to highlight, I think you can see them on the big screen. So I'm going to highlight some drill holes here just to give you a sense of who we are. So all of these mines, all 4 mines that we have today, have technical reports, and they give a mine life for each of these mines of about 5 to 6 years. But we regularly mine outside of those resource estimates. So this is a good example of that. You see these drill holes here, very good intercepts, 8 meters of almost 6 grams per ton gold. That's a very good intercept for Guanajuato Silver. Now, what an exploration company would do is they would drill on that and they try to build out a resource that they put on their books as an asset. That's not who we are. We find exciting veins like this. We try to quickly move them into the production schedule. That's the focus. We find veins, we mine veins. Those mines were all in Guanajuato. We're going to jump up 800 kilometers to the north into the northwestern Durango. This is Topia mine. Topia is a little different. It's a polymetallic mine. It's got lead and zinc credits, and because of that, it's very high grade. You don't have to be a geologist. You go down underground, you'll see the vein. It screams at you. It's a little more narrow, though. It's less than a meter on average. Topia is our most consistent mine. It accounts for about 1/3 plus of total production currently. And consistency is on the menu for Guanajuato Silver. So going forward, again, all the mines in Guanajuato were restarts. They're fixer-uppers. They've required a lot of infrastructure upgrades, all kinds of capital upgrades to get them to the point they are at this tail end of the ramp-up stage. The focus for the last few months, and certainly going forward for Guanajuato Silver, is on dollars, not ounces. And you can see an example of improving efficiencies here with these trucks. So we've just purchased these 9 trucks. They've been deployed down to Guanajuato. When you look at our mines from week to week or month to month, and there's any shortfalls or inconsistencies in production, it's usually because a vehicle has broken down or you have unavailability of the mine fleet. So a scoop tram goes down for a few hours, that impacts production. We're trying to get rid of all of this variability that exists in our mines. There's still a little bit of work to do, but we're getting close. And when we do that, we are going to be rewarded in the market. Why? How do I know that? Because we're the #1 volume trader on the entire TSX venture. We were #2 last year. There's lots of eyeballs on this stock, rooting for us, I would hope, and we're very close to crossing the threshold whereby all of these mines are fully profitable. Again, Q3 is just around the corner. Just a quick note on the team, and I guess I'll just mention one person because he's the best. James Anderson is our CEO and chairman. James is a capital market specialist. He's a deal maker. He likes making deals. All of the mines I just showed you, we got at the bottom, absolute bottom of this market, and we are continuing to look for markets today. So we've created this platform in Guanajuato, and we're going to use it for further expansion. And as I mentioned earlier, we've just closed the financing. That financing is a genuine war chest, $31 million. We are on the hunt for more assets, and when we do a transaction, you will see that they will bolt on nicely with the current assets that we hold today. So, on that note, I'm getting close to the end of my presentation. I don't know if you remember what I said at the beginning. I hope you did. I want to let you know that I'm a little hard of hearing. I want to also tell you that if you don't get a coin, I do have second prize, which is these pamphlets on Guanajuato Silver, which I think are going to prove to be far more valuable in the long run than these coins. We normally end this with a Q&A, and the gentleman here is doing an excellent job all day long, but we're going to skip that today because it's the last presentation, and I alone am going to ask the only question, and that is there anyone here at all who appreciated hearing the story of Guanajuato Silver? That's pretty good. That's pretty good. Thank you very much.
Well, thank you. That was
thank you.
Very enlightening. And this ends the 2 days. So we will just tell you a couple of final points here. We would like to thank everyone who has participated. We have had more than 1,000 one-on-one meetings, and over 1,000 people have been joining us online. That's what that figure has been about. So it has been a live broadcasting. We shared inspiring and forward-thinking discussions outside here. So we'll hope this will continue to spark new ideas long after today. Nordic Funds Nordic Funds and Minings, as you said, would like to give their extended thank you to all the companies that have traveled from far and above to Scandinavia, Stockholm. And also we would like to extend a great thank you to all the investors and the retail investors who are here on their free time, which is the difference between a professional investors, I should argue. Also a special thank you to all of you who has been looking online. We hope this have strengthened the collaboration and put the Scandinavian investment and innovations at the forefront. And we hope that these 2 days have given a positive impression of Sweden and Scandinavia and the global mining industry. And we will love to see you here next time. So housekeeping here, highlights and presentations will soon be available on the social channels for Nordic Funds and Minings, and on the website, I should say. Dates for next year's event will soon be announced, so check out the webpage. And also, we would love for you to reply to the questionnaire that soon will be sent out to anyone who has attended the conference. That will be very great for us to get some feedback to try to improve wherever we can. And finally, a warm thank you to the sponsors, Yukon Mining Alliance and Arctic Minerals. So we wish you a safe journey home, and we look forward to seeing you. And if you have any further questions, just go to info@nordicfunds.com. And with that, I would say thank you. It's been an absolute pleasure. And see you later. Bye.